Good morning and welcome to Traders Corner May Investors Summit. I'm Anthony Chapman, your host for today, and we're thrilled to have you with us for what's shaping up to be a power-packed day of market wisdom and strategy. With the recent US-China tariff agreement shaking up the global markets, volatility is back, and as traders, that means opportunity. Today, we've assembled 7 of the most experienced and strategic trading minds in the industry to help you navigate the current environment and capitalize on what's next. Whether you're managing funded accounts or looking to level up your trading approach, you're in the right place. Now, before we begin, a quick note. Each presenter will be sharing a special offer and resources unique to this summit, so be sure to check the chat box during and after each session to grab your exclusive access link. So let's dive in. Our first presenter is someone who's mastered the art of precision trade entries by leveraging real order flow data. Please welcome Rob Premkumar of Buyside Global with his session, Trade Entry, the New Order Block Hack. Today, Rob will show us how to leverage level 1 to 2 order flow data like a pro, what makes the new order block trade entry hack so powerful, and a recent breakdown of the success rate this setup has delivered. Make sure to check the chat box for Rob's special link and offer for the audience.
Thank you, Anthony. Thank you so much. Good morning, everyone. It's a beautiful Thursday. Before we get started, just want to make sure you can see my slide as well as you can hear my voice. If you can see my slide as well as hear my voice, please type yes in the questions section so that I just want to make sure it's all set to go. All right. Thank you. Today we're going to share one of the best trading entry strategy that we developed over the period of time. Now we perfected almost like a few months back. This is based on level 2, so I'm going to show you how we stumbled upon, how we researched it, how it works. We're going to see some examples. We're going to see some examples from the result, everything together. So let's get started. Before we get started, understand the risks involved in trading in general. This presentation is purely for educational purposes only. If you need to know much more about what is the risk involved in trading, what are the things you need to know, what are things you need to be cautious of, please go to buysaglobal.com/disclaimers to understand better. So trading is one of the most complex career, as well as a lot of traders are coming in because it's also a lucrative career. But the problem with trading is that it involves, you can't just have one particular skill set, one particular knowledge, and then try to unleash the power within trading. So you need to learn a lot of things, not only learn a lot of things, you got to master a lot of things together. Okay, that's why best way to represent is the key, because think about, just because if you want to open the door, you need to make sure all the levers are aligned, all the levers are intact. Even that one, or just because you have one skill, one lever it's not going to open it up. It has to open everything. That's why you need to know a couple of things. First, to start with, you need to know how to find the direction of the pricing, move, action, everything. And also you need to know, okay, the price is going up or down. I need to know how to enter that too, precisely exact price level and timing as well, right? So now you know direction, now you know the entry level. You need to master where can I keep my stop loss. This is where a lot of traders make mistakes. They can there are a lot of strategies and tools and everything for the entries and direction, but stop loss is something they make a mistake. I don't want to go through those things, but this is where a lot of people make mistakes. And also the target level. So how many times we enter the trade and then we have the good stop loss, good entry, we don't know when to exit. We were in very good profit, we are not closing yet, price reversed at the last minute and stop you out. So that's why even the target is one of the most important factor. And trade management, just because you enter the trade, you have stop loss and target levels, you can't just sit back and then watch either it's succeed or fail. It just can't wait like that. You need to manage your trade actively during this time. When it comes to the risk management, a lot of retail traders don't even know what is risk management. They think stop loss is the risk management. It's not. It's much more than that. That's why institutional traders focus more on averting reducing the loss, compared to retail traders focus on targets and profits. So completely different strategies. When it comes to trading, you can learn this. All the strategies and techniques and then executions and then all the information you need. But those things you can learn in a matter of months or a short period of time. There's one thing it takes really long time is emotional intelligence, because it's more like you cannot learn by without making mistakes. You're going to learn a lot of things going through the phase of failing and more learning why you failed, all the reasons behind the failure. That's why emotional intelligence. So like that, we have a lot of things to focus on. You need to not only know all these things, you need to practice those things and then excel on those each and every lever to unlock your potential in trading. So, but today I'm not going to talk about everything. I'm going to talk about one precisely a trade entry and also stop loss level. This presentation we're going to focus on how we perfected the trade entry using level 2 order flow, and then this, and also the same strategy we're going to leverage it for how to use a powerful stop losses. Okay, so the strategy that I'm going to share you is both, and not only just powerful, it's also simple. The reason I'm saying this is because a lot of strategies out there, a lot of trading, there's so many ways to trade, right? There's so many ways to trade, but when it comes to trading, some of the strategies are very simple. If the simple ones are not really effective, the powerful ones are not really simple. It's very complex, but the one we developed, I think, we something we're proud of in terms of, we call that as new order block hack. Um, you will see in terms of how powerful and simple both I'm going to show you today. Before I show you what it is and then how to find it, I want to give a little bit of story and then background behind it as well. The reason is that we need to know uh, what is the uh, reason why we focus on this much. That's way, once you understand it, you'll be able to appreciate it, leverage it very well. So to give a little background, um, I am a supply and demand trader for so many years. Not only me, we focused basic global as we focused on supply and demand for a long time, and also our customers. So in supply and demand, how does it work? We look for the top supply, supply in the sense if a particular price level where price is rejected more than once, at least twice, and then like we call that a supply. And then like on the lower side, any price level that bounces at least twice, we call that as demand. And then we look for one particular setup, that is breakout retest from either long side from supply, short side from demand. So this is the typical way. So if you look at this particular chart right here, you can really see the supply drawn in red and then the demand is drawn in green. This is a textbook setup, right? So you can see the price bounced one, two, three times almost. The fourth time, it really broke out. Not only broke out, it came back in, retested it, and then bounced back there. So this, by all textbook, this is a golden trade. So we should be taking. I did take in those trade, but what happened after enter the trade, after all the rules satisfied, we took the trade, it came back into the range, and then the trade failed, it got stopped out. So this is where in terms of we all got curious in terms of what's really happening. This is something is happening again and again. Some client demand is something like it works when it works, or sometimes it does not work at all. So we want to know what's behind it. So that's when we are trying to look at what should we focus more. That's when we turned our heads on towards the order flow, particularly the level 2 order flow, the market depth, where you can see the tape. So that's why like the big difference when it comes to the retail as well as the institutional trading is that institutional trading focus on the tape. So this is the screenshot from the series called in industry. You can literally see the pressure, the drama going around the trading desk of the hedge fund. They talk about tape a lot. They talk about tape every single important trading decision flows. But the reason is, what is really tape? Tape is nothing but the current order flow. The current order flow, what's happening in the market as we speak. There are two kinds, right? Level 1 data feed, level 2 data feed. Level 1 is something you can see in your chart, that shows you the historical pricing movement. But the tape is going to show you three things. The one on the right, it says T&S. T&S is time and sales. It's going to show you all the orders being whatever executed so far, what time, what is the price, and what quantity it got executed. Is it a buy or a sell, color coded, everything. This is the real time executions, order executions happening on the exchange. On the level 2 screen, you can really see what are the pending orders? Pending orders yet to execute, but is already in the exchange, waiting for the price to touch. And then the DOM, you can see all the pending orders are aligned by the price level. But if you look at here, the any numbers you can see above the current price. Current price is the yellow line. If you can see the 55 to 25, there are 62 contracts for asking at this price right now. That means all the ask, this all the bids. So one thing you can notice right away is that there are some price levels are very less. There are price levels are very, very large. That means these are the real time in terms of this is where a lot of traders willing to sell. At the same time, you can see on the lower side, particular price ranges, you will see there's a lot of buyers. If the price come back here, that a lot of traders want to enter long. This is want to go short. So this is the way we can see these numbers change really fast in real time. But this is where you can see the current order flow, how the market is shaping, what is the real time buying pressure or selling pressure, what's happening in the market currently. So, but if you, I know a lot of you are trading with the charts, a lot of indicators, doesn't really matter. All those are delayed indicators. When I say delayed, what I mean to say, it's based on whatever happened in the past. Price moved this way, price oversold, or it's all based on historically what happened in the past. But if you want to know what's going to happen next moment, you need to look at what's happening in the exchange right now. What kind of pressure is building? Is it selling pressure or buying pressure, or like any kind of particular level have a lot of strengths to enter? You need to look at all those things that only can visible in the level two quote. Okay, so but when it comes to the level two, I keep saying level two, but what is level two in general? If you level one is just historical charts, the one you see here right here. And also if you go to the DOM or level two, you can see on the DOM, you will see only the current best ask and best bid. That's it. You won't see anything above. This is level one. So it shows you only historical. And then level two quotes, it'll be blank. But if you upgrade your market data feed to level two, you'll start seeing the complete full picture of order flow in the market, what's happening right now, including the pending orders, pending limit orders at each price level. It's going to change very fast, but that's where the more information is hiding in plain sight. But what is it really? How does these orders form? Why it's pending at a particular level? Think about it. If you're entering the trade, you're going to have the stop losses, you're going to have the targets and the different level. Like you and me, there are so many traders trading at the same time. When they are all trading at the same time, everybody's targets and stop losses entries happening at the same time. All these are, you can see that these targets are limit orders, right? That means price, this won't get the right now. If this long trade, that means the price goes up. If price crosses this level, it will be sold. That means this is a limit order sent to exchange, waiting for the price to go up. So same way, we have two different one contract at 887, 8437, something like that. So this is what sent to exchange. Like when exchange got information, they will consolidate everything, all the information from all the traders around the world. They will give it to you as a level two feed. Believe it or not, we are living in a golden era in terms of think about the traders who traded a couple of decades ago. By looking at the papers, there is no real-time charting. That is all based on papers and then the end-of-day quotes and everything. Still, they did a great job. But we are in the fingertips of one view. We're able to see all the pending orders, all the order flows, every action happening in the exchange right in front of our eyes right there for you to analyze to make the decision. Okay, so this is why these level two and order flow is the place to look, the place to analyze, to know what's happening in the current market. So, but the one question is, if level two order flow is answered, is it possible to know that is there any way we can find out large number of buyers coming in compared to the sellers? Why? Trading is in simple ways, it's like what do you say, you're trying to find a trade entry before others are entering. So that means let's say you are going to enter long trade. If you enter long trade, after you are praying that there will be more buyers, more traders entering long trade, because more and more people buy, the price is going to go up after you enter the trade. Let's say you after you enter the trade, there are more sellers coming in, the price is going to go down. So more buyers, price moves up, more sellers, price goes down, right? So this is what we're looking for. But is it possible to know as soon as large series of continuous buy orders starts coming in, creating the tilt over the buying pressure compared to selling pressure? Can we see those things in the exchange? So why the large order blocks will create the pricing pressure either up or down. So if we know the pricing pressure, the order block starts coming in looking at the level 2, then we can enter the trade in the same direction of the pressure, and then the same direction, same time, everything. Then when the market is moving as more buyers coming in, you are trading in the same kind of direction. You will stay in the trade as long as the pressure continues. Moment it starts slowing down or changing the direction, you can exit. So that's a whole area of why we need to look at the other blocks. Okay, so keeping that as a goal, we started researching on level 2, and then we started our own analysis in terms of, okay, research. Let's get all the enough information about the level 2, the historical data. Let's do the back testing. Let's do the research. That's when we dig deep in a year back on level 2. This is not something new. This is me. I go by Rob, but my full name is Premkumar. But the reason is that analyzing the data, market data, is not something new. I worked with almost like largest in investment banking for almost 20 years. I did investment analytics for investment banking. So researching and then analyzing data, that to financial market data, is not something new. But now I'm doing it for me rather than for the investment bank. That's when we started. So coming back to the strategy, so my goal was to use the level 2 data, leverage the information, but the goal is to find the best possible places to enter based on information of buying and selling pressure, everything based on level 2. So first of all, to start with, we wanted to see visual representation of level 2 data in a time series. The reason is that if you go to DOM or a level 2, it shows you what is happening right now, right? It's a present snapshot of information, what you see. It will not show you what happened like a minute ago or 10 minutes ago or 1 hour ago. It does not show you. So that's why we created the indicator called liquidity zones. So we don't there's a lot of market depth indicators, right? So we can talk about the book map, we can talk about a lot of market depth indicators. What will they do? They will take all the numbers and they try to plot, color code it, grade it, everything. But that doesn't help at all. Trust me, I've done enough research. It doesn't help. What we wanted to know, what are the levels that really have the pressure of, like, when I say that, anytime the price goes to a particular level, price starts buyers start stepping in. So I want to know those levels. Is there any price level that the buyers starts stepping in to put the pressure on, or is there any level the sellers will put the pressure on to bring the price down? So those are the levels we call it as strongest liquidity zones. Liquidity zones. So the on the screen right here, this indicator is going to help you to color code it. Anytime you can see the red lines, the purple and red lines indicate the strongest asks, and then anytime they see the green, that is that indicates strongest the bids. So with that information, so now we know, we plotted everything. So now we need to know how it behaves. What is the pattern behind it? What are information hidden on the plain side that we can leverage in trading? That's where. Now let's go back to what we discussed, the supply and demand strategy that we talked about before. Same thing now, same breakout and retest. Here it failed. At the time I didn't know why, but now if I try to plot it in the level 2 information, the liquidity zones, I can really see why the prices bounced 1, 2, 3 times again, and then fourth time tried to go much further, still it could not go through because there is a huge wall of sellers waiting for the price level. That means anytime the price goes there, the sellers, the limit orders gets kicked in, the price is getting pushed down. But you can see it tried to push it all the way, it could not bend it, it starts coming down. This is the hidden information that we could not see before. Now we're able to see it. Same way, you can see the green line below why the prices were bouncing. So literally you can see the amount of selling pressure is more than the buying pressure in the chart. What happens? Eventually sellers was able to take out the control, prices pushes down. This is a real information that you can see from level 2, but you cannot see just based on price action. That is our first discovery, first aha moment for us. From there, okay, so we wanted to find more answers. That means the question we asked was, if we are able to find the reasons for the false breakouts, the price barriers, or like in terms of before the pricing pressure or everything, then if you want to find better answers, you need to ask better questions. That's when our question next we asked was, is it possible to find that every possible trade entry opportunity and immediately, both big and small? If you are the level 2, is there any way we can look at the trade opportunity in level 2 before it happens, or immediately it happens? Not before, it's impossible to see before, but we want to see immediately as the pressure swaps, pressure reverses, pressure builds up, something like that. Okay, after long research, we found particular pattern where we call that as new order block setup. This is a particular way the order box comes in, and also you can literally see the price action. Okay, so let's look at it. How does you can see this line indicates, let's say this is a price movement happening in the market right now. Like I showed you before, the liquidity zone will show you all the strongest liquidity, best, strongest block of order blocks for ask, strongest order for bids, everything. But one thing we noticed is that there are some blocks. Okay, look at this one. Let's look at this one. It started here. It's the order came in, waiting there, started here. But anytime the order blocks started right on the price. So the difference is this one started printing this green line right from touching the bar, touching the price. This one, yes, but these ones do not. That means anytime the price bounce, at the same time new huge order blocks comes to the level 2 and stays there, that is the sign of real in terms of the pressure is reversing, pressure is swapping, pressure is like from selling pressure to turning to buying pressure, or if already there are buying pressure, it will add more. I'll show you some examples, but in bottom line is we have only two rules. The liquidity zone should start, when we say these are liquidity zones, these green and red lines should start printing from the bar, touching the bar. And the second rule is price should rise. Let's say if the green liquidity zone starting from the bar, the price should rise. Anytime you see the grid, it should go. Let me show you actually in the real-time charts, so how it look like, so that you know how to relate it. I'm going to show you some charts. I'm going to show you some charts in real-time as well. Okay, so you can see this is a price movement. You can see this particular the liquidity zone. Where is this line started? Right touching the bar, right here. Okay, next one. You can see the red for the short is where it started touching this bar. That is the key. If the starting point of the zone is not touching the bar or not very close, we're gonna that's not really the entry opportunity. That is like just like another like support or resistance block. So entry opportunity is different from the support or resistance block. So here, another example of price came down, new order blocks started right here, and price started going up. Again, prices start going up, new order block comes in. You can see price reverse down. These are all the good signs of, again, same thing. Let's also look at the what is not a new entry strategies. So let's say some examples. You can see three liquidity zones, 1, 2, and 3. This one started here. There's no prior bar is here. Bar is after. That means this is like support. This is like support or resistance. So this liquidity zone starting point is here. It's not touching the price. Starting point here is not touching the price. Again, this liquidity zone starting point is here. It's nowhere near the price. It's not touching any bar. Okay, again, this one you can see the starting point is here. It's not touching the bar. So these are all not entry opportunities. These are, look at these ones. When the price goes up, these are all like resistances, breaking through the resistances. All these starting points are much away from the current price. Okay, this is here, price is going up, there is a new one starting, but this is not really touching the bar, it came a little bit late. So even we're going to ignore those things as well. So our relationship so far, I'm going to show some charts in there. So this is how the chart will look like if you attach the indicator. Basically, but make sure that understand this part. This indicator won't work if you don't have the level 2 data feed. You need to upgrade the data feed to start feeding the level 2 data, whatever the instrument you're trading in. So if you look at here, okay, look at this one. Starting point is here, it's not touching the price. Starting point is here, starting point is here, starting point is here, starting point here. Price goes up, coming down. Look at the first sign, its starting point is here. This is the entry opportunity. Coming down, look at the price touching and starting. This is your short trade opportunity. Okay, and then coming back down, this is liquidity zone, started somewhere. No, this is a liquidity zone, started here. No, okay, but these are all not. But when you go up, you can see one more, and then this is another one, this is another one. Anytime it's even here, right here. So I want you to notice everyone where it starts. That's what we're looking for. Examples like this, examples like this, examples like why this is also a new order block. Anytime the price crosses it, crosses means it'll be ending like this. It'll be ending. Moment it ends, rejected immediately, it rebuilds the liquidity. Moment it rebuilds liquidity, this is also a new order block. So we call that as liquidity sweep and rebuilding as well. This is also a good order block. This is why, in terms of, you need to know what are the good order blocks you can use it as well. So these are good examples. All these compared to others, look at these. These are all starting somewhere, but the ones starting on the bar, that's what we call it as precise radiant opportunities. So let's look at some more examples. Here you can see in this chart there are a lot of bars, but everything started like a different place. What are the things it started there? In terms of, look at here, this particular bar started right here. Okay, so this is the trade opportunity we're talking about. Look at this particular opportunity where the started printing right there. This is the entry. And okay, so this is a good question to ask about. Why did we exit here, not anywhere? Why didn't we exit here? Why did we exit here? Why we exited here? As simple as that. In a layman terms, if you're a trader, you will know, if this is the trade entry for long, we enter the long trade. What is this? It is touching the bar and red line. That means it's the trade entry opportunity for the short. So if you're already in a long trade, if you see the signal for the short trade, you have to exit your long trade. So that means the reversal of the pressure. From buying pressure turned into selling pressure, you're going to exit. That's why we exit here, because we saw the green line started printing here, long opportunity. See this one, still long opportunity. Moment we saw the new order blocks coming in, touching here, that means now it's a selling pressure. We exit that particular place. Okay, again, you can see right here and right here, two places we got a very good opportunity. And then when the price, okay, one thing I want you to notice is that this system is not going to only help you to find the best entry, it's also going to help you stop loss first. Because stop loss, don't put your stop loss right on the green line. Why? Sometimes the price come back down, take the liquidity, and then go up. That's we call that the liquidity sweep. That means you need to keep your stops a little bit far away, somewhere here, couple of few ticks down. Let me show you some examples. So if you can see, look at here, it's a trade opportunity. Look at what happened right here. Liquidity, perfect liquidity sweep. Came back down, took the liquidity, and then go up. This is why we don't put a stop right there. We expect, we anticipate there's liquidity, there will be a sweep. That means keep a stop here, then you'll be safe in those things. But from here, why we're able to exit this long, not anywhere? Why? I want you to check this whole area. From here to till here, you see first opportunity, second opportunity, third opportunity, fourth opportunity, sixth, seventh. But during all this time, the red lines are ending. It never started. It never started. Look at this. It's all ending. Started somewhere, ending here. Started somewhere, ending here. Started somewhere, ending here. Ending here. First time, do you see this? First time it started here. That means now at this point the selling pressure starts coming in. Moment we start selling pressure coming in from the long trade, we're able to find, okay, now it's time to end your trade. This is how you can catch the perfect entry, great place to place your stops and stay the trade longer until the reverses. This is the only best way you can trade for holding the trade longer and longer until the trade reverses. There is no other better way to stay in the trend longer than this system. Look at this. The price fluctuated like crazy. Even look at this, how much crazy it fluctuated. A lot of traders would have panicked and exited right here itself. They would not stay here. But if you're using this system, you can stay longer. Okay, let me show you some more examples as well, because I think I'm already running out of time soon. So I've got to rush it through. All right, so again, we exited the trade, we took the shot, we exited right here. So why we exited right here? 3 o'clock, this is all central time based, market closed at 3 o'clock for me in Chicago time. And then let's look at one more chart here, same thing, all these lines are ending where it's starting, touching and starting right here. So we're looking for the opportunity, be patient, and you will see moment we saw touching and starting the green line, we entered the long. Why did we exit? The selling pressure coming in, touching and starting red line. This is as simple as that, right? So, but I'm not saying you're going to make money right away from day one. No, it needs to go through practice and training, and then like be patient, be understand the wait till what kind of conversion you want. You'll be practicing those things, but it is worth learning, because this system works for anybody who is struggling to find the better entry, better stop losses, as better exit. So you can see another opportunity starting here, ending here. Why? There's a short trade, and then you took the short trade from here. We exited here because we saw the from selling pressure, selling entry one, selling entry two there, but buying pressure starts coming in. So then we took the long trade. You can see it's like a ping pong. We can see that as happening like a ping pong of like buying pressure to selling pressure to buying. It's like go back and forth. On a choppy session like this, you can really see in terms of the top edges is going to have the opportunity to go short. The bottom edges is going to give you the opportunity to go long. But after long consolidations, I want you to notice right here where it's a supply and demand broke out and retested. Look at where the new stop opportunity for the short trade, precisely after the consolidations. This is supply and demand textbook, but level 2 is going to give you much better way to enter. So again, one more opportunity before market closes where the price starting from here. Let's look at some more. Okay, so even this is like a choppy day. You can literally see market going sideways, but even on those things, you'll be able to see the precise way anytime the price, the order block starts from the bar. Here's again long opportunity. We entered the long trade. Moment we saw bottom of the range, the new order box comes in, touching the bar. We took a long trade, and then like a moment we exited the trade first time from here to here. First time the selling pressure is coming in. This is easier to execute if you practice well, if you watch the charts. There is no alerts, there is no signal something, but you have to watch a chart. Continuously watch a chart, look for the zones, look for the price action, and then you'll be able to find those. Look at this particular, from here to here. I want you to look at from here to all the way here. When you got the short signal, watch the bars. There is no new buying pressure. All the buying pressure is ending like I said. There is no green line starting. There is no green line starting. There is no green line starting. Whole time from here, more and more selling opportunity, sell opportunity, sell opportunity, sell opportunity. That means selling pressures keep on building. There is no buying pressure. What happens? You can stay in the trade longer. So this is why this system is something you can find even on a choppy day, not only on the trending day. This is from the May 2nd. Same thing, short opportunity, and then like what is the sell side, the range, okay? And the moment we saw on the bottom of the range, you can see right here, you see this touching, you get a sweep, touching and starting. We took the long trade. And then same thing, after range, you can see touching and starting the sell. So you can see this kind of opportunities every single day, no matter what kind of market conditions or structures happening. Okay, it's so beautiful to trade on a trending day. I'm telling you, because on a trending day, you will literally able to see the buying pressure it builds up, able to find, but still try to learn those supply and demand rules. That helps a lot in terms of, oh, it's in the range. So what is the bottom of the range? In the bottom of the range, I'm able to see level 2. So those things as well. So I want to show a little bit more examples. I want to go to current this week. so that you know in terms of what happened this week as well. This is from last week. You can see market was ranging. Given the ranging, I want to look at the opportunities, long trade, okay, and then moment we saw selling pressure, we are able to exit. Again, same thing from here, short trade, and then we can see the same kind of, by using the order blocks not only for the entry, we also use it to find the stop loss levels. We also use it for the exit as well. So that is the most important part. Okay, and then let's go a little bit faster because I'm running out of time. So this is this week from May 12th. So this week you can see market was ranging, but during the top of the range, we got the sell opportunity, and then we exited when the buying pressure starts coming in. And then we took the trade, we stayed in the trade until we see a selling pressure. And then we saw the buying pressures coming in bottom of the range, and then whole period of time, buying pressures keep on building. Moment we saw selling pressure comes in, we exited. So this is this week. So this is May 13th, I think Tuesday. Same thing in terms of moment we saw buying pressure starts coming in, we stayed in the trade until we saw selling pressure coming back. This is a repetitive process. This is one thing you can practice again and again. You will start seeing same patterns repeated. And pick one instrument and then like one strategy that you can practice again and again, so that you can get better and better over the days. This is yesterday. This is from yesterday. You can see when the market opened, you can see the liquidity sweep and then the new order block right here. From here, there are no buying pressure until here. Look at this. Buying pressure is, look at rejections and then buying pressure. This is where you exit here, right? And then you can see again, we took the, since it's ended that trade, we saw still the buying pressure building up. We took the trade again. It's, you can see as simple as that. This one is based on this particular order entry, order block entry. Okay, so this is not like it doesn't matter what we say in terms of based on our trading. I think we have to hear from our customers' feedback or traders' feedback in terms of how it helped them, how long it helped them to practice, how far is able to get used as well. So for us, this is the strategy that you should have. It's a must have for you to, it's not just liquidity zones. I'm stressing more on level 2. Doesn't matter whether you use our product or anybody's product, but use level 2, use order flow, use like current information rather than historical information. That is the key takeaway that I want you to focus on. I covered only one strategy, which is a new order block hack. But when you buy the liquidity zones trading strategy, you're gonna we'll be teaching in the videos of 7 strategies. One is a breakout and liquidity swap, breakout and retest, liquidity level setup, and trend pullback, trend liquidity sweep setup. And also we're going to teach you in terms of, even on choppy session, how we can leverage liquidity sweeps from edge to edge to scalp it. And then see, this is something we very proud of in terms of we're able to find the market maker stop hunts and manipulations happening in the market every single day, and you're able to detect, not only detect, you're going to leverage it in your trading as well. And then multi instruments, this is big. The reason is that NQ, ES, MES, MNQ, even YM, everything very close correlation of the price action. You can literally see, go to your any of your charts, compare the price actions. Anytime the price bounces on ES, it'll bounce on MES, it'll gonna bounce on NQ, it's gonna bounce on MNQ. We're gonna talk about how these things work, how the confluences work, how we can take the signal from one instrument to other instrument, how we can link all together, make a better confluence setups. You're going to learn. Everything is based on level 2 and liquidity zones. And this is the 7th strategy we introduced, the one you learned today, which is order block. Okay. My bottom line is the best way to trade is with level 2. You have to leverage level 2 data, the order flow data. Stop relying on the historical just price action. That is that does not, that does help you. I'm not saying, because I traded with just supply and demand for years. Like, it's not, I cannot say anything bad, because it helped me in a lot of ways for so many years. But now with level 2, it's even better. It's like I can see much more clarity, much more reason why it's happening. When something is happening, In supply and demand, I will react to it. I don't know what's happening, but in level 2, I expect some levels to have a reaction, have a push based on level 2. I can a little bit anticipate now. That's the power I got from the level 2 water flow. And then you get clarity with the liquidity zones indicator. So this is the product. Bicep Global's our product. Trade high probability trade setups with high confidence with liquidity zones. But remember that you need level 2 market data. So with this today, we're gonna have the offer right now. If you go to the website right now, if you buy liquidity zones, it will be total price of 695, just indicator. But we believe in something in terms of knowledge. Just because you have the best indicator, or it doesn't mean it will help you, but you need to know how to use it. So it's something like you can buy the most expensive car or luxurious car, but if you don't know how to drive, what is the use? Learn the power of like how to use any complex instrument. So that means the trading course of level 2 that we developed, the 7 strategies I just told you, is very important, because sometimes traders buy the course, they don't get the good tools, but sometimes they buy the best tools, they don't know how to use it. But here we want to focus both best quality training videos as well as the best tool to leverage together. So now we have the best training course, you have the best tool, but after going through the course, you might have, oh, how does it work? Can I see how you trade? Do you have any recordings? Can I see your trades? Can I see how you view the market? All the things you have come. That's why we have a lot of trade examples, a lot of live recordings, a lot of reviews, everything. We're gonna have access to it. So you'll see not only how to read it in the indicator wise, learn the strategy from the course, and also how we use it in real time by recorded a lot of trades and a lot of things. You will have access to everything. Okay, so now even though go through, sometimes you have questions. You wanted to talk to other traders. How are they trading right now? I see a setup right now. Should I take a long or a short? Am I missing something? Let's take a screenshot and ask the other trader who is trading right now. So we have a Discord community where you can come in and then can talk about, ask any questions, whether I can reply or other people can reply. The community of connecting the other traders on the same idea, same strategy, same instrument, it matters a lot. You can trade together as long as you are being active in the community. So that's why not just indicator, you need a better course, you need better examples, you need a better reviews, and also better community to work together, trade to learn together. So all this together is 1740 is total value. Okay, but we're going to offer it for 695 today. You got to go to biceglobal.com/offer, use the discount code level 2. You can pull out your phone and take a screenshot, but I want to make it even better. For the first 20 customers who is buying today, they're going to get the free access, 90-day access to order flow zones indicator. What is zones indicator? This is our another order flow based momentum, best momentum and price action. Why? Because a lot of times traders get frustrated or like pressured by the price action. Oh, it's price going up, coming down, I should exit. They don't know how to stay longer. They don't know how to read the price action. They don't know what is the momentum. So this indicator is going to help you to hide the volatility and then like color code it clearly. This is going to hide the pullbacks, hide the volatility, clearly show you which side is a momentum, and then it's going to show you with the markers as well when the reversal of momentum happens. So this is one of this indicator is there for with us for almost like this is our third popular indicator. It's been there for almost like popular since almost like last 5 years. That's why we are giving away the one of the best third best indicator, the product we have for almost like 5 to 6 years now, free 90-day access only for those who buy today only for the first 20 customers. That means now with that additional bonus offer, you're going to get almost like a value of $2,000 full bundle. You're going to get it for like $695. So please pull out your phone and then like take a screenshot so that you know the link that we're talking about, where you can get access to all the tools, everything as one bundle. Because if you don't have the link, or if you don't have the discount code, you won't be able to leverage the information completely. So take a screenshot. Link is biceglobal.com/offer. Discount code is level 2. If you have any questions, email us at right here at the bottom, info@basicglobal.com. During business hours, you can call us at 435-659-8581. And thank you so much. Do you have any questions? If you have any questions, let me know. I got like what, 20 seconds or 10 seconds before I wrap up my presentation. I really appreciate your patience staying with me. Hope this helps. So it doesn't matter whether you use our product or not, please leverage level 2 order flow. That's the takeaway that I wanted to stress here. Thank you so much, guys. Thank you, Anthony. Thank you for the opportunity. Thank you so much.
Thank you, Rob. That was an excellent session, practical, timely, and packed with insights. And thank you for the generous offer you made available in the chat for our attendees. Thank you so much, Rob.
Thank you.
Next up, please welcome someone who's built her entire brand on simplifying trading and make it accessible for at all levels. Marina, the trader chick Villatoro, is here to present Become a Profitable Trader, Get Back to the Basics of Day Trading. In this session, Marina will help you reset, refocus, and strip away the noise so you can become a more confident and consistent trader. Whether you're just starting out or returning after a tough stretch, don't forget to check the chat for Marina's special offer link. Marina?
Hi.
I need to make you a presenter.
Yes.
I'm sorry.
That's okay.
All right, you should be presenter now.
Okay, you should see my.
Yes.
Can you see everything and hear me? Hello?
Yeah. Yes, I can.
Okay.
Can the audience as well?
Can you give me the question box? I don't see the question box here.
I'm searching for it too. I don't know what happened to it. It like disappeared on me. So usually that means that there are no new questions. So, okay, I don't see anything. We're good.
Okay. Hi,
Yeah.
everybody. Thanks so much for being here. Okay. Hi. My computer was not charged. I just realized that it was almost about to die. But now it's all good, and I am happy to be here. Thanks, everybody, for joining us today on a beautiful, beautiful spring day. I don't know where you guys are coming from, but I live in Barcelona, and the weather is just getting better and better and better. It's so pretty here. Okay, so today I am going to be chatting with you guys about some really important things for trading. But first, this is me. I am Marina, the Trader Chick, and this is what I'll be covering today. We're going to talk about trading versus investing, the different myths that there are out there, lingo. And like I mentioned earlier, I am Marina. I live in Barcelona. My family and I have been expats now for over 20 years. Before we moved to Barcelona, we were living in Central America. And beforehand, I used to be a fitness instructor. And the main reason I bring this up is because a lot of people have this misconception that you need to be a math whiz or economics or software engineer or any kind or finance person, but to become a day trader, but you don't. What you really need to do is simply enjoy the idea of trading the financial markets, and you could come from anywhere to become a day trader. That is the beauty of it all. And the cool thing about it is that you could do it from anywhere. That was actually a very important thing for me to become a day trader, is that me and my family, we travel at least 3 to 4 months out of every year. So I'm not a trust fund baby. I do need to work. So being able to do it from anywhere in the world is such a massive perk for us. All right, guys, before I jump in to the presentation, I have this entire thing in a worksheet for you completely for free. You could go here, makingofadaytrader.com. You could go there. You could download it for free and follow along as we go along. All right, so let's talk about trading. What is day trading and why is it not investing? So the most important thing of all actually is the fact that with investing, you normally have a pretty diversified, pretty robust portfolio, right? However, when you day trade, You don't want to do that. You do not want to diversify. As a matter of fact, the more specialized you are, the better. It's kind of like if your child comes up to you and says, hey, I want to learn how to play a musical instrument. And you said, great, what do you want to play? And they'll come back to you and they say, well, I want to play the piano, I want to play the guitar, and I want to play the drums, and I want to play the violin. And you look at them and you're like, you can't play all 4 of these instruments at once. You need to start with just the one. Why? Because every one of them is really different, correct? Every instrument is different. And in the financial markets, we actually also call them instruments. All those different instruments in the finance world. So you also don't want to be trading all the different kinds of instruments because they all have very different movements and strategies. The other thing is, excuse me, is that investors care about the companies that they are investing in, right? For instance, if you're going to invest in Apple, let's say, if you're going to invest in Apple, you're okay sitting through the ups and downs because you know that the iPhone 17 or iPhone 18 or whatever number we're on at the moment is going to come out, and it usually has a lot of revolutionary things that are going on that will bring that stock back up. However, day traders, we don't care if the market is going up or down, right? Because all we are looking at is what's happening in the moment, in the day. So we don't care if the iPhone 18 is coming out in 3 months. We need to know what's going on today. And that's really what day trading is more focused on. So let's talk about myths of day trading. Actually, when we could bust the myths, I've noticed that a lot of times when we get past misconceptions, the myths, we get past our own limiting beliefs. All right. So what does that mean? It means that when you bust through the limiting beliefs, you're able to start to do better. So let's go through some of these myths because I know that a lot of them really hold us back. The first and foremost is that day trading is gambling. Well, if you want to become a pilot, are you gonna simply hop in a plane and take off? No, you understand that you need to go through pilot school, you need to do simulation hours, you need to put in the time, right? So a lot of times people just because they have some money, they realize they just want to jump into the market. There's absolutely zero barrier to entry. So when there's zero barrier to entry and somebody has, let's say, $1,000 and they jump into the market and then they lose, what do you think they're going to say? Oh, it's so risky, but they have no idea what they're doing. So I don't call it, lack of understanding. I literally just call it donating money to the market. Okay, and that is so important to understand that you are gambling when you do not have a strategy, when you do not understand what you are doing. So remember, when you want to learn how to day trade, think of the pilot. They have to go through hours of simulation and understanding what is going on. The same with day trading. You really do need to put in the time to understand before you simply just give your money over to the market. The other misconception is that you need $25,000 to get started. Yeah, this was before the internet. This was a long time ago when brokers were able to manipulate you and tell you that they're going to give you margin accounts, and those usually started off when you had $25,000 and more. Today, anybody could start with any amount of money. I mean, literally $500 and you could hit the ground running. As long as you know what you're doing, you could actually earn money. So just because you have $10,000 does not mean you're going to make more money than the person that's coming in with $500 who does have a strategy. Very important to remember that as well. And as I mentioned earlier, you do not need to be a math whiz or have any sort of financial background. As a matter of fact, I never ever use any math in my trading whatsoever. I don't understand. I don't really even know how to use it properly because it's not necessary. That is not what day trading is about. It's about understanding the charts. It's about understanding technical analysis. Nothing to do with the actual math components. All right. And the other thing is that it's stressful and chaotic. Well, if you're sitting in front of this kind of a setup, what do you think? This is gonna make anybody go completely crazy. This is so unsustainable. This is unsustainable, guys. You cannot have this kind of a setup. The human brain is not equipped to do this, okay? And even with AI and all this stuff that's going on, you know, there's a massive misconception today with AI that they think that they're just gonna do it, but AI just tells you how to do it faster, but you still have to go ahead and execute. And let me tell you, having all this does not help execution. As a matter of fact, it will completely put you into analysis paralysis. The other thing is, and this is a huge misconception, and almost kind of like that shiny object syndrome, which by the way is a real thing. I don't know if you guys have ever heard of it. It's chasing that next shiny object syndrome. And that's what a lot of people do when they are selling you software or indicators and algorithms. The only thing that you really need to buy is a charting platform for your day trading, and usually one that is attached to your broker so that you could do it via interface. Okay, so important. And usually those charting softwares, they have all the universal indicators that you possibly could need and even free algorithm setups. So you do not need to buy anything extra. And news, research and news. I'm sure you guys have heard this saying before, buy on the rumor, sell on the news, correct? Well, there's a reason for it, because there is so much melodrama and just, I call it, you know, the soap operas, because a lot of these people that are in the news telling us what is going on, they all have their own agendas, right? And they're usually pushing those agendas, and they have a big platform of people that are listening to them that they are able to push these agendas. You guys have to stay away from all this market research and all this stuff and get back to the basics. And what are the basics? Technical analysis. This is so, so important. Okay, technical analysis is so important. And when you understand technical analysis, I can guarantee you everything will fall right into place. And I will talk about that in just a little bit. All right, guys, have you heard of trigger happy? It's an actual thing. So there's this misconception that traders need to be in and out of trades all the time. Completely untrue. All right, believe it or not, this was how I used to trade when I first began. I used to go in like 40, 50 times within a 2 or 3 hour trading session. And even if I was winning, whatever that meant, I was losing big time in commissions alone. What I did learn is that the pro traders, they are like big game hunters. They sit and they wait for the big game. They sit and they wait for the most strategic, profitable, highly probable trades to take. And this is not something you should do. As a matter of fact, I have this whole challenge with my students. When they are ready to go live, I tell them before they do, they need to do 1 month of 1 trade per day. And it's incredible the amount of bad trades they filter out. Oops. All right, guys. So remember, the most radical way to trade is conservatively, because when you're making small profits on a daily basis, that brings you those big profits yearly, because the aggressive traders, they are not good. Okay, they tell you they're aggressive moves, but they don't tell you they're aggressive losses. So we're only hearing part of the story. The other massive, massive misconception, I call it FOMAT. I actually coined this term, fear of missing a trade. I'm sure you guys have heard of FOMO, fear of missing out. So I call this fear of missing a trade. Look, guys, there is always a trade coming. And when you start to chase those trades, that's when you start to lose money. Okay, why? Because the second you start to chase the trades, that's when the emotional baggage starts to really come in. And then you are riding an emotional wave and not a logical, valid trade wave. Now, the other thing is, what do we trade? Okay, So as I mentioned earlier, there are financial instruments. A lot of times new traders, like amateur novice traders, when they want to start to trade, they have this misconception that you need to trade. The more you trade, the more you can make. And then they want to jump into all the different markets at once. And on the contrary, like what I mentioned earlier, the more you focus, meaning pick the one market or even one sector, the better chances are you'll be making a lot of money. So let's just go over what there is to trade. Forex, we've all heard of Forex, right? It's foreign exchange. It's when you are trading pairs of currencies, right? For instance, the most popular one obviously is US versus the euro, or euro versus the US, however you want to look at it. But there's also the yen versus the Australian dollar, and so on and so forth. So if you're going to be doing too many pairs, somebody's going to start losing big time. Again, even within the Forex market, you want to maybe pick one or two pairs at most. Equities, right? This is so important. Equities. So it's sectors. There are sectors, there are big caps, small caps, and there are just individual stocks. Because when somebody tells me, oh, I trade stocks or I trade equities, well, there's like 5,000 alone on the US market. You need to really hone in. And when you meet professional traders, they'll be like, well, I only trade Tesla, or I only trade Apple or Nvidia. Or they say, I trade sectors, technology, entertainment, pharmaceuticals, because then you understand and you start to have a strategy, and it's all about the strategy. The other thing is people are like, oh, I trade futures. So I'm like, so you trade crude, wheat, the E-minis, which is the S&P 500 on the futures? No, you can't. It's impossible. You cannot be in 3 different vehicles driving on 3 different roads at the same time. It's not possible. So please, guys, really, really hone in, focus on the one thing. The same thing with options, okay? If you're gonna go for options, just stick to options. And crypto, you gotta love people saying, oh, I'm trading crypto. And what does that mean? Bitcoin. Oh, well, Bitcoin is 1 out of 6,000 altcoins and projects. Again, focus on the one or 2, maybe even 3 projects at most. But again, really zone in, niche it down, guys. It's a really important thing, okay? Now, I want to talk about brokers, because a lot of people have this idea that the broker works for you. They do not. They are an obvious evil that we have to work with, because there is no other way. They're the intermediary, and today, gratefully, we could do all of stuff online. So we could be self or auto working with the broker. We don't need to actually have a human to help us. But brokers are there to take your money and to make commissions. They do not care if you know what the market is doing or not. On the contrary, they prefer you not knowing, because then they get more money. The one thing that I am going to tell you about brokers right now, a lot of brokers will tell you that they will offer you a margin account, and they will actually even coin it under a perk or a benefit. It's not. A margin account is when the broker is lending you money. So let's say you have $10,000 and you want to buy all these types of stocks, and then the broker saying, oh, we could give you 10,000 that we could give you 10,000 more on margin. So you think it's a great thing, and you put in that other 10,000. Now they don't care if you win or lose, but what they do care is time for you to pay it back, and with interest. No margin accounts. It is not mandatory. It's not obligatory. Please, guys, don't have margin accounts. The other really important thing to understand is commissions. What are commissions? So this is really important as well. I forgot to mention this with broker. When you decide on the market, then you can go and choose the correct broker. You do not want to go with an equities broker if you are trading crypto, right? because equities brokers won't have the right platform, they won't have the right feed, so they will be charging you extra. So not only will they be a bad broker for you, but they will also be charging a lot higher commissions and probably for the feeds. So find the right ones, right? So crypto has different exchanges, Coinbase, Kraken, Binance. Then you have like equities brokers, what is it, Charles Schwab, there used to be Thinkorswim, TD Ameritrade, they just went. I think Charles Schwab, I'm with them, and I totally just blanked on it. Yeah, because I'm also with Capital One, but that's credit cards. But I'm just saying, like, you need to find the correct broker. They're the ones that are going to be doing you much better. Now, I mentioned before platforms. You cannot do anything without a platform, guys. You need to have a good, strong platform. You need to have a good platform. Okay, what is a good platform? There are so many today. When I first began almost 13 years ago, there was only like 4. Today, I think there's at least 20, and the majority of them are really good. So what I would recommend is finding the one that suits you best, that you understand the most, and going with that particular charting software. But you cannot be a professional day trader if you do not have the right software. Now, let's do a really quick breakdown of the lingo. Why is that important? Because it absolutely amazes me that people don't understand the basic terminology when they are trading. And let's face it, every single thing in the world has its own jargon, right? If you're a doctor, you hear stat, you hear all these words that you as the layman might not understand. What if you're playing football? You probably don't understand a lot of that. Have you ever met anybody in the sailing community? I literally feel like they're speaking a different language. So it's the same for the financial markets. We have our own language, and it's not hard, but once you understand it, you could go with it. But if you don't understand the basics and you're putting in thousands of dollars, just get ready to lose it, because if you don't understand the difference between a buy and a sell, you're not going to be able to do well. So let's go over these really quickly. Intraday trading. When you say day trading, it's positions in and out in the same day. Why is that important? Because when you're swing trading or long-term investing, you're going to be looking at the wrong time, right? So the goal is when you're day trading, you want to be looking at charts that are 5 minutes, 10 minutes, 15 minutes. But if you're swing trading, then you certainly don't want to be looking at something that's, 10 minutes when you need 1 day or 3 days. And if you're long term, forget it. You really want to go in like week or even a month, correct? So that is really important to understand that. Then the bull market, it's obviously the market going up, bear market going down. Then we have trends. I'm sure you have heard that there are trends in the market. And usually we've heard that there are 3 trends, right? There's the sideways trend, the down, and the up. The thing is with the sideways trend, a lot of people overlook it as an important one, but that's usually the one where people end up losing the most amount of money. So guys, you do not want to be in the sideways trend. Another really important thing is having a profit target and a risk management. So what that means is that you are actually telling the market where you want to hit your profit target. It's really important because if you don't have one, you might have a mental one, but when it hits your mental target, you're going to get greedy, and greed is a big one, and then you're going to say, no, I want it to go more. Boom, all of a sudden it turns and it stops you out. And even worse, if you don't have the risk management in place, again, the mental risk management, right? We've all been there with that mental stop where we think that we're going to stop out ourselves, but basically it's just an accident waiting to happen, okay? And all of this can be done from your charts. That's the beauty of it. Now, charts, we have indicators, and usually all charts have a lot of universal indicators that you could choose from that are free. And I really recommend having some indicators. A lot of people go overboard and have like 10 to 15, which again could give you analysis paralysis. I personally use only 2. All right, like I mentioned earlier, trending markets, guys, stay away from those sideways markets. That's where the majority of the money is lost. Now, let's talk about the difference between buying and selling. Buying, or another way to say it, is also going long. That means is that you are buying, going along positions or taking a long position. That means you are entering low, exiting high, okay? And you're taking the profit in between. What's the difference with selling and buying? Selling is the exact opposite. It's also called going short or taking a short position or shorting the market. I'm sure you guys have heard of all of those terminologies. What exactly does that mean? It literally just means you're entering at a high price point and you're exiting at a lower price point and you're taking the money in between. Okay? That's all it means. There's nothing more to it. You're entering high, exiting low, taking the money in between. Now, I mentioned earlier that you want to do the market, you want to do target, profit target. You also want, that means you are telling the market where you want to get out as a target. Also the same for risk management, but it's also really important to put in a limit order. What does that mean? It means you do not want to enter as a market. Means when you market entry, you seeing this, the market, it's going up or down, whichever you're planning on doing, and it's just going and you're all excited. You're like, you know what, I'm going to continue and I'm just going to jump in. So the market knows that you're an amateur when you do that. And what it does is automatically finds you with slippage. I don't know if you guys have ever heard of slippage, but slippage literally means, like, say if you want to enter a position at $1, it will enter you at 125. So you've already lost 25% of what you originally wanted. But if you put in a limit order and say you could, oh, I want to be filled at that $1, the market will fill you there because you are telling it where you want to enter. And the same goes with the stop limit. You can market exit it. Again, you will lose money, 25% minimum with slippage. But when you're telling the market, this is the stop loss I'm giving it, this is all I am willing to risk on this particular trade, then the market, first of all, respects it. They understand that you know what you're doing as well. And you don't lose more than you don't want to. All right, I've been talking about technical analysis a lot, and the beauty about technical analysis is that it's free. And when you understand technical analysis, it is just miraculous what you could do with it. The most obvious ones are resistance and support areas. I'm sure you guys have heard of this. So what exactly is a resistance area? Resistance area, it is where the market is hitting the ceiling. It is a ceiling of the market. It is where the market is hitting 3 or more times and the market is respecting that area. That means that it could pivot from there or it could break through, but you do not have the right to guess or try to predict because we do not have enough power or pull to do so. What is a support area? It's the opposite. It is the floor of the market. It is the floor of the market. It is where the market is hitting 3 or 4 or more times. Okay? Now, my favorite is reversal patterns. That is the double tops, triple tops, double bottoms, triple bottoms, and the head and shoulders. Why do I love this particular technical analysis? First and foremost, 100% free. Secondly, super easy to spot, right? It is not an indicator that is going to tell you that it's going to be 100% reversal chance, but it is an area that is telling you that it has a very high probability that it's about to reverse, and it's certainly telling you that the market has slowed down. My favorite on top of that, because you could couple it with the reversal patterns, is divergence. Divergence is when your price action is going in one direction and your lower indicator, which could be the RSI or the MACDs, are going in the opposite direction. What does that mean? It means that the market is slowing down. It is weakening. It is becoming weak. Do you want to be part of that market? Absolutely not. We never want to be in the slow market. But divergence is the beauty of it. It's so simple to spot, and they're already telling you, stay out. Just wait. Wait until we get more confirmation. All right, guys, let's put all of this together. Again, remember, I have the entire presentation completely for free. A making of a day trader.com. Go here right now, and you can get this all back and go through it on your own. Just 1 second, I need to drink some water. All right, guys, let's put this all together. We're going to talk about the breakout trade. The breakout trade is without a doubt the most powerful, most common trade around, and definitely the most highly probability trade there is. So when we are spotting a breakout, that usually means that the market is flowing in one direction. Then we have a massive sideways trend, and then all of a sudden it breaks out in the same direction, right? So we want to be able to understand what it looks like, and that's because we have now outlined with the technical analysis. We know when there's divergence, we understand when there's a resistance or a support area, and when it finally breaks through it, and when there's no divergence through that as well. This is what we really want to focus on, okay? Now remember, everything I've just told you, makingofadaytrader.com. Now, super important, guys, everything you need to take action, we have in front of us, right? We have these amazing summits, we have YouTubers, we have podcasts, we have books. There's so many things, right, that are at our fingertips. The biggest issue that I personally see, and I'm still, sometimes battle it myself, is how do you know you're doing it right? How do you know you're doing it right? Who is there to help you understand if you are doing it right? And usually all of this is great, but I still get asked all the time, how do I get started? I'm so confused. There's so much information out there. How do I get started? And this is not from beginners, by the way. I get a lot of seasoned traders that have been trading for a long time and are simply not consistent, make money one day, lose more the next day, and are inconsistent and are not profitable, and constantly asking me, how can I start to become consistent? Make this my livelihood. And I'll be honest with you, the number one way is lacking the basics, lacking understanding of the basics. It's like getting into a car and not knowing where is the steering wheel, where is the handlebar, where is the clutch, where is the accelerator, where is the brake, where is the gear shift, right? We forget, I know the majority of us who are sitting here today is that we've been driving for many years, but at one point, this was the basics that we had to learn. And it's the same thing with day trading and the financial markets. Once we learn the basics, then we could fly through and start to truly make money. Now, I just want you guys to go really, really deep into your imagination and imagine somebody getting into your car who has never driven before or has never been in a car before, and you tell them, okay, you got to buckle up the seatbelt, it's going to save your life. And they're like, buckle up, seatbelts, what does that mean? If you've never shown it to them, how are they supposed to know what it is? We're not born with this type of information, right? So it's the same thing for trading. If you're not born with this information, you're not going to know. And this was my own personal issue and my own sad truth, was that I spent over $20,000 on my trainings, and yet I was still struggling. Why? Because every time I was sitting in a chat room or talking with somebody and I was asking questions like, can you please explain this divergence, or what does it mean resistance area? And I was either ignored or treated like I was supposed to be born with this information, until one day, after a couple of years of really trying, I ended up losing almost $4,000 within 5 minutes. And you know what happened? I was done. I felt so defeated that I quit. I couldn't do it anymore. I walked away. But here's the reality of all of us here today. that we are all bit by the trading bug, and it never stops itching. And do you know why? I'll tell you, at least for my own reasoning, why it never stopped itching and why I got back in is because deep down inside, we know that we can do this. We know that we can do this. So this is how I ended up getting back into the basics, because obviously I didn't quit. I quit for about 5 months and I came back. And what I did was I removed all of my charts. I used to have 3 charts and 3 monitors. I literally donated 2 monitors to the garbage men, and I removed all of my indicators, and I just had 1 chart that was naked price action until I slowly started to put in my indicators. And now today I have 2 indicators. But one day, one of my students says to me, he's like, you know, Marina, your method is very similar to Coach John Wooden. And I've never heard of Coach John Wooden before. So of course I had to look him up. And this guy was a legendary coach, and his entire philosophy, when in doubt, get back to the basics. When in doubt, get back to the basics. And I mean, this guy was one of the greatest basketball trainers, coaches ever. 88 national championships, 10 NCAA, trained with absolute rock stars, A-list players. Yet, this is the most important thing. No matter how amazing and all the accolades that they have racked up, when he started the season, every time he would start from the basics. He would always get back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. This is so important, guys. This is so important. All right, you need to understand that. And today I have a very special offer for you guys, for only the participants here today. And we are actually a full house, so this is my introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading, you can do it on any apparatus, phones, desktops, laptops, tablets, you name it. All of this for $97. One-time fee of $97. This is not a multiple fee. This is not a recurring fee. So now I want to talk about what you guys will get for this $97. First and foremost, I want you guys to go here, bootcampfordaytrading.com. Go to bootcampfordaytrading.com and follow along with me. Put in bootcampfordaytrading.com. So it's HTTP, because if some of you are having issues getting in, make sure that you remove the S. Bootcampfordaytrading.com. So what do we get for $97? So imagine you guys like to play golf. I don't know about you guys, but when we used to live in Guatemala, when we first arrived there like 15 years ago, golf was about, I don't know, $29. Before we left 2 years ago to move to Spain, it was at $120 per person. Okay, and that's in Guatemala. So I can't even imagine what it costs elsewhere. Do you guys like to go out for lunches or dinners and take your friends out? $97 can barely even buy you for 2 people with wine, right? So I'm going to break this down for you guys, what you get with this boot camp. First and foremost, we go over the Simplifying Day Trading package, and I help you 30 minutes, really quick platform setup, because a lot of times platforms can definitely be like the bottleneck, and people just need to get past that. And I will help you get through it regardless of the platform you're using. I've been around for so long that I know how to use pretty much all of them. I've used quite a lot. So again, I'll be able to help you get right to it. Then we go into the fun stuff, the technical analysis, the understanding of the trends. Remember I told you the sideways trend is the most brutal of them all. We will learn how to avoid it entirely. Also, reversal patterns, divergences, spotting them, understanding them, executing them, really being able to utilize the power of these elements and the technical analysis, which makes it so much more simpler to trade. Okay, and divergence. For me, divergence is literally my holy grail. And when you understand it and can utilize it, I promise you, you will definitely take your trading to the next level. All right. And the best part is spotting the breakouts. We're going to master the breakout trade, and we're going to stay out of the fake out breakouts because they're real, and we're going to be able to understand how to spot them and get away from it. All right. Now, you guys will have unlimited access to all of this. This is normally valued at $1,600. Everything that you guys are going to be getting in here. So before we move forward, just so you know, this is what some of my students, and I have students from all over the world, have said. Best money I've spent. Just finished the boot camp now. You are the only mentor that truly checks the work. Thank you so much. I am enjoying your boot camp and I'm learning every day. So I just want to go into something really fast before we move on. I don't know if you remember me asking you, how do you know you're doing it right? How do you know that you're doing it right? Who is there helping you understand the charts, understanding what is going on? Right? So what I have included in that one-time $97 fee, one entire month working with me, one-on-one mentorship, 1 month, one-on-one mentorship with me. Just that alone, you will have unlimited time with me for all your questions, all your feedback. You could share charts when we could chat. So I will be there to be accountable to. I will be there to help you so that you don't have to wonder if I'm doing it right. Okay, having the mentor could be what will take you to the top. And the best for last, I actually have a live trade chat room where you guys, we will be together as well, implementing everything in the live market. All is valued at $2,600, $97 for you guys. I want you to go here right now. Take a screenshot of this. Take a screenshot right now and put it where you'll be able to find it so that you could access it really easily. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Here's what you guys will be getting for the $97. Everything in the course. 30 days one-on-one mentorship and 30 days in the live chat room. All of this $97 is worth less than the price of one trade. So here's the thing, guys. I know how much trades are. I mean, I trade. This is what I do. And usually they're between $200 and $400 per trade, right? This is $97. So you will be 10xing your return on the investment. This way you could go 100 times to these types of dinners. The thing is, because of my mentorship, I only have 25 spots. Okay, only 25 spots because I want to be able to give you all of my time and effort. Okay, so if you go here right now, bootcampfordaytrading.com, you could put it in right there. Oops, bootcampfordaytrading.com. As I said earlier, if you have the S, oops, it could stop you there. Ooh, hang on a minute, what's happening here? There we go, bootcamp. Oh my gosh, it's not working for me. Okay, bootcampfordaytrading.com right here. This is the order form. All right, so go to bootcampfordaytrading.com. It will bring you right here. And as you can see right here, one-time price, $97. And you will get everything we just talked about. If you do want to do a payment plan, I do have for $59. But again, you'll get everything automatically, even if you go with the $59 payment plan. So let's go here right now. Please take a screenshot of this, bootcampfordaytrading.com. Thank you, everybody. And I truly, truly, truly appreciate you guys and being here. And thank you for having me here today.
Hey, thank you, Marina. That was a refreshing reminder that sometimes the basics are the most powerful tools. And thanks again for the bonus gift and opportunity for our audience. All right. Let me get ready for our next presenter here. Okay. Now let's shift to options with one of the best in the business, Price Headley of BigTrends.com. His session is titled The Playbook of QQQ Options Traders, Unique Tactics for 2025. He'll be explaining why he focuses exclusively on the triple Q options, how he combines price action with X% patterns, and why his greater than 100% profit target strategy works without overexposing yourself to risk. The chat box has the link to Price's special offer check, so make sure you check it out during the session. Price, it's all yours.
Thank you, Anthony. Great to be with you all today. Appreciate you. Thanks for that kind introduction. And, basically, hello, folks. It's all about, focusing on market volatility, right? The markets have been volatile. And the question is, do you think that's going to continue? I would say it's a pretty good bet that it will, right? The question is, how do you harness that volatility? How do you put it to work for you rather than having it work against you? I see so many people who get into this sort of fixed mindset. And I think when I think back to, I've been trading options now for over 35 years. I think back to both my greatest hits and my greatest misses in 3.5 decades of options trading. And I think, you know what, probably especially on the miss side, the miss problem happens when we're not flexible, when we're not adaptable, when we're not willing to kind of cut and run and move on to the next opportunity. And so that's what we're going to talk about today. It's not just how to make money, but also how do you control your risk? How do you position for this volatility in your favor, but also know when to say, no thanks, not gonna dig my heels in, not gonna get stuck being a bag holder. This is about being flexible, being adaptive, and being quick, right? Speed is important. We're not day trading here. We're looking for fairly quick next day to 2 days out kind of holds, not holding them more than 48 hours. So this is kind of an eye-opener. The beauty is, as Anthony alluded to, just focusing on the QQQs, we're just focusing on the NASDAQ 100 names. Now that means that you are getting a piece of Apple, NVIDIA, Tesla, Microsoft, Meta, you go on and on, Google, Amazon, et cetera, right? But the idea is that you're not getting exposed to just one of those names. You're really getting broad-based exposure across those market leaders to take advantage of the money flows in and the money flows out. We want to be able to trade to the upside, and we also want to be flexible enough to also take advantage of the downside. So it's all about putting yourself in that position to truly take advantage of this yourself. And we're going to walk you through how to do it for 2025 and potentially a lot further, right? It's all about getting you comfortable with the methodology first and foremost. As we get started, just a quick reminder, everything we share with you today is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but let's face it, they also have large potential risk. We're going to talk about both sides of the coin here. The past performance of any trading system or method is not necessarily indicative of its future results. Please see our terms of use on our bigtrends.com homepage for more information here. So the beauty of this is that you do get laser focus. You get to focus on one vehicle here. I see so many people who are dealing with trying to scan for dozens, if not hundreds of different opportunities. And that's not only stressful, but actually I think it causes your mind to seize up, to basically be like, I don't know, I'm seeing so many different things that I'm not sure which way I want to go. It's like, you end up getting information overloaded. So this gets you refocused, laser focused, and these are tactics that I've learned across 35 years of options trading experience. It's all about walking through what works and what doesn't. So we show you a bunch of success stories when it worked, also what to expect when it doesn't work. Because let's face it, we're playing a probability game here. We want to put the probabilities in your favor. But we've got to know that even playing probabilities, that still means if you were 60% to win on a trade, that still means 40% of the time you will lose, right? So the idea is that let's focus on reality. We've got to manage winners and losers. We'll walk you through that. Now, we call this strategy QQQ Options Playbook. We give you a playbook for exactly how you should implement these trades and also learning all the time while you're earning, right? While you're putting on trades, you're constantly building your knowledge, building your awareness of what patterns have we found that have been successful trading the Qs for the next trading day or two at most, okay? So, but never having a day trade, remember, getting in one afternoon ready to capture momentum follow through to the upside or the downside. So you'll learn about this, how you can start getting trades as early as this afternoon. If we have a trade, if we don't, we never force a trade, right? So we're probably going to have somewhere around 8 or 10 trades a month out of the 20 or 21 trading days. each month. So about half the time we would hope to have a trade, give or take. As I said, I've been trading options for over 35 years. More than 25 years ago, I launched BigTrends.com and did it because of the power of the web to really broadcast information in real time quickly. And basically, it's kind of the ultimate free market force here, right? So now on our 26th year, serving tens of thousands of traders around the world with big trend strategies and techniques and education. For us on the system side, it's always about the data has to bear it out that the system works. And when I say a system works, it doesn't just mean that you've got a high win rate. We also want to know that we've got in this case, we're looking for a reasonable win rate, but we're looking to win significantly bigger than we lose. That's another big factor that a lot of traders miss when they're evaluating a system is how big can we win, how small can we lose? Because I can show you systems that win 90% of the time and still could cost you money if you lose big on the 10% of the time that you're wrong, right? So that's something that has blown up many a Wall Street wizard because of thinking that they had a high win rate and missing the downside, right? So we need to make sure we put ourselves in that position of controlling risk always. Let's kick off today's event with a recent winning trade example from our QQQ Options Playbook strategy. It's a real-time email alert that we send out to you when to get in, and we always send you when the follow-up when to get out. So you're never left hanging. You're never left wondering, what do I do next? We clean up every trade, win, lose, or draw. So here's just 4 daily candles on the QQQs going back into mid-March. And what we've got on the bottom panel, and I can share with you what this indicator is. We didn't mark it, but I'm going to share it with you today. It's the Larry Williams technique called %R, percent range. And so %R is often shown on a negative scale. It's how I know Larry's a great trader, great educator and innovator. And basically he used a negative scale. I just always find that kind of counterintuitive. I use a 0 to plus 100 scale, kind of the grade school scale. We're kind of looking at 2 different setups for bullish patterns. One is if we get into the bottom of the recent range, and you can see in this case, that's where we were. The market, as you know, had sold off there into the middle of March. And it eventually sold off more later, but we just care about where we are at a point in time for a bounce or for a continuation, right? For a follow through one way or the other, or for a snapback. In this case, this is a snapback rule where if we're oversold, you can see we're in the bottom 20% of readings. What does that mean, by the way? If you talk about %R, percent range, if you said, well, if we look back over a past look back period, whether you're looking back at, say, the last month, the last week, whatever your time frame is, you're saying, well, in this particular example, right, just in the last 3 days really before that follow through day, that low was 472, that high was 486 almost, right? That's a 14-point range. So if you're closing, in this case, about 2 points off of the low of that range, at the bottom 2 points of a 14-point range, you can kind of do the math, right? If you're the bottom 1.4 points, you'd be at the 10 percentile. If you're about the 2.5 point level, you'd be around the 20th percentile. So not surprisingly, we're down here around the 12 or 13 percentile on this chart here, right? And our settings are on what we use for % are proprietary, but when you get the special trial offer I got for you at the end, you get all of my settings and rules, just like a longer term subscriber would. So basically you can learn it while you're earning with it, right? So that's important. And we'll give you that as a subscriber once you take advantage of that. But the point is that strategically and understanding the philosophical aspect, when it is this oversold and you get a down day, we found this is really interesting that if you get an up day on an oversold market, we kind of have a different take on what you should expect for the next day versus a down day. It's very counterintuitive, but maybe not, right? Maybe the thought being like, well, is it kind of washed out? Are we flushing down? Obviously, we're still holding those prior lows there. But the key that, okay, our system's picking up that we're oversold and we're kind of closing below where we open. That's the red candle there. We're willing to actually, believe it or not, buy that for a snapback. So we actually recommended to our subscribers there in the last half hour of the trading day to get into the QQQ 476 calls. Now notice our expiration choice here. One of the great things about the Q options is that they have expirations every single trading day. I mean, this is something that I longed for in the 90s. I got started trading after catching the trading bug while I was a student at Duke University in the late 80s. I got started trading options in the early 90s, and not only were back then commissions not as good, right now commissions are $1 or less a contract with no ticket charge, but so now it's more importantly, we just had monthly options back then. Then about 20 years ago, we went to having weekly options every Friday. And I was telling the exchanges, I was like, if you guys have daily options, people are going to eat these things up. And that's what started to happen is now one of the hottest growth trends out there is what's called the zero DTE, zero data expiration options. We are not cutting it that close. We're not trading the final day of the options life here. What we're doing here is we're picking out options that are 3 days to go until expiration. So that was on a Tuesday, March 18th. We bought 3 days out, 19, 20, 21, bought the March 21st, 3 days out, 3 DTE, we would call it, expiration. Knowing that we do not intend to hold it more than 2 days. We will not hold options here into the expiration day. So we'll be out the prior afternoon before the expiration so that way the longest we could hold it would be 48 hours. But what's our goal? What's our profit target here? Our profit target is a double. If we get a double, we take the money and run. We don't try to sell partials and try to keep riding it because there's too many risks of reversals. You know the market's been plenty volatile. Within that volatility, you can harness it if you can take out bigger gains and then keep your losses relatively smaller. And so we're targeting 100% gains. We're seeking to keep our losses at no more than 50% on the downside. So twice the reward for our risk. Okay, that's one of the first kind of key elements in this system. Notice what we paid back when we were trading on this one, just slightly out of the money, it turns out, right? The markets had gotten volatile. Volatility levels, what's called the VIX, had been heating up. We're trading just over 474. So we're buying about 2 points out of the money here, and we're paying 487. That means multiply that times 100 because each option contract you buy will cost you 100 times that option quote because each option contract controls 100 shares of QQQ stock. Right, so if you bought 100 shares there, you're paying almost 47.5 grand. We're controlling that for just $487. Now, we assume that subscribers on average probably come in using about $1,000 a trade. You could use less, you could use more. But you see in this case, you could buy 2 contracts at $487 a piece and you'd invest $974. Like I said, these examples are before commission, but the idea is that commissions on the 2 lot going in would be just a maximum of $2. On the way out, I know a lot of brokers that are starting to say no commissions for exiting trades. You know, that's becoming kind of a trend. Another thing that you could talk to your broker about, see if they'll work with you on that too and reduce your commission rate. But the point being that, look, you invest $974, the next day we snap up, right? We snap up all the way to $485, some 10 points to the upside, right? You can see that's almost a 2% move in the Qs. And we get 100% move in the option, right? So of that 10-point move, we made about, you see 487 times 2, right? So we made 487 times 2 contracts. And so the idea is that we made $974 before commissions. Like we said, $2 in, $2 out on the commission at maximum, $970 net after commissions. You keep the vast majority of what you make with no ticket charges anymore. It's a great time to be an options trader. So the beauty of this, and we know that past performance never guarantees future results, and everything we talk about here, the future results will vary, right? There's going to be winners, there's going to be losers. The key is how do you have the discipline to execute your edge over each time we get this edge popping up. We'll alert subscribers, hey, we want to get in here. We're going to target the 100% gain. We're going to use a 50% stop loss and go ahead and get the trade working. So the idea is that, okay, that's an example of a nice snap up where we said, thanks very much, the next trading day, we're done. If it had gone a second trading day, we'll have some examples here where we went 2 days, we didn't get our stop or our target. We will time stop ourselves out 2 afternoons later. So we will never hold it into the expiration day. So our basic strategy guidelines are hold it for 2 days or less without any day trades ever. And you say, how is that possible? Well, because we're buying in the last half hour of the trading day. So we're not going to get in a position where we hold it. We're going to make sure that we, are going ahead and getting out, win, lose, or draw on that afternoon before the expiration day. Because that last day of the options life, you see a lot of time erosion, right? It's the melting ice cube of time. It's getting hot in that kitchen, right? It's melting fast as you head into the final day. We don't want to play that game. So we're looking at actually 3 different % R, % range setups. And and we'll show you the other ones here, and you can get a handle on. 2 of those 3 are bullish. 1 of those 3 is bearish. So if we're bullish, we buy a call. If we're bearish, we buy a put on the QQQs. We're always going to use 3 days out till expiration, 3 trading days, mind you. So if I got a signal today on a Thursday afternoon, I would go Friday, Monday, Tuesday. No holidays in there, right? Remember Memorial Day coming up. That'll be a Monday holiday, and the following Monday after this one. So you count ahead. But point being that 3 days out would take us to Tuesday, next Tuesday's expiration, if we bought something this afternoon. So just that's an easy calculation, and it's one that you can manage simply. We like the daily chart a lot better than intraday action. Why? You'd think that intraday action, if you're going short term, you should really go with the intraday charts. The noise level on the intraday charts, I believe, is a lot greater and puts you at a lot more risk of getting faked out, flushed out, and we don't want that, right? We want to get the true trend, not just the noise within that overall market move. We're looking for what's the, as I often say on the daily chart, there's a lot of battles fought intraday, but the war is won at the close. So we feel by getting these trades out to subscribers at a maximum once per day at 3:40 p.m. Eastern, that's 20 minutes before the cash market closes. The bell rings 4 o'clock New York time, Wall Street time, Eastern, right? And the idea is that at that point, you think, oh, well, that's not much time to get in. Well, the nice thing about the QQQ options, in addition to having the daily expirations, is that we also have QQQ options keep trading until 4:15 p.m. So if we send a new trade at 3:40, you basically have like 35 minutes still to get in before the QQQ options trade that in trading that day. You want to be in that day before the 4:15 options stop trading, and the idea is because want to be in that day so we can be ready, hopefully, to cash it out the next morning, ideally. Obviously, it's not always going to happen. Sometimes we're going to open flattish or even a little against us. And so part of this is being able to manage some of that volatility. Now, some people say overnight, oh, that's overnight means risk. And obviously, we're not going to do this, say, in front of a Trump announcement on tariffs or some kind of major global risk event situation, right? But the idea is that generally speaking, we can stomach that risk, especially when you keep in mind that you shouldn't be allocating too much of your capital to any one trade, right? We like the idea of like trying to keep your typical capital at 10% or less of your portfolio per trade and factor that accordingly. If that's too much, you could even cut it back more. But the idea is that, no one trade should make or break you. It's about implementing this consistently across a longer series of samples. It's like if you flipped a coin, and you just flipped it twice, well, sure, you can get back-to-back heads or back-to-back tails very easily. You could get 3 back-to-back still fairly easily. But, the idea is if you flip it 100 times, odds are you're going to get close to 50-50, that those little tiny win streaks will average out, and that the overall system, as you would expect, would go back to a 50-50 rate on a head-tail coin flip. We want to be better than that, of course. But the idea is that we're looking also to play the game where when we're right, we win more, and when we're wrong, we lose less, right? That's also the advantage versus the coin flipping game. So the idea of all this is that, okay, put the odds in think of it long term like that. Think of it as like your job is to execute that. Could you stay with that system long term and not just get overly up or down because you had 3 go for you or 3 go against you, right? It's about saying, look, you need to be able to continue to execute through the uncertainty and say the edge plays out over time. The beauty is we'll get plenty of frequency, but also we'll get plenty of quality to go with the quantity that have a better profit potential compared to what their risk is. And also gives us the ability, in addition to giving you the ability to only have to focus on that, hey, is it 3:40? Do we have a new trade? You don't have to screen watch all day. We don't either. We basically just start checking these in that final hour of the trading day, kind of getting things. Are we ready for a signal or not? And then double checking there right before that 3:40 action point, having the alert ready to go. All systems green and go. We fire the real-time email and send out a text alert to the text alert list as well. I recommend when you get signed up that you get both the real-time email and we'll send you a follow-up on how to set up the text as well, so you never miss an alert with a double delivery system in real time. So, okay, let's go in and talk a little bit more about it, and then we'll look at some more charts. So, bang for your buck. I mean, one of the reasons that we only buy 3 days out is I'm like, why would I want to buy more time than I really need? If I think I need 2 days, you say, well, why not buy a 2-day option? Well, we don't want to hold in that last day of the option's life. There's too much time decay risk there. We feel like it's manageable and something that we can get a lot of bang for our buck buying 3 days till expiration, holding them no more than 2, preferably holding them just the next day, right? Our average contract entry price since the beginning of 2023, so we're coming up to almost 2.5 years later, 2 years and 5 months later here, is $3.21, meaning if you're investing $1,000 per trade, then you're looking at something where you can focus on okay, how we could be about getting in about 3 contracts at $3.21 a piece on average. Sometimes you get more than 3, sometimes you get less. But the idea is that that's a ballpark of what to expect per trade on the contract amount. We will get out no matter what after 2 trading days held at 3:40 p.m. 2 days later, 2 trading days later. So the idea is that if we got in today, it gives a chance tomorrow on Friday, and then Monday we don't get our profit target or our stop by 3:40 p.m. Monday. If we were in today, Monday we'd be out at 3:40 p.m. We'll send you a final reminder on that too. We assume nothing. We basically assume that we want to over communicate with our subscribers, not under communicate. We don't want to ever have a question about what are we doing with positions. Like you may be like, I already knew that you were taking a double. I already knew you were taking a stop. I already knew you were time stopping 2 days later, but we will assume that in case you didn't, we're going to remind you. And so better to over communicate than under communicate. So why should you care about this strategy? When you go back and look at overall performance, looking backwards, you're reminding yourself when we look backwards that past performance can never guarantee future results, right? Future results will vary. Could be better or worse than this going forward. But the idea is that what's not going to vary is our commitment to following this system. Look at going back to the beginning of 2023 through today on all closed trades, a $25,000 portfolio racked up $91,758 in gross profit, meaning that your 25, this is before commissions and before subscription investment. Before those things, 25,000 grew in this case to like 116,000 and change, right? That's a 367% gross return through, of course, a lot of volatility, right? Both the upside, the AI-driven bull run that we had, and then the recent downside, right? Now, this assumes you start with 25K, you're putting in $5,000 a trade, but what's nice about that is it also assumes that you are not compounding and trying to grow the amount you invest per trade. It's saying, let's just stay with a fixed dollar amount per trade. And you say, well, I'm not going to put in that much. Well, what about a smaller amount per trade? How about $1,000 a trade without ever growing that 1,000, but that your portfolio keeps growing because the system's working for you over time? The $5,000 starter model portfolio grew to almost 21,487. So a 16,487 gross profit, that's before subscription investment and before commissions, right? We know commissions are minimal compared to, of course, the impact of these doubles and controlling our risk appropriately, right? Not quite the overall gross return that the last one had, because sometimes you're not going to quite get in your full 1,000 compared to you get a lot closer to your full 5,000 on a per contract adding up to your maximum cap, but still 329%, nothing to sneeze at. More than a 4-bagger in the last 2 years and 5.5 months. So just under 30 months now. So again, reminding you on all these past looks that past performance does not guarantee future results. We know that. So we just have to be smart about not ever getting too optimistic and not overcommitting our capital. I want you to that's why I like the idea of just define what your risk you're willing to take is per trade. And then say, okay, then just keep that idea in mind of saying, even when we're going well, know that we could lose on the next trade. Even if it's had a couple of losers, know that we could also make our profit target on the next trade. The idea being that you want to smooth your psychology out and look at it more like, what's an amount that I can invest that will not get me too high or too low? That will let me prove this, that the system works for me over time. That's how I want you thinking. So the reality is that each day could fall into one of 8 different categories. How is that possible? Because we're not just looking at percent R when it's oversold. We're also looking when it's quote unquote overbought. We kind of look at the extremes of the range. That's where we see a lot of the day-to-day movement really get exaggerated. And so you've got those extremes for both up days and down days. And so we start stacking up all those different possibilities, and there's 8 different possibilities. 3 of those 8 for us are what we consider to be tradable patterns that have a meaningful historical edge. We call it the historical profit factor, we're looking back over oftentimes 10 years or more of data, and we're saying, how did the system do through all different kinds of market conditions? When we got a buy signal when these things happen, we got a sell signal when these things happen. And so the ones that have the best historical profit factor, that's a meaningful edge for us, are the ones that we want to trade the most and be disciplined about just then executing, following those signals. So, and so there'll be a number of times where we don't trade, right? And that's part of it too. It's just knowing that you're not in this game to trade every single day. You should never have that as your thought. I know it's kind of different from when you go in your career through a job where you're like, you better show up at work every day or you may get fired, right? For school, you better do your homework every day or you may get an F, right? That all those kind of things, we're trained with that from such an early age that then we get into trading. We think we got to do something today. But if we don't do anything, how are we expected to call ourselves a trader? Well, being a good trader is first being a good observer, being a good, in this case, being a good observer of what the system says, and then having the discipline to only trade when the system says we should trade. If the system says no trade, you owe it to yourself, not just financially, but psychologically, to validate that there's nothing to be done. And so you should never put on a trade just to get some action. We're not trading for action. We're trading for results. Okay, that's a big difference in mentality. So some people are just bored and want to just see something move for better or worse. That's not what I want you thinking. I want you in this game for the long haul. I attribute it to why I've been in the game for over 35 years and counting. It's just that discipline is something that will serve you well over the rest of your trading lifetime. So anyways, point being that we're using these windows of opportunity. Let's look at some other trade examples. Now here's one, big downtrend right off that February high earlier in the year, right? Market started coming down hard. We all know it. And, it's coming back hard too. But the idea is that, here now percent R, you can see that blue line there has gotten into the bottom 20% of readings mostly through here, right? And so when we rallied up into about the 20% area, you see we're still making a lower high, still making lower lows that day. That's the definition of a downtrend still, right? So that little bounce, the higher close, even though some candle followers might say that looks like a reversal, we were lower than we actually flipped back up, closing near the highs. I always say one candle doesn't make a trend. In this case, that's just some bounce noise within what looks to be an existing downtrend, obviously, in retrospect. And of course, we took advantage of that. So we were able to call out to buy into the 488 puts when we were closing a little above 490. And so again, those volatilities had jumped up. So you can see we had to pay a little over $5. We paid 509. That means if you're putting $1,000 in, you only get one contract, right? Two would push you over 1,000, push you to 1,018. So you only get one. That's just following the rules. And you see the next day when we snap down, we gap down and we keep on going, right? And sometimes, like in this case, sure, we left some money on the table, right? It closed about 14 points in the money roughly. So we got out at 10.18 for our double and we could have gone to 14. Sure, that's going to happen from time to time. I don't want you worrying about that. A double in the next day is a great thing to achieve, and it's something that we'd like to achieve as many times as possible. And if it goes on in triples, I do not care. I'm happy with a double in 24 hours in this example, or up to 48 hours. As you see, a $509 profit before commissions $2 round trip at maximum. So now let's talk about the other pattern. That was the bear pattern, but let's talk about the bounce in the downtrend. Here's the continuation pattern when percent R has been strong. Now we've got percent R in about the top 20% of its readings, right? We've had this little breakout, and you can see the breakout has then gone through kind of a sideways, what we would call a flag pattern, right? But you can see we closed back up here, and our research says here, hanging right around that 80% level, and the percent R says that we should get into a call betting that we still have more upside. Why would we do that when we're that overbought near the top 20% of the percent R readings, top of the range? Because just because it says top of the range doesn't mean you can't make higher highs. And in this case, you see it's exactly what happens. Not only does it gap up here in the first little gap here, we bought, by the way, of course, just over 528. Bought the 530 call, slightly out of the money, paid $299 back here. That was February 12th was the entry date. So we're going out to the 18th because, past Valentine's Day on a Friday, the 17th, the next Monday was a was a holiday, market close. We went to the 18th. But you can see the next day we've snapped from, in this case, 528, and we trade on up past 534, right? So now that's only $4 intrinsically or so, but the key is that you still, that's just one day later. You still have 2 more days of time. So we're able to lock it down at 598 for that quick double the next trading day on the 13th. Of course, profit-wise, we pretty much got our full, well, didn't quite get our full amount in actually. 299 times 3, 897 invested. We made 897, so not quite our full 1,000, but we made our double on the 3 contracts and said, thanks very much, lock them and load them back to the sidelines with 897 extra dollars in your pocket, minus $3 in and out on commissions, $6, 891 net at least. So the point being, though, is that there's going to be times where we don't get to our profit target, yet we still can hit a time stop that could still result in a profit. So like here's one on the Qs back here in late October where we had, you can see this is our bullish continuation pattern again. Look, we've had that little dip down, and then we've gotten that snap back up here, and you can see it keeps on snapping up. And so now we've got our percent R hanging about 80% or slightly above. Top 20% of readings. You say, what are you doing buying it up near the top of the range? Our system says this thing can keep on going to the upside. So you see that's that candle pattern. A lot of people would say that's like a doji pattern or whatever, where it goes up, but then it reverses back down, closes in the low of the range. All kinds of theoretical possible worries. Again, I always say one candle, one bar, one piece of price action never guarantees the bigger trend, right? You've got to see how they start stacking up for the bulls versus the bears over time. But the key is that we buy in there. We're about $4.95. We buy the 497 calls. We pay $3.50, $3.50 per 100 shares, right? So we need you be able to get 2, not quite 3 contracts, right? 2 contracts in for $700. The next morning it gaps up, but unfortunately it doesn't continue. You see that we look at that reversal. You see that by the end of day 1 here, put a 1 on it. At the end of day 1 there, we're basically flat. You're going to be down on the end of day 1. You're going to say, hold on, why should I be holding into day 2 if we're not positive? We were positive, but now we're back to even a little bit against where we were, right? Flat on the Qs means a little bit of time loss. This is why you don't trade with 1 day to go before expiration, right? You basically say we're 3 days out from expiration. Now we're 2 days out till expiration. We're giving it 1 more day. You can see it opens up a hair, then it even trades intraday a little bit below where we got in. So again, you're coming off of a little bit of a loss, but then you catch the big snap up here. And by the end of day 2, there's our exit. Put an X by it, right? X marks the spot, and we're out at around 500. Now you say, at 500, we've got a 497 call. Shouldn't that be worth $3 with a day left? No, there's still a good chunk of time premium left. There's people that are willing to make those bets for the 0 DTE crowd or the 1 DTE crowd even, that's saying, okay, go ahead and take your best shot. We're not going to make that guess. We're not going to trade with that short of a runway, right? We're going to give ourselves more room to let this run until we get our time stop. When our time stop hits, you have no more room. The window closes, the door closes, and you close your position 48 hours later at 519 for a 48.25% profit. So again, while it didn't go on to a massive gain, we're still happy with that in the sense of something that was kind of grinding along a little bit for us, a little bit against us, not much happening, and we still make 48% in 48 hours. Okay, so the idea here, of course, is that as I said, 3 of the 8 potential patterns would imply that maybe slightly less than half of the time we're going to get into a trade. And as you can see, we've found an average typically of about 8 new QQQ options trades each calendar month. So that's something that makes sense relative to the 3 out of the 8 patterns that we're looking at could be tradable. So here's another example of that kind of bounce where a lot of people would say, man, that's a massive upside bullish engulfing candle. If you look at your candle analysis, folks, right? You said that's a big time reversal. Why would you ever bet against that? Well, this is a very short term. We've been in a downtrend. We get the bounce day finally, right? After about 5 days down there, get the bounce day. So we're getting into a put. We're about 268. We're buying the at the money puts, about a 268 put. Go 3 days out till the expiration. costs you $353 a contract. So that would get you 2 contracts in on the $1,000 cap for $706. By the way, okay, 268, we're at the money. Well, it goes down to 260 that next trading day. It's got to be worth at least 8 at those lows at 260, right? We're out before that at 706 when we get our 100% target. So you're making your $706 on that trade for the doubler. And so this is an interesting one because we actually have 2, one before the election in early November last year and one after the election. Right, so we actually had both of our bullish patterns signaling, and this is pretty rare, right, that they would both signal from oversold to overbought in a matter of just a few days. But that's how fast the market was moving, right? So right before the election, this is the Monday close, the day before the election, that Tuesday evening, we're getting into calls when we're hitting that little closing lower candle. We're trading around 486, and guess what? The options were kind of juiced up for the fact that we're buying 3 days out. I mean, we're buying after the election, and so guess what? It's like an earnings report, right? It's like you're paying up for some volatility. We did not intend to hold these past that next close just because we were saying we don't want the volatility of the event, right? But the idea is that, look, we paid 401 for those out of the money calls. We get a nice rally. That this is the Tuesday that night. They're going to have the election results start to post, and you can see that whole day before that Tuesday, all day we were rallying. We opened higher, kept trading higher, went up to about 493 intraday. Now remember, we had a 491 call because the volatility price into these. We're able to ring the register at 805 on that. You can see roughly about a 6-point move, maybe 7-point move in our favor. We picked up 4 of those points. That makes sense for a slightly out of the money option, especially with the higher volatility. So we're out of that one for a double right before the election. We did not have a trade into the election night. We really didn't want the event risk. Don't really want the binary big gap up, big gap down type of risk usually, right? We're usually looking for things that we think have a much better setup, risk versus reward. So we wait. Obviously, we gap up on the news of Trump's victory. We wait till the end of the next day, big higher close, and you can see then at the end of the next day, we're like, okay, well, this still checks the boxes now for a really strong %R reading to go with this breakout, clearing out of those old highs. And you can see we're finishing the day there about 506. We're buying the 505 calls now, about $1 in the money for about the same price we paid right before the election with all the volatility price in. We paid 409. So now you think, well, we got to get to 8.18. So 8 over the 505 strike call means like 513 intrinsically, and that's probably not quite what you need. You can get out before that because of the time value. You see, we do trade past 513 to 514 and a third that next trading day at the high, right? So we're ringing the register there. Regardless what happens thereafter, we don't care. We're happy to book the double in just under 24 hours, one afternoon to the next. So that's really the beauty of that, trading both the oversold and then the follow through overbought opportunity. What about losing trades? They're going to happen. It's important that we manage accordingly here, right? So the idea is that not every trade is going to be a winner. Here's an example of one that didn't win. So we say, okay, look, it looks like our %R reading has gone up above the 80th percentile. It says we got a positive close. All these things say we should get upside follow through. We're buying calls. We're buying a 508 call. And we're trading about 509, about a point in the money. We paid 333. Gets you 3 contracts for $9.99. Your stops like $1.66. We get a little bit worse intraday fill as it undercuts that. It gets us out of $1.56, down 53.15%. It happens, right? But the idea is that, okay, we want to control our risk so that we can keep our losses at about half the size of our typical bigger winners. So sometimes you get a break where you get a trade that gaps even past your target by the time you can get out of it that following morning here. So here's one with the Qs. By the way, you see %R staying in the top 10% of its readings roughly, right? Beautiful sideways flag pattern, close to close, not much. Now or maybe it traded below the prior day's low a couple times intraday, but it flipped right back up by the end of the day. So very resilient pattern there. We're hopping in as it looks like we're coming out of that little flag. You can see we're now looking at it. value in the queues around 485. We're buying the 1 point in the money 484 calls. We're paying 391. That gets you into 2 contracts for 782. And guess what? The next morning, look at the big gap up. We're actually opening, instead of getting out there at like 782, we're getting out at 955 because the queues have popped from a 485 level and opening about 493, up about 8 points. So that quick snap to the upside in your favor allows us to book even better profits for you. So that's something we're always watching for, looking at opportunities, risk reward, and saying it's important that you always manage your risk reward ratios here. So that's another big one to keep in mind when it goes to how do you control risk on every trade. So some people would say, well, you're trading 3 days expiration. That's just so aggressive. It's not as aggressive as 0 or 1 or 2 days till expiration, right? But the idea is that, yeah, it's still not for widows and orphans, right? It's still something that we need to make sure that you're comfortable being able to execute these trades during periods of uncertainty, right? That's what we get paid for, right? Is for taking that risk by executing through the uncertainty. That's why we do what we do as traders, right? That's how I view it. So anyway, point of all this is that, of course, we're going to guide you through this and make sure we can help you manage it so you're never left holding the proverbial bag. You're never left holding into the expiration day. We'll always remind you, hey, it's time to get out. Like we said earlier, if you look back at our history, again, remembering that past performance cannot guarantee future results. But you see, this is taking a $25,000 model portfolio, starting at $5,000 a trade and never exceeding $5,000 a trade on every subsequent trade over the past almost 30 months, right? So the idea is that you can see over the past 30 months or so, we've made 91,000 and change in profit, right? So divide that by 30 months, you'd be over $3,000 a month on average, if you think of it that way, right? But the point of this is that it's about following a system. It's about following the rules. You can always start smaller and build, right? If you started with, instead of 5,000 a trade, if you start with just $1,000 a trade, you can see, again, to that same almost 30-month window, you'd be up almost $16,500 in gross profit, or over $500 a month, if you think of it in those terms. So, so the principle on all this is that it's all about making sure you're smart in how you allocate capital, how you manage risk, how you can really focus yourself on the system and letting the system do the heavy lifting. Take your ego out of the equation. Let yourself really focus on the best of the best. Remember, past performance never guarantees future results on any of these past looks, but you can see the growth potential. $5,000 portfolio grew to $21,487 before commissions, before subscription investment. So what we set up for you here today is until midnight tonight, you can get real-time trade alerts when this strategy triggers a fresh signal. And so quickly, let me show you what we've got so we can make room for our next speaker in a couple minutes, fellow trader. There's lots of great techniques out there. I want you to keep learning. But here's the theme. I don't believe like trying a month is really a great way to go in thinking like, is that going to give you enough time to really assess a system off of just a few trades? So what I've set up for you is to get not a month, but actually 3 months of trade alerts for a super savings offer here. In addition, I'm going to give you all the same tools that I give to longer term subscribers, so you get the benefit of learning this system over the next 3 months, getting comfortable with it, seeing it for yourself, not just taking my word for it. So you can see you'll get our settings and rule sheet. I'll also give you weekly video training that I'll post to your member site access, and I'll give you access to my analyst team and I for dedicated emails. This would usually cost you $297 a month times 3. That'd be $891 you'd be out of pocket for 3 months of trade alerts on our QQQ options playbook. I'm slashing it today as a thank you for the good folks at Traders Corner having me today. They've been good to me in helping get the word out about big trends over the years. So thank you, Traders Corner. And bottom line is that what I'm doing is I'm going to give you not just the trade alerts, remember, for 177, but I'm also giving you the continuing access to me and my research team, the continuing education of the weekly coaching videos, and of course the rules sheet. You get all that when you go to this link here. It's members.bigtrends.com/corner. Slash it from $891. Scratch that out. We're taking more than $700 off, more than 80% off. You get it today. Think about it, 90 days access for less than $2 a day. $177 for the next 90 days. what do you do when you go to that page? You'll see it's all the discounts and everything's already been applied. So I'm out of time. It's your time to take action. So go make a note of that page. You can call our 800 Big Trends number there if you have any questions, or email clientcare@bigtrends.com for our customer service team. You can use PayPal as well, as if you want to put your payment information on that page, that's fine, or use PayPal. Just go through there, lock it in, save over $700. Just get it today for $177. I'll hand it back over to Anthony so he can get ready for our next great fellow trader and presenter, and go to that link right now, members.bigtrends.com/corner. Thanks, Anthony.
Hey, thank you. Fantastic as always, Price. Thanks for sharing your proven process and for giving our audience that exclusive offer.
My pleasure. Thank you.
Appreciate it. Thank you. Our next session focuses on two things. Every trader battles discipline and consistency. Please welcome Stephen Tremper, who will be discussing discipline manager and trade management with Helix. Stephen's going to cover how to set hard daily and weekly drawdown limits, how to lock in goals using his dynamic drawdown approach, and how the Helix system enhances trade management from start to finish. Be sure to grab Stephen's offer from the chat, and it could be, well, just find it in the chat. Sorry so much. It's all yours, Stephen.
Thanks, Anthony. How are you doing? Can you see my screen and my mouse hovering around here?
I see your screen, but I don't see your mouse.
Oh, okay. You see it over here? I just gotta make sure I'm on the right screen here. You should see my mouse right here.
What we see is a discipline manager and introduction to Helix.
Yeah, but you should see the mouse. Hold on. Let me try this one. You should see it here, maybe. Do you see the next slideshow or the PowerPoint presenter?
Looks like PowerPoint. Looks like it'd be, oh, I see your mouse now. I saw your mouse for a second.
Oh, right here?
Yeah.
Okay, good. So I'm here. All right, well, thank you. Sorry. Well, thanks again for allowing me to introduce the discipline manager. Today, I want to just maybe split the time and just introduce the Helix a little bit. Some people have been asking over the months, so I thought I'd just throw a little dive into it, and we'll go from there. But I'm just going to cut the discipline manager one a little bit in half, make it a little faster for people that may have already seen that. But certainly, I'll give you enough information that if it's of an interest to you, we can move forward. My hope and intent is that it will, help other traders overcome the same struggles that I've had over the many years and still do. So I'm not gonna lie. I mean, still got the, the board trades and the FEMO and all that business. So we'll hopefully get through that. So in summary, what is and do you need the discipline manager? And I want to show you how you could establish your rules within the discipline manager and show and give you some examples of what happens after they've breached and how to download a discipline manager so you could use today, and then the special offer I have with Traders Corner, and then any questions and answers that you may have. First and foremost, I'm just a trader like everybody else, and I've been in the fire service for 40 years and I retired in 19. And I started, 10 years maybe prior to that, before my retirement, and playing around, dibbling and dabbling with, options and whatnot. But then I ended up in futures, which I kind of like, actually. And the options are just a little over my head, too much math. So the futures, it's just more natural for me. But regardless, it doesn't matter what you're trading. So now I only trade futures. But again, I don't want to come across as an expert at all. I'm just a trader like you. I'm not at the pit. That's just me, a pitcher taking a tour at the pit with some other guys with Top Step, and we were just there. So that's a picture. I just throw it in there. Government required disclaimer, as we all know, with the potential risk and hypothetical performance. I think there's a disclaimer at the beginning, so I don't have to go too much on this, but you could take a picture or pause the video if you're watching a recording and read it from there. So money management statistics and why do traders fail? You can Google it. There's a big percentage of traders that fail, and it's a lot has to do with the limit of losses and the margin you have over trading, which was my big mistake I had early on. I mean, I would just take so many trades. I think it was because of the fear of missing out. It's going to go without me. And it really has to be, especially for beginning traders, it really has to kind of, you have to overcome that. We're not traders, we're waiters. And you just have to wait. And the discipline manager cannot help you with your philosophy, but it will help with your discipline, and that will lead to a healthier philosophy in time with practice. So you basically, what you need to do is protect yourself from you. I think you, as an independent trader, are your worst enemy, to be honest with you. And that's why the discipline manager, I kind of came up with this many years ago, and then Ninja asked me if I'd become a vendor on it, and I did, and you know, it kind of went from there. And apparently I'm not the only one with the problem, so it seems. So you have to kind of consider it that you are the CEO of your trading business, and you are going to delegate your rules as the CEO to your discipline manager, and you're going to have the manager monitor your trading employees. Now, it just so happens the trading employee is you. So not only you are the CEO, but you're also the trader. So you have to kind of switch hats. You have to put your mindset in as the CEO. At the weekends or after trading hours, you evaluate, decide what you want to do, and then you give these rules to the trader, and you say, trade my rules. And if your trading employees, basically you, get out of line and start overstepping their bounds and over trading or whatever the case may be, the discipline manager that has been hired by you, the CEO, can control that employee who seems to have an issue. At the following CEO meeting, basically the next weekend, you could reevaluate your settings, reevaluate your numbers and your stops and whatever statistics you want to look at. That would be the proper time to do it. And then again, when the next week starts, you then again set up your discipline manager to follow those rules that you've accomplished, and then the trader, meaning you, follow those new rules if any are going to be set. What you don't want to do is you want to get away from just the, you know, over trading just because the revenge trades. We've all been there, but you can really get into trouble if you're doing things in the heat of the moment. And by having the discipline manager looking in the computer and just knowing what you're doing, it's just going to tap you on the shoulder and say, hey, you're in a timeout, or no more trading altogether because you've exceeded it. So setting your money management rules. The discipline manager is designed to allow you to set your own hard daily and weekly drawdown limits along with your goals, and then rules for those goals once you meet your goals. Now, if your hard drawdown limits are hit, then you're done for the day. I mean, that's your rule. So it won't let you take any more trades and you're done. Once your daily or weekly, whichever the case may be, once your daily or weekly goal is hit, then you can continue to trade, but never giving back more than your set percentage or the dollar amount that's been established by the big guy, the CEO. And if you do trade those and you give back a little bit too much, then you're done there. At least you're not leaving at the end of the day in the negative, you know. So based on your numbers and on your rules, and you are the one that sets the rules. And I'll show you how to go through those with the settings. And this is called your dynamic drawdown limit, and it's based on your account high for the day or the week, whatever we're talking about. And then the message boxes pop up if your thresholds have been breached, and they'll also tell you that your goal has been established because now you have new rules in place. Once you hit your goal, there's different ways that you can set what happens after the goals. And let's assume your drawdown warning, and I'm just going to have these numbers set for, let's say, $350. So your drawdown warning is set for $350, and your hard halt is set for $500, or should I say a negative $500. And once you close your order or breach that $350, that warning, the discipline manager will give you what I call a circuit breaker. And that's for 15 minutes. It's set, it's a 15-minute timeout. It's kind of based on the market, whatever. And it just gives you a chance to kind of clear your head and, you know, go walk around the block, go get a drink of water, whatever it might be, and think about it and come back with a mindset change. And then if you continue, now you come back from that little break and you say, okay, I'm good, but you continue to do what you're doing and you actually hit a drawdown halt because you've gone down to your 500 and it's been breached. At that point, it's not going to allow you to trade again. Now, there's a couple things. You could put a limit order on there, and a millisecond later, it's going to come off. And you could put other types of order. Now, if you try to fake it out with a market order and say, oh, I could be faster, so you put a market order on, and boom, you're in. But a millisecond later, the discipline manager sees that, and it takes it right off, leaving you with slippage, commissions. Obviously, it's not going to allow you to do it. So you're done. So it's all you can do. So let's not talk about the negatives. Let's move to the more positive things. So now you've hit your goals, and you've whatever the goal is, you've reached it. You get a little pop-up that says, hey, congratulations, you've hit your goal. So now what a couple things are. You have, depending on what your rules are, you have to obviously know what your rules are. And some people have 0%. I don't want to give, I'm done. I hit my goal, I'm done. I'm not trading anymore, so I have 0% give back, and that's it. If you try to put on another just to finish the move off, it's going to take it right off, and you're done for the day. You can go start day drinking or something. And then the second option you have is you can continue to trade, but giving only a certain percentage back. And again, that's based on your rules. So if you want to give 50% back, and that trails too. So as you've hit your goal, let's say $1,000 to make it easy, so $1,000, and you're going to get 50%. Well, you could trade $500, and if you breach that $500 mark, then you're done. It'll stop you. But let's say you hit some more trades that were winners, and now you're up to $1,200. Well, now 50% of that is $600, so you could trade $600. And there's another level, but I don't recommend changing to another level until you decide you want to change your percentage. So if you go all the way up to $10,000, do you really want to give 50% back? So you probably want to change that to maybe 0 or 10% or something like that. So you kind of get the idea there. And the dynamic drawdowns are just that. They're dynamic, as I mentioned. They climb up, and as your balance exceeds your goal, let's assuming the goal is 500, your initial drawdown is halt is at 50% of that is 250. So your balance grows, as I just talked about. It just keeps going, and then you could change the percentage on a level 2. And I'll just show you the settings here, what that looks like. So over here, you have the account, and this is on a playback account. So you've got a drop-down caret down there, up there, and you would have to set these rules up for each account. A lot of people nowadays over the last couple of years are trading multiple accounts with the prop firms, and so you could do that. But keep in mind, this could be set on your leader account if that's the one making the decisions. Or you could set it up individually on the account. Maybe one set for micros. You obviously wouldn't use these numbers if you're doing a micro account. And then, so you might have one account set for a minis and another one set for micros, whatever the case may be. Each rule has their own, and you'd have to hit apply down at the bottom down there for each of those accounts. But if this is just a single account, or maybe you're playing around in playback, all you need to do is just one account. And once you have your numbers that you're really satisfied, you can just hit set as default, and it will automatically save them. So the next time you go to a new account, it'll just plop in with those numbers, and then you can just change it manually from there. I usually use the 999 for things that I don't want to apply. So for instance, right here, we have our warning is set at 700, and our goal is 1,000. Our hard halt is $1,000, and you've noticed here the trailing stop that was added a few years ago, because if you went up to $999, you would still be able to trade up to $700. I'm sorry, if you went up the goal. If your goal is $1,000 and you reach $999, you would still be able to trade, technically up until negative 100, but by using the trailing stop, it's going to move that $1,000. So if you go up to $500, you haven't hit your goal yet, but you hit $500, well, this is no longer going to be $1,000, it's going to be $500. It's $1,000 spread, but it's negative $500 in your account because you've already gained $500, if that makes sense. So I always like that one to be on. By default, it's on, but you can uncheck it. And that way you could just have a big spread if you wanted that. And now once you do hit your goal, so now you've breached $1,000. So now we have it set with the warning is 50%. And so you'll get a little timeout if you give up half of that. And if you give up 75% of that, then you're going to be at a hard halt and you're done. And you're not going to go home with 1,000, but you'll at least you're not going to be in the negative at 75%. You'll be okay. Some commissions, slippage, whatnot. So you should still be in the green a little bit, but you'll be frustrated. But it is what it is. So then, as you go and you get up to $1,500, you can see the percentage comes down a little bit. I don't want to give, $1,500. I'm not willing to give 75%. So you come down and you say, I'm only going to give 25%. And it just gives you a little bit smaller number, but it's what you're used to anyway, because you only gave yourself, a little bit now. Now you're in the money, so you want to protect a little bit. And the same scenario goes with the weekly levels based on the Monday through Friday numbers. So if you have a big blowing, Monday is blown off, it's a $1,000 loser. Tuesday's $1,000 loser. Then using the 3,500 Wednesday. And then come Thursday, if you have another loser, you're pretty much done for the week. So you don't really get that too much. That's it. Oh, so moving on down here. So stats are down here. Just tells you where you are. And so a couple options here are, because of the prop firms that have come out, some prop firms use unrealized P&Ls. So if you want to follow the unrealized P&L numbers, you would have to click that manually. Otherwise, it's going to be based on realized P&Ls. So once you get out of a trade, it does the calculation, and whether you made it or you didn't make it, and if you made it, then it's going to give you a rather you're done or a congratulations, one of the two. So that's pretty much it there for the settings. So how do we get this? So this is the website. One of the things that I had to have with Ninja is I had to have the website, which I happen to have anyway. So I said, okay, we'll change this around. So if you go to the algos and indicator, these are tools that are all ones that I've made for me. I am the company. I mean, it's just me. I'm a single trader, and these indicators are just tools that I use and have used. Some more than others, some I don't even use anymore. You have them, you make them, but they just don't turn out the way they are. So I would recommend cruising down here. This ATR strategy was the first one that I did, and now Helix is the one I'll introduce. It's a little bigger and better. The indicators, there's a longer list that goes further on down. You can't see it, but this is the projections, ATR projections, which plots where your projections are, or your average true ranges are on your chart. This one will actually trade it. That's a strategy, and actually trade it based on your triggers. I don't use that one anymore. I mean, basically everything's wrapped up in Helix, but it's available. There's no charge on it. I've got a few people out there playing with it, and they have for a while, and have at it. There's a few of them in here that are free. This one here, I think this one is too, but this one just plots on the screen. And then the discipline manager is the one we're talking about right now. And then the price extensions, you can read about that one. You can read about all these ones and the ones that go down further on, and you can see. But this is the one in question that we're looking at right now. Discipline. So when you go into there, currently we have a subscription using PayPal at $49.95, and there's an annual fee at $397. And the reason why I'm more for the lower subscriptions is because in something like this, you don't need a lifetime. I mean, you shouldn't need a lifetime. I mean, the hope is that you don't have to have it for a lifetime. I've had people that, get it for a couple months and then they turn it off. With PayPal, you control it all. You go in there and say, you click it off and you control it, and it'll stay on. It'll still keep doing it every month until you turn it off. So, you feel you're comfortable, you don't need it. So you just go in and turn it off, and there's no feeling of, oh, I've got this indicator that's been on my shelf and I haven't used it and thousands of dollars on, and I just had a bad taste of that back. I can't tell you how many indicator strategies that I have that I don't even use anymore. You'll get a 14-day free trial when you do. I would not recommend activating your PayPal subscription until you've played with your trial for 14 days, only because why not? It's free. I would do it in market replay, maybe on the weekend or whatever the case may be, on a sim account, just so you can actually purposely break some rules so you can see what happens. The monthly and annual subscription options are available, as I said above, and PayPal makes it really easy to cancel. If you don't like it, let's say you've had it for a few months, just go ahead and cancel it. No big deal. No harm, no foul. But for you today, with this special event that we're doing with Traders Corner, I've cut it down to 30% off, which brings it down to $34.95. And as part of this, webinar, it could be downloaded. Again, same thing. I'll show you how to download the button on the Tremper discount code page, and it's a special button. If you go to the regular button inside of the discount manager tab, then it's going to be the regular price. I'm going to show you where the super secret button is for the 30% off. And if you're looking at this on a video later, it won't be there. It's only going to be there for 5 days, and then it's going to come off. So I would not, as I say, I would not play around with it for 5 days, but keep in mind the normal 14, this will expire prior to the normal 14-day trial period. So don't get hooked up on that. This is a 5-day special. If you go all the way to 14 days for a free trial and you decide you like it, this will be gone, and you'll pay the full price. So I would recommend just trying it out for a few days. And if it's something you want to like, go ahead and do it, because this subscription will last. And even though if you turn it off, 6 months later, and then you want to get back on again, there's no guarantee that one, there's a sale, or two, the price is going to be the regular price. So if you go to, so here's where the super secret code is. If you go to the discount codes, then you will see these change all the time. These are just prop firms that have some offers going on, but down in the webinar specials is where we have this code. And you'll find it down here, the 30%. It'll show regularly $49.95 or whatever the price is at that time. But this code, by using this code, it will go ahead and initiate the PayPal tab or your PayPal account, and you'll see the proper price should be right there, and you can double check it. So, and then that will take an effect, right away when it's over. So then the only other thing I would need is just go into the contact area and just put your name and the little contact form, because I will need your third-party ID, which is under your control center on Ninja, and you just ask for a third-party ID, and I can help you with that. There's a little video on how to do that, but I would need a contact information. So that way it'll continue to keep running when the time has expired. So other than that, I just kind of wanted to do a brief orientation on the Discipline Manager before I got into Helix. And if there's any questions on that, I could certainly jump in and answer a few, but I've done the webinar a few, and I know it's been around quite a while, so I think people already have the concept on it. But what you don't have is, or don't know of possibly, is the Helix. And Helix came from, I put two of the, I put a strategy and a indicator together, and I married them together, and that's how I came up with, it's technically the double Helix, DNA, and so that's how Helix came to be. But it's set up to be manual or automatic trading. I want to add a third one in there at some point, automated, so it's got a little of both, but right now it's just manual or automatic. And again, it's like anything, once you set your rules up, then it will follow your rules, and it'll rather take trades or at least let you know. If you're doing it manually, it'll at least let you know that, hey, your rules are all set up, and this is, pay, and there's an alert, say, hey, go, if you're doing it manually, go ahead and do it now. If it's in the auto mode, it's just going to do it. And I'll show you a 20-second clip. This is 8 minutes of NASDAQ. A couple years ago now, I guess it is, 8 minutes of NASDAQ all rolled up into 20 seconds, the first open. And you can see how it, manages your targets. And if you notice the stop really quick, how it trails up, and it goes to break even. So all those rules in there are however you set them. And that did $1,000 in 8 minutes of the NASDAQ open, and all summed up in 20 seconds. And Am I cherry picking? Absolutely, I'm cherry picking. It doesn't happen every day. I wish it did, but that is basically in the auto mode down here. I had it active. I told it I don't care what direction, and it just went and did it. So that's in the nutshell, that's Helix. So how do you know, what are some of the settings in there? And I kind of go through those, but there's a lot of settings, and that's, you know, I'm trying to narrow some of those down, but there's a lot of settings because there's a lot of things that you have options to do. Do numeric groups that are all numbered are more plotting things, and, you know, background colors and EMAs. There's different types of EMAs. You could do different time frames in there. Basically, you could, you know, pick what you're trying to put in there and make whatever makes your rules as far as you know, your background things. And then the alpha part is more of the trading things, like how many contracts you're going to put on when you click the button and go, or if it clicks the button to go, how many, you know, how many quantities, are there any offsets, what's the targets, what's the stops, how do you want to trail if you are going to trail. You don't necessarily have to trail, but that's all. And there's 4 sets of trailing management in there. You know, obviously the initial stop is 1. You got the break even. You've got the pivot trailing stops. There's 2 sets of those, so they could be changed. You could even do them pre. So in other words, you want to find a pivot prior to your open and put your stop there. You could do that. And then as it's going in the trade and maybe you're in the money, you could switch it so when it gets so much in the money, you want to start trailing maybe wider, maybe smaller, whatever it may be. And there's some additional options in there for other miscellaneous things. So there are a lot of settings. At first, I could certainly see that it gets overpowering. You look at all these like, oh my gosh, what do I do? But you know, once you start playing around with it, you can. And you'll start to understand it, and the people that have been doing it for a while, you know, it just kind of comes second nature. And there's videos and all that, and we have templates. I mean, I've got some templates that, you know, I'm constantly working on templates and making them work, so you can just dump them in there. There's a lot floating around on the Discord channel. They're unofficial, so I couldn't tell you if they work or not, but I do know there's people using this, and I don't know how they're doing it. I mean, they don't really, I don't know if they're doing it manually or automated. I don't know. I just know that they're out there working it. The few people that do join our trade group and that come in, it's all free. Discord is all free. You just come on in. You know, for the people that communicate, I have an idea of, you know, what they're doing and what they're, you know, what they're going after and their style, if you will. So what's like the buttons? You saw some buttons down there. There's the manual mode. They each have the pause. So for like news or something like that, you don't have to shut down the strategy. You just hit pause in the auto mode. And then in the manual mode, you obviously probably don't really need pause, but just in case you accidentally click something, it's nice to have the pause on there, but until you click something, it's not going to do anything. You've got the enter on an up bar or down bar on the manual mode. You've got synthetic data series. I call it synthetic because it's not the time frame. I usually use a smaller time frame, especially with NASDAQ. Any of them, I use a smaller time frame, but I don't trade on the smaller time frame. So when you see the background color that's green or red, that's at least my templates anyway, that's based on higher time frames. Even though I'm seeing price movement on a smaller change and whipping around back and forth, the higher time frames is what I'm really after. And when things line up on the higher time frames or the synthetic data series, that's what I'm looking for. And then you could use the smaller time frame to kind of just get in where you want to get in. And in the auto mode, I mean, all those are set up. It's just that they're all automatic. So, you know, you could have offsets and things like that, or depending on how you want to get in, you could certainly do that. Here's just a picture. The picture on the right and the picture on the left is auto mode. The picture on the right is manual. You can see this one is pause. So when you first turn it on in the auto, it'll automatically turn on in the manual mode. That's just the way it's designed. And then you have to manually click auto, and then you manually have to click pause. There's some safety reasons for that. Through experience, that's the way I've designed this. It's for me, it's for my trading. It just makes it so much easier for me. When I click a button and you let it go, I always monitor it, obviously, but it's just nice to see things working in place and going from there. The manual mode, you have some options here, a little different options here. On the auto mode, you could just say long or short if that's what you want. In the manual mode, you could just say, okay, I want to go in this area, but I want to do it on an up bar. So you can click up bar and it'll come down, 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 and boom, once you get an up bar, you're going to be in. And that's how that works. Let's see, what else? Execution types. There's multiple execution types in here, and then they kind of go with the offsets. That's basically the starting point. Once you, I'm assuming you have now your background color matches and it meets whatever criteria you have in there, and so now we're ready to execute. So how do you execute? Well, that all depends. There's the entry zone itself. You could move the zones in different areas based on offsetting. If you want it to, if you're requiring it to pull back to a certain area, there's the intra-bar. So during the intra-bar, if it fluctuates back and forth, if you want to get a wick, let's say you want a minimum wick, so you can mandate that there's a so it just won't get in right away as soon as it turns green, or it'll mandate a wick. So for instance, right down here, it turned green. Well, if you had no wick or no minimum entry, then it was just going to get you in down here. Now, in this case, it was okay, but you know, it doesn't always work like that. So if you were asking for a minimum wick, it would get you in like right here on a pullback if you had one wick. Now, if you're requiring that if you want to get in on this moving average, then you wouldn't have gotten in until here, until it actually touched. So it all depends on how you want to do it. It depends on your, you know, you're looking for a trend trade. If you're looking for a trend trade, we have to establish the trend, then we can jump in. If you're looking for, you know, more of a reversal type situation, then you might want to get in right away. So of course the background colors would be green over here if that's the way you set it up. So again, it's only, and in the future, I want to have multiple settings, if you will, where you could have multiple templates at a time. So you could have a reversal, a trend trade, maybe a breakout settings, you know, and then as long as you're flat, it won't trade against you. But as long as you're flat and there's a setup, it'll take it. Or if it's an add-on, so let's say you get in on a reversal and now you're in and you're trailing it all the way up, but a trend trade sets up. And if you have buttons checked that allow that to take it as long as it's in the same direction, it will take the trend trade and basically add on in addition to the one that you're already in, as long as it's going in the same direction. It's not going to fight and take you out. So that's the future. That is not available right now. Currently, right now, it's just one template does it. So I get kind of frustrated. It's like, oh, I know it's a beautiful trade, but it's not the trade that it's not the rules that we have here. Now, of course, you could override it and just go in, but knowing that it's not the setup. Otherwise, you'd have a green background. If you had a green background, then it met your rules. Now it's just a matter of how you want to get in if you're in the manual mode. So hope that all makes sense. The trade management part of it, as I mentioned briefly before, there's different styles, the initial stops and the move to break evens and the auto trails. There's all kinds of, if you're familiar with an ATM, it's similar to that. Well, it is, in essence, it is that, with the exception of it's just designed a little bit differently, but it is. When you get to a certain point of your trade, you're allowing it to trade or to trail so much. And then when it gets to another part of your trade, when it hits that area, then it changes. And then when you go up even more, then it will change again when it hits that third level, if you even want it to hit a third level. Or you might want to make it tighter. You might want to just open it up and let it run from that point forward. Just stop at that level, and then it just keeps going, and then it'll just go to the pivot trailing stops if those are on. Pivot trailing stops is what's shown here. Right here, you come down, you retrace more, and then when you go back in the resumption of the trend, boom, it'll find it and put it right there. It'll come down. This one won't qualify because you have a minimum requirement of a pullback of whatever that might be. So it's coming in, doesn't qualify. This one, let's say, qualifies. Maybe right here it qualifies, or maybe here it qualifies. Whatever it does, it'll find the end of that pivot. And when it resumes, whatever number is set, When it resumes, it'll find that pivot and it'll take that stop and jump it down here and jump it down there. And apparently these settings would obviously, so you could see right here, this qualified. So, and this one didn't. So I could tell you right now, it's like, you know, two bars or whatever. I don't know what size this is, but 2 bars is your size. So right here, you met your trailing stop requirement. And so it went all the way up to here, and now it triggered here, let's say, or whatever it was set for, and then it brought it down here. So there it is there. This one didn't qualify. This one you would have gotten out on because you would have been popped here. So now you get in again. It's trailing. This one doesn't qualify, or does qualify based on your numbers. Anyway, you got the idea. So it just keeps hopscotching down. That's what I call the pivot trailing stop. The chop box, technically it's a chop rectangle, but chop box sounds better. You know, we've looked at RSIs and ATRs, choppiness index, all those other kind of things that everybody looks at for chop. But we right now just put in pivots, and based on, doesn't necessarily have to be this chart, but based on whatever chart size you determine, it will find the pivots of that. And if it starts to see a pattern of pivots of that size or less than that size, it will start forming this, what we call the chop box. And once that's in there, it's kind of like a no trade zone, which we have in other places, a no trade zone. It kind of creates a no trade zone if you have that set. Now, it'll trade in there if you don't have it set. But if you have it, I only want to take 1 trade or 2 trades or 0 trades, once it recognizes a chop box, by default, it's 1 trade. I'll let you try it 1 time. And if it's so you're in typically like you would normally be in anyway, not knowing it's a chop box, and then now you're in and it turns into a chop box. Well, it's, you know, it's not going to allow you to keep taking trade after trade after trade. So if you have it set for 0, it won't take any at all. Add-on indicators. There's a few inside of Helix that are, you know, part of it, if you will, that are just included, that are separate indicators. There's also other indicators that I've had that are good to work in conjunction with this target zones, and I would recommend you go into the list there and checking them out. There's a small little video on each one of them. The Discipline Manager, which I've already covered, works well on any of these. That'll work with anything, just because it doesn't monitor your charts or anything. It just runs in the background into your account, and that's all that does. And then the status box, you might have seen that on the chart there, just kind of tells you where you are as far as your, you know, at a glance, your MFE, your MAE, and, you know, how many contracts, and your P&L based on the net P&L, assuming you have your commissions on. There's supply and resistance lines that you could use. I don't use those much because they just didn't turn out the way I kind of wanted them. I kind of moved off to something else that I'm working on. Higher highs, higher lows, you know, lower highs, lower lows, all that kind of business. Those are some of the things, and you can throw on others. You know, Ninja has a whole bunch of indicators. You know, you can throw on Keltner channels or Bollinger Bands, whatever. So how do you get this one? I go back to the same place, the algos and indicators, and you can come down to click that one, and then it takes you to the Helix. So you select Helix, and in here is your download files. Now I've taken away the older version. This is an older screenshot. So this one's gone. This is the older version. It's still available because I use that version. I have one computer on this version, another computer on this version, but I like this one because I don't like signing in constantly. So I still use this version. And so if you do want this version, you have to let me know and I could just send it to you manually. But for the most part, everybody's using the most highest version. There's some troubleshooting and some things like that. So that's the download files. Here's some videos. There's that 20-second video I showed. If you want to see it again, here's an introduction. This one here shows some settings. It's broken down. It's about a 2-hour video, but it's all broken down into segments. So if you're interested in, you know, you're dealing with your stop management, you don't need to see all that. You just click the index and it'll take you right to that spot. And then you can learn a little bit more about that area there. What else? Other indicators we talked about. That's about it. So right now, the strategy is 0. So how do you beat that? So right now the maintenance fee I've dropped down to $47.90 a month, and there's reasons for that. It's an older fee that we had a long time ago, but I'm just doing a quick maintenance. And again, the same 5-day thing. I would recommend downloading and taking a look at it. Maybe watching some videos. There's tons of videos. If you go to the YouTube channel, maybe subscribe to that, so that way when I do broadcast something, you'll be able to see it. Anybody's more than welcome to come into our trade room. I don't show Helix in the trade room, but we do have some trading going on in there. You're more than welcome to join that. But this is $47.95, and there's a lot of settings in there. I would recommend that we check it out and see if it's something for you, because we could try it together. We can try to to work out a strategy, or turn your strategy or rules into the strategy. And other than that, I think that's really about all I've got for that. And I think I wanted to keep the 2 of those into the time slot that I had, which I think I'm good on. I have a few minutes if there's anybody other questions, or if Anthony, you have got any questions. Now, I don't even know where questions would be here. I'm looking in the chat, and I don't see anything in there, and I haven't seen anything in there for anybody, so I think I'm in the wrong spot. But
I don't see any questions.
Let me look. Am I in the right spot, Anthony? The chat area?
Yeah, that should be
Okay.
it. And then
Okay.
I don't see anything.
Okay, good. Okay, because the only thing I see is from somebody a while ago. So there's somebody that's fine though. So other than that, that's all I have. If you have any questions, if anybody has any, but the next presenter is going to be due up in a few minutes anyway, so I could scroll back if anybody does want to see anything again. I'm going to show that 20-second video again because I love it. Where is it? Right here. Yeah, right here. So this is Helix in action. This was live on one day. It's timed off, and there, now it's timed on, and it's going to take the trade depending on which way we're going. And that's an entry zone right there. Those are the entry zones. So as I mentioned, there's a few options available, but that happens to be the entry zone. So pretty cool. And then you've even got the target zone up there also that I happen to be running. I didn't even see that, but let's see, is that even on there? Yeah, I don't see it on there. So it must be off. Anyway. All right, I think that's really about all I've got then, Anthony. If anybody has any questions or wants to reach out, I'm very easy to get a hold of. And you can email me at info@tremper.com, or just go to the tremper.com. There's a contact page, or if you go into the community, there's Discords, there's an invite in there. There's, what else is in there? The trade room links, social hours, things like that are all in there, if anybody needs to get a hold of me. So other than that, I am done.
Right. Thank you, Stephen. Incredible work. You've given our audience an edge, not just in strategy, but in mindset. Appreciate the powerful resources as well. If you're looking to trade volatility on your schedule, our next presenter is the one to watch. Leigh Goldstein of 10-Minute Trades is back with Extreme Volatility, a management trade tutorial. Leigh will walk you through this, through his magnet trade setup, appointment-based trading style, and how to plug your favorite indicator into his proven framework. You'll find Leigh's offer either in the chat or on his slides, so pick up your phone and take a photo if you like. Leigh, it's all yours.
Okay, so I need, oh, there you go. Okay, thanks. That's what I needed. Let me get my slides all cracked up here. Okay. You should be able to hear me. Yes, I hope. Anthony, can you hear me?
Yeah, I can hear you. I was just looking for the audience response. They're saying yes.
All right, thanks. 2 more seconds, we'll be ready to go. There's my screen. Okay, we look good. Okay, ready to go. So thank you very much. Like Anthony said, my name is Leigh Goldstein. I'm the trading director at 10-Minute Trades. Give me 2 more seconds. I apologize. I just want to make sure that I can see any questions that come up, and I just have to get that screen. So give me half a second, folks. I apologize. I'm seeing the chat, but I'm not seeing the questions for some reason. Usually, Anthony, I see him, but for some reason today, I don't see the tab. Is it not there for some reason?
It's possible you might have it already open.
Okay.
And then sometime there should be like a little box that says questions as well. If you click
Yeah.
on,
Yeah,
if you
no, definitely. I don't see it. All right. If there's any questions, maybe you could relay them to me.
do you
I
see
don't
any?
see them.
Do you see like any red with a question mark as well, or no? On
No,
yours?
you know, it's strange. I mean, I
That
used to
either?
go to webinar a zillion times. I don't see the folks that are here either. So it's like
Oh,
something
okay.
not quite right in the setup. But I see half of what I'm supposed to see and half of what I'm not.
All right,
But
I'll keep an eye out.
okay.
Yep.
So I'll start anyway. It's not that big a deal. So I want to thank you. I really always appreciate that you invite us to be here. And today, definitely going to talk about the extreme volatility that I would say, fortunately, has been getting reduced a little bit. So we are talking about spelling things properly, like magnets, not magnets, but magnets, and reverse continuations. Setups for volatile markets. My name is Leigh Goldstein. I'm the trading director at 10-Minute Trades. Please keep in mind that any of the trades that we're talking about are for educational purpose. It is possible to lose money trading futures, so please always trade carefully, always have a plan and think about what you're doing. Don't just jump into a trade randomly expecting to make money. You got to really think about what you're doing. It's important. And the system that we use is called appointment-based trading. We trade using the NinjaTrader platform, and we trade futures. So a lot of people sometimes get confused because we have a lot of really interesting things that we do. And one of the most interesting things is we trade selected earnings, stock earnings, but we use futures for it. So traders who see us for the first time, they get confused. They go, what do you mean you trade futures with earnings? Well, instead of using the actual stock price, we're watching the stock price, but we're trading futures. So for instance, next week we've got Home Depot, and we've done a lot of research and studying, and we know Home Depot is going to move the YM. So we trade the YM futures on Home Depot earnings. And that's what we mean when we say we trade futures. And we trade futures for everything we do. News trading, event-based trading, that is the basics of what we are. And, you know, I was thinking today, maybe I'd change things up a little bit. You know, why should you even listen to me? What do I have to offer? What do I have as a trader that you might want to listen to me? So, you know, I got started doing this many years ago. I've been working with 10-minute trades at this company now for 8 years, which is a lifetime in the trading market. Most people jump around a lot, or, you know, you're dealing with people that own their own companies, write their own software. But I've been with 10-minute trades for 8 years, which is a really long time. And I've seen the company go from basically a hobbyist company to a very professional trading company that has lots of great setups for trading, especially the current markets. We have a system and we have setups that really work and are excellent to trade in all sorts of markets. But, you know, why should you listen to me? I mean, I've got more than 15 years of experience trading the news. I've studied the news. I've put in my thousands and thousands of hours studying news events, and I really care about helping people to succeed and learn how to use the tools that are out there so you can have great outcomes trading events. Also, you know, in this day and age where everyone is trading prop accounts, yes, you can trade prop accounts and you can trade news. And I had just recently funded a Apex account last week, and you can do it, okay? You can trade Apex, you can trade Leigh, you can trade quite a few of the different prop accounts, trading news, and we have lots of members that are using many of those companies to trade. It's understandable how nowadays people want to use prop trading because you don't have to risk all of your own cash. Deep down in my heart, I love cash the most because let's face it, you have a $1,000 winning trade. At the same time, the next day you can take $800 to $1,000 of that money out of your account without asking anybody for permission. So there is a really strong reason why it is still very valuable to trade cash. And I think that everyone should fund an account at least once in their life, learn to trade cash. It feels different. It's absolutely different than trading prop. And it really teaches you I think the best of the best habits. There's one really negative thing I think about trading with prop accounts is sometimes it can create some very bad habits. Because let's be honest, if you blow up a prop account and it only costs $39 to reset it, that's a lot different than losing $1,500 in cash and having to tell your partner, hey, I had a bad day at the office today. Very different. So there is great value in obviously all the different methods, but there is nothing wrong in this day and age with still trading cash. Okay, we have a system and we have elements that make up our system. Our software, JOBB News Trader software, installs into NinjaTrader. And as part of the strategy that our software is, we have reversal continuation setups and magnet trades, two of my favorite setups for trading in these volatile markets. You know, when you're in a system, when you're in a market, when you're looking at charts and one tweet can move an instrument that you're trading more than 100 ticks, you have to have setups that are safe so you don't get blown out of all your trades. What I'm finding very interesting also is many of our normal regular setups are working really well also in these markets. I'll show you a couple of those setups before I quit for the day as well today. So we have a system, and our system has 5 important elements. The weekly market mover, affectionately known as the WMM, our daily market movers, which are our daily trade reports. The weekly market movers is our weekly schedule. It's free. It's available to anyone that wants it. All you have to do is go to our website, www.10minutetrades.com. Opt in for the free video, how to find 10-minute trades, and we'll start sending you the weekly market schedule. Every week, we look at all the important events that we feel will move the futures markets and we point them out. We also show on the weekly market mover our trade room schedule, which is our 3rd element that makes up our system. Our 4th element, of course, would be our software. And I give a special 5th element to our magnet trade software because I think it's such an important way to trade. And what's great about it is anybody can trade with magnets, even if you don't have our system. It's so easy to do. And in fact, what's really great about the 2 methodologies I'm going to show you today, you can trade them with any system that has simple chart trading. You don't have to, become a member of 10-minute trades, although we really help you to learn how to implement and find the best times to trade these ways. But what's great about these setups is any trading platform can trade these methods, and they're really simple and really easy to trade. This is the weekly market mover. This was actually this week's. And if you look at it carefully, on the top column, you've got the trigger time, which is the time of the event that we're trading. The trade room opens at the following time. That's in that next column. The actual name of the trigger, and we had quite a few interesting setups this week. We had the WASD grain report. We had something unbelievable not unbelievable, but very unusual that happened today. We were getting ready to trade the NOPA crush report, which was a huge winner last month, and we got to the trade room. Well, I was looking at we trade soybean oil and the futures, and before I got to the trade room, I noticed the chart was looking real strange, and it turned out soybean oil went limit down before our trade, and we weren't able to trade because the market wasn't available. That's what I call volatility. That's what I call unusual markets. Even though there has been a reduction in some volatility, we're still seeing really unusual trading conditions. And the two setups I'm going to show you today are great for any trading conditions. And that's why I love these setups. So this is our weekly schedule. We had Walmart earnings this morning, which was kind of wild to trade. We had Cisco yesterday, the API crude oil report, CPI and PPI, of course, are events that we trade. We essentially trade the news exactly at the moment the news is released, and with these new setups that we've added over the years to our system, we now also trade on the news, after the news, with reversals and magnets. So that's what I'm going to show you today. Our daily market movers, which is another element of our system. Like I said, we have 5 elements: the daily market movers, the weekly schedule, trade room access software, and the magnet. The daily market movers is a report that we send to our members the day before an event we're going to potentially trade. And it has the setups and information about the event so that you can get it the day before, so you can be prepared for the next events that we're going to trade. You don't want to, just walk into the trade room, especially with news, and not know what's going on. And on our daily market mover, we've got a small journal, sometimes up to 6 previous trades. Sometimes we might just have an extra setup that, because of the volatility we're seeing in these particular markets, we have special last minute setups, or it might be a 2-month recent setup. And that in particular is what we've been doing on the FOMC statement. We added what we call as a trap trade, a very specialized reversal trade. And it was a phenomenally successful trade on the FOMC statement, which just recently took place, just about a week ago. Then, of course, we have our news trader software, the magnet trade, reverse continuations. Our software is a custom strategy add-on to NinjaTrader. In the software, there are multiple setups. We have reversals, we have range trades. In other words, you can create a range based on time or based on graphical zones if you want to. And when the range ends, orders will be placed on the chart. And if you break out of a range or break down from a range, you can enter into your trade. So you can design your own range trades. Pretty much our software can be used very specifically for news trading, where the setups are quite specific, or you could design your own trades and be a completely discretionary trader with our software if you choose to do that. Our software can automate your entries, targets, and stops. It can semi-automate entries, and it can also be completely discretionary, because some of the events that we set up have buttons that appear on the chart, and to enter a trade, you just click a button and that puts you into the market. So our software is also a super ATM, we call it. An ATM is an automated trade manager. So instead, if you're familiar with NinjaTrader or TradeStation or other platforms, instead of having to write and learn their built-in little programming language, our software, you just enter numbers into our software and you can easily control how your stops trail, whether your entries are going to be automated, where your target's going to be, how big your targets will be, whether or not you might have brackets that you're going to create. So when we say we're going to create brackets, one of the big things about news trading is we put brackets above and below the current price. These little X's here, there are orders. Whoops. Those X's are the orders. When the news comes out, the market will burst up or down very often, pierce through those X's and pull you into a trade. Those brackets are completely adjustable by you. And of course, we come up with what the best brackets are by studying the events we're going to trade, watching the movement, and that's how we create our setups. So yes, when you trade with us, you could use Fibonacci's if you want. You can use all the normal indicators that you like, but we don't really rely on them as much as most other trading systems. Because think about what we do. What we do is a little bit different. For instance, if we're going to trade the CPI report, which we just traded this week, we're going to study all of the CPI reports that were recent, and we're going to look at the movement, and we're going to create our setup based on how that report moved when the news was released. Some of our reports are exploding breakouts, meaning they generally move in one direction and you make your money when the trade explodes, for instance, to the upside if the news is good, maybe to the downside if the news is bad, depending, of course, on the instrument you're trading. Then we have trap trades. Our trap trade is a specialized reversal trade. It's an event where we study the events, like I said, and certain events that we study have shown a propensity to reverse regularly. And they have particularly predictable bursts, so that, for instance, a CPI, well, for instance, this morning's trade, we had brackets, 55 ticks on our first bracket, and then we went up to 67 ticks on our second bracket. Normally, that's the type of movement we see in CPI, PPI today, and retail sales, and that bracket gets pierced, and then we expect a quick reversal. Interestingly, today there were like 5 reports all trading at the same time. And a funny thing sometimes happens when you expect massive volatility. Sometimes the opposite happens and you don't get filled. And we didn't get filled this morning. It was kind of strange, but it happens. So our appointment-based trading system, it's simple, it's time-based. You can schedule your trades on specific days at specific times, up to a month in advance. How do we find these events? It's very simple. We find our events on the various free calendars that are available, Forex Factory, investing.com. If you go to forexfactory.com, for instance, you'll see a whole week's worth of events if you press the calendar button. And we study many of these events and pick out the best of the best ones to trade. Also, all the calendars have a system where they show you, either with a color coding system or a number of stars they put up, what they think are the most impactful events. And then, of course, we double check them to make sure that they are correct. So why do I like appointment-based trading? I love trading. I hate being in the market for very long. I hate watching charts all day long. I found over the years that the less I trade, the more I make. Trading can be very boring if you're sitting at your computer waiting for setups. Appointment-based trading, news trading, the way we do it is very specific. We make a schedule and we know that we're going to be in the trade room at a certain time, and that's it. I don't spend my whole day watching trades, watching the markets, waiting for trades. So what triggers these appointment-based trades? It's really simple. High impact economic reports, GDP, jobs reports, PPI, retail sales. Trigger category 2 might be earnings. We trade tons of earnings. Trigger 3, market opens, market closes. Almost all of our members are working on market opens and closing trades. And we are always looking for new triggers, new categories. But within those 3 categories, there's hundreds of trades. and you can pick the best ones and pick the ones that fit your schedule. And then the best of the best of the best trades, we call them our family money trades, and we notate them always on our weekly schedule. What might be the best of the best trades? So if members want to just come into the room, maybe you'll trade just 3 times that week or 2 times that week. For instance, Monday, the WASD trade is a family money trade. Walmart was a family money trade based on opportunity, not so much on its past performance. We explain all of that. And then NOPA has been a family money trade, meaning it has been making money on a regular basis. That's ultimately, we have 2 rules for family money trade. 90% of them are trades that make money on a regular basis. 10% are sometimes trades that have been uneven, but have a fantastic opportunity for profit. Not so risky that they're going to blow up an account if it doesn't work, but a great opportunity for profit. And that's actually where Walmart fit in, because there could have been an excellent move because the market was really watching Walmart this morning. Unfortunately, it didn't have a great move. Their earnings were late. Everything that could not be perfect about an earnings trade happened with Walmart, and people didn't lose money. We just didn't have an opportunity that was there, and that will happen. You can trade, as I said, in a prop account or in your cash account. And here's how we trade volatility safely. The magnet trade is one of my all-time favorite trades. Anybody can trade magnets. Anybody can set up their charts in 10 minutes to trade magnets. Now, I don't want to waste 10 minutes of this webinar setting up the charts. I thought for a minute I would just show you how we set up our charts for the magnet and for news trading. But here's the deal. Look how simple our charts are. No Christmas tree lights, no setups and graphics that you can't follow so that you miss the trade. Really simple, really clean charts so that there's no doubt when to enter, when to exit. With the magnet trade, you can also, if you want to, use your own indicators and use our custom magnet feature to use your own indicators. But we set up our charts so that you have highs of days and lows of days, which is a free indicator in NinjaTrader. High of day, you go to indicators and look for current day OHL, throw that on your chart, and there you go. That's indicator number 1. Indicator number 2, everybody trades with them at one time or another, pivots. Put those indicators on your chart. Indicator number 3 would be the VWAP. Now, the VWAP, if you're a lifetime NinjaTrader member, customer, you get their order flow VWAP for free. Otherwise, NinjaTrader has a free VWAP indicator that we give to all our members. It's virtually exactly the same as the regular one that they give if you're a lifetime member. And then you may want to put, I like the net change display indicator. If you notice on my chart, down on the lower right here, there's a number, and that number represents how many ticks or points in the NQ were up or down since the market opened last evening. 30 points right now, so you can get an instant glance at the net change display indicator, which is free, part of NinjaTrader. Just install it, go down, slide down to net change display. The setup is real easy. We have a video that shows you how to set your charts up exactly like ours. And all you have to know is, am I going to show points or money or ticks? And where should I put that indicator so that I can see it without anything getting in the way? So we put it on the lower right, and bingo, your charts are almost 100% set up like ours. Add some volume. All right, a free volume up, volume down indicator. I haven't bought a single thing yet to set my charts up. And I also love the squeeze. Everybody's heard of the squeeze. You can find free momentum squeeze indicators, but there's also some very inexpensive squeezed indicators that are available for NinjaTrader. The squeeze is a great lagging indicator, but it's great for after the news, and it's really helpful. That's everything that we put on our charts for trading. Now, what is a magnet, and why is magnet trading so valuable in especially volatile markets? Well, magnets are exit areas on a chart that almost all traders look at, and that's why they're magnets. Who do you know that doesn't look at the high of the day and the low of the day? So what happens? Who do you know that doesn't look at pivots? You know, PP, R3, R1, S1. There's certain pivot levels that are really, really popular. Why are they popular? Because so many traders look at these same levels and put their orders around these levels that these areas act as magnets that pull price into them. So what we realized is over the years we watched in our news trading how these highs of days, it really started with highs of days and lows of days. That was our first magnet system setup because we noticed so many times after or sometimes right before a news trade, the high of day would get tested, the low of day would get tested. So we came up with a really simple methodology to trade that test. So think of it this way. A magnet is a very popular area on a chart, popular because dozens and dozens, thousands of traders look at these same areas. They place their orders around these areas. So all of that activity pulls price to those areas, and we designed a way to exit at those areas. And that's the key. The magnet is your exit. So we have a simple strategy. For instance, let me show you a magnet trade. And we also, what's interesting, our reversal continuation setup is really, in some ways, a simpler magnet trade in disguise many times. Sometimes you don't have time to set up a trade, but you might have a reversal continuation set up on your chart. A reversal continuation is as simple as putting a button on the chart, instant long, instant short. When you press that button, it puts you in the market instantly long or instantly short. But the key is, remember what I said before, the key is to have an ATM, a trade manager, automated trade manager. You don't want to just be throwing orders on the chart. You want to do it safely. You want to have targets, you want to have stops, you want to have risk defined so that you're not just randomly throwing orders on the chart. And that's what our magnet trade does, and that's what our reversal continuations do. So let's say you want to trade a magnet and you think that the high of the day is going to get tested again. If you go back a little bit in time, and I'm looking at the NQ right now, we already had a magnet about or before 1 o'clock, quite before 1 o'clock. The NQ has kind of been testing the high of day for most of the day. The perfect magnet, in my opinion, is always one of the first magnets. The first test, you know how they say when you look at indicators, one of the best setups is almost always the first test. Well, that's true with magnets. Or a great magnet is hours after a test was made, not minutes after a test was made. So you could see that the high of the day on the NQ hasn't been tested in many hours, all right? You got to really go back. It actually made a low and pulled off the low, and that was 5:30 in the morning roughly. Then you notice when traders started waking up, they traded the open, and then the NQ went on a very strong bullish run. 10:30, 11 o'clock, you could see it start really pushing up, and you could set that magnet trade up. So what do I mean by a magnet? I want to test the exit of the high of the day. I want to set up a trade that pulls me out at the high of the day. So let me show you a real magnet trade. Let's see what we got here. I did a couple. Here we have a gold magnet trade. You could see there's a bullish move in gold, right? Put your order on the chart, and this was not even using the software. This was just trading in a prop account, trading for a test of that green line, which is the high of the day. This is how the magnet trade became invented. We noticed these levels being tested. Now look, there was a little bit of a pullback, but then as you see, the bullish run continued, goes up, hits the high of the day. Very, very nice, profitable magnet trade. Another magnet, natural gas. In these markets, natural gas is a great magnet. Our magnet software has a button called the Magnet Auto Trade. If I press that button, the magnet trade can be automatic. It will put our orders on the chart when we reach the line, the thick line that is before the exit. Our orders are put on the chart, obviously, before you get to the exit. We can also move that line so you can adjust where you enter, and we can automate the whole trade so that we just press a button as the price changes. Well, let me show you. I'm pressing the wrong button here. Here we go. Natural gas, it's going to move down. It's going to enter us into the market. When it hits the line, there's that thick line is our magnet entry. And then what's going to happen is, in many, many cases, and natural gas is making a low of the day. This was a natural gas storage report day. At 10:30, the news came out. It was rather negative. It pushed down, and actually our breakout trade made money that day. Then there was a change in direction. It retraced about 50%, but this is a great magnet trade. We entered expecting that the price would continue on its way down. And watch, for just a few more seconds, it was very quiet, but then the price is going to start to move down. Notice our order is automatically placed on the chart, configurable. The default is the order is placed on the chart 3 ticks before the magnet. And you can place additional orders through the magnet and past the magnet, so that if you burst through the magnet, you can make even more money with a multiple order, multi-position trade. And you could see this trade was actually pretty slow. Usually magnets are quicker. They act as a magnet and it pulls the price. This one, it chopped around a little bit, and we waited, trading in our prop account, waited. Here it goes, boom. That's very often how a magnet trade works. It just pulls the price, literally like a strong magnet does. Let me show you one more, because I also want to show you reverse continuations. One more magnet. We love trading gold magnets. Gold is a great magnet. Also, gold magnets often happen all day long. Here we go. Let me speed it up. That's our software. We have a magnet auto mode. We have a thick line, which is our entry. You can choose long or short, depending where you are in the market. We get filled. We have an order past the magnet, and we have an order at the magnet. Gold pulls down, gives you a little bit of a scare, but not really that much. There goes the price, boom, hits the first magnet, pulls back, boom, hits the second magnet. This was a trade I actually took this morning. I forgot to record it, so I replayed it back, but I made about $250 on that trade. Perfect test, perfect magnet. The magnet software lets you also trade any indicator you want. So let's say, for instance, you want to trade a magnet of the VWAP. So we can put on a magnet trade very simply. Turn on the magnet. Instead of using our automated high of day, low of day, we have a custom magnet level. The VWAP is 21,363. So I just type that level in, 21,363. I can leave everything at the moment just set on default, apply it and okay it, turn my magnet on, and you'll see, here's my magnet order line, okay? This line is where I would enter for a test of the VWAP, because that's the area I want to exit the trade. So what we do to make it easy, just put your magnet on the exit and move it so that you can enter before you get there. Very simple. If I want the trade to be manual, I don't do anything. I just leave it the way it is, and if price goes down to that area, that heavy line, it'll turn purple, the entry button, and I can press the purple button. It'll also make a sound, and then it will put me in the trade. I could also set it to auto, and I can go and do something else. When price goes down to this area here, it'll put me in the trade, and then it'll exit according to my setup. If I have a 10 tick target, it'll take me out of the trade, 10 ticks for target 1. Maybe target 2 is 30 ticks. That's how you can trade custom magnet on any level. The other setup that we have that I love, and it's one of our best setups, is the reverse continuation. When we're trading news, one of the things that we see all the time are reversals and or continuations. You'll get an explosion, and that explosion will often completely change direction immediately, but sometimes it'll just pull back a little bit and it'll continue on its way. So we call that a reversal continuation. Takes about a minute to set it up. I'm going to remove my strategy and start from scratch. Let's say you just came into our trade room, you're watching the NQ, we're getting ready for a big trade, and you want to set up your chart so that you have the opportunity to choose a reversal continuation. This is how easy it is to set up with our software. Right-click the chart, click strategy, click news trader, click trade type, reverse continue. All we need for a reverse continuation is a position, and that position has number of contracts, a target. Right now I have 2 positions, 15 ticks and 40 ticks, 25 tick stop. All I have to do is change those numbers. If I want a bigger stop, I could make it a 40 tick stop. If I want a bigger target, I can make it a 20 tick target. I apply it. I choose the account I want to trade it in. For today, I'm on Sim because I'm not going to, I don't have a news event right now. And I label the trade reverse continue. When you label a trade and apply it and okay it, it shows up in the control panel with that label. All I have to do to turn it on is click the enabled box. Now you notice I have an instant long button and an instant short button. And if I want to enter the trade, all I do is click instant long, for instance. And now I have an NQ setup. I'm in the trade. I had a 20 tick target. I had a 40 tick target. I had a 35 tick, whatever the stop was. I think it was 30 ticks. I can always adjust my stops. I can always make my targets bigger. Obviously, if you get into a profitable situation, you can move your stop into safety and start trailing. It's a very, very powerful setup. For instance, the setup that we used on this now, it really looks like all of a sudden this market wants to go down, doesn't it? So if you think that's the case, go instantly short. See if it works for you. Practice in Sim. Get the hang of it. Look, the market's trying to pushing down a little bit. Maybe the market's going to go flat today. Reversal continuation. Hit the first target. Now, look, expand your target. Bring your stop to safety. What could be easier to make some money? Look at this. Trailing. I'm trailing manually. I'm up over $200 in this trade. Bingo. Trade's over. Very nice little trade. Reverse continuation. Let me show you a real live one that we took on the FOMC, which was a phenomenal, phenomenal trade. Not only did our breakout, did our trap trade work, we had a trap trade because we expected a giant reversal, but also our whatchamacallit, reversal continuation trade also worked beautifully as well. Hope I can find this video. What did I do with it? Here it is. Okay. So FOMC, we traded with a trap trade, which is a planned reversal. We assumed because of our testing, we had 2 years of testing the ES and the MES, and we traded both in 2 different prop accounts. Watch this middle trade. It burst. It's going to fill us, right? When it finishes moving. I don't even remember which way it filled. Here it goes. It went down, filled us long, changed direction completely. $850 trade in an instant. Then we took a discretionary short because the market was looking short after it failed to the upside. Hit my first target, and now I was able to trail for another $800 on the full size ES. Keeps going down and down and down. I was able to trail, like I said, using the reverse continuation. All I had to do to turn that trade on was click the button. I had it set up just like I showed you previously. I put in a target and a stop, and when I was ready, I pressed the button, instant short. It put me in the market. It put my stop on the chart. I moved my target to the low of the day because that to me was a great target. As the price kept moving down, we expanded our target. It looked like it might even go further than the low of the day. The reverse continue can really give you some excellent, excellent profitable trades. It's a great, simple way to trade super volatility because you can set this up, watch the market, wait for the news to come out, and then put your orders on the chart after the massive volatility is over, and you could trade the trend that often gets created when the news comes out. So let me show you a fantastic offer we would love to make for everyone. Okay, I've shown you all of this stuff. Here is the deal I'd like to make for everyone. If you would love to join us for all of our upcoming news trades, our earnings trades, I didn't even have time to show an earnings trade. Here's one of our members' screenshots, Amazon recent trade, $900 profit he made on Amazon. This one was 2 quarters ago, full transparency, okay? Trading in a prop account. One of our members, Ravi from Switzerland, made over $900. I have so many great earnings trades. You can come into all of our trade rooms, have access to all of our software, complete pro membership, news trader software, our daily market mover trade reports. You'll receive them the day before the event comes out, so you can look, practice if you want to. If you know how to use NinjaTrader Playback, that's one of the things we teach all of our members. Daily market movers, pro trade room subscription. You'll come into our trade room and trade with us. I show our members how to do these trades, how to set up the software multiple times a day, sometimes many times during the week. You get access to the trap trade software, everything. Nothing's held back. You can trade in your prop account. A 10-minute trade pro membership trial for $20.25 for 30 days. It renews $97 a month. That's all that we charge for our pro membership. It's ridiculous, our pricing on it. You get the reversal continuation setups. You get the magnet trade software setup, trap trades, breakout trades, earnings trades, www.gopro25.com. We are going to turn off the trial tomorrow night at midnight, so you may want to do this pretty quickly before it goes away. www.gopro25.com. It is what we do is a great way to trade. You can trade on your own schedule, watch the markets, and if you have other systems that you like to trade, we're a great add-on because you can schedule your trades with us. You don't have to put 8 hours a day in watching the charts. You can use us as an extra trading bonus system. For instance, maybe you're trading a robot system that you like, and you can add us to your collection of setups, and it's incredibly reasonably priced. Most everybody that trades with us and puts the time in to learn can make that money back. $97 a month is one good earnings trade, one good news trade. It's not even, you know, a good news trade could make you $300-400. And $97 a month is ridiculously inexpensive. You get our news trader software, the magnet trade. We will teach you all about appointment-based trading, the whole methodology. Choose the events you want to trade. Learn about trading futures with earnings, which is a system and a service that we could offer all by itself. And of course, trading on a schedule. I'll guide you step by step in our trade rooms. You'll learn about our family money trades. So everybody, this is it, www.gopro25.com for a 30-day trial. Full pro membership expires tomorrow night. And folks, that's what I got for you today. Definitely learn to trade reversals, continuations, and magnets. Great way to trade super volatile markets in a very safe manner. So thanks for listening. Out there, feel free to ask me and I'll relay the answers. Otherwise, thanks for inviting me, and I really appreciate the opportunity to present on Traders Corner.
Practical, fast, and powerful, exactly what we've come to expect. And thank you for making the offer available to our members today.
Thanks, Anthony.
You're welcome. All right. Let's see. Now let's talk about the truth behind prop trading. Norman Hallett is back to present Prop Traders. Can you handle the truth? In this session, Norman will reveal why prop and retail traders fail at the same rate, the two musts for prop trading success, and the secret sauce that separates consistent winners. Norman's link and gift will be either in the chat or on his slides, so pull your phone out and take a picture. Norman, it's all yours.
Thank you, sir. Thank you, Anthony. Thank you, Leigh, for a nice presentation. Previous to set me up, I feel set up. If you have a seatbelt on your chair and you're watching this, this would be the time to buckle up, because in the end, the truth prevails in trading, and all of the promises that you've made, that's been made to you, about prop trading, about success of trading plans and so on, probably have all gone for naught, because you've been told convenient truths that aren't truths at all. And I am going to spend this 45 minutes a lot differently than I usually spend them. I don't have a real offer at the end other than to see if you want to have more information on something that I'm doing. But I want to just take this chance, this 45 minutes, and kind of shake you into the truth. And I want to go through that in somewhat of an orderly way. I don't mean to insult anybody. I don't mean to make the possibilities and the potential of prop trading, and all trading for that matter, something that is not true, because that part is true. There is potential. But what is not true are a series of statements and really lies that you tend to want to believe because it's convenient. And I'm going to go through that and give you the opposite side. I'm going to give you a couple of truths that you probably didn't really put enough weight behind. So this is a little bit different presentation. If you're, I don't think I'm going to hold back any cursing. I'm not a guy that curses or that, but I am going to hit you between the eyes a couple of times, and I don't mean to do it. Yes, I do kind of mean to do. I do mean to do it personally to you, because unless you shake off these untruths, you'll never get where you want to go. I mean, most of you that are listening here, and I can say this because these are the people, most of the people that come to me have already been through 2, 3, 4, 5, 6 trading cycles, meaning they've tried a trading plan, they've tried, and none of it has ever worked. It works for some other people, and you know, the cherry-picked trading testimonials that you get, you realize how can they be true, and they kind of are, but they were for a flash and an interest, but most of the time it's not true. Let's get going on this because we only have 45 minutes, actually 40 minutes now, and I want to really hit you hard on this because if you just keep coming to these multiple presentations because you're looking for new ideas, I got to tell you that the information is probably pretty good. You know, Anthony and Traders Corner are very good bringing valuable people, but they can't control you. You have to take particular responsibility for some of the things that you're doing technically and mechanically, and some of the things that you're doing to get in your own way when you trade, where nothing will work. So let's go through this. First of all, know that futures trading is risky, can result in substantial loss. Only risk capital should be considered. And further, past performance is not indicative of future results. I want to give you an overall recognition, and that is as we move through this presentation, I'm fasting today, so if I slip up by my words, it's not my fault. Well, it is because I'm fasting, but we'll be recognizing the importance of the mental and emotional aspect of trading. The specific techniques I give you will be laced with the understanding that without the mental and emotional control, I guess I should spell emotional a little bit better, you won't succeed as a prop trader or any kind of trading. It's really a matter of having a structured trading plan that fits you. Again, how can it fit you unless you recognize who you are and admit who you are and your frailties in trading, and match the way you trade to your strengths and have it avoid your weaknesses. Okay, let's get going. This is a room. It's not exactly the room. This is a room out of Asia, it looks like, but I chose this picture because it looks very much like the room that I ran for about 4 years. I had 60, it was a little bit bigger than this room. I had 63 professional traders that I was responsible for their production. It was one of the largest option firms in the country at the time. This was in the 1980s, left them in 1988, so to go to Payne Weber. But at this particular time, I was responsible for these professional traders performing for their clients. They were given minimum of $25,000 at the time, which was a lot of money, and they would trade that money for profit for their clients and receive 20% of what they generated. In any event, most of them were commodity trading advisors. Some were assistants to them, but they were all responsible for the production, for the profit or loss of in somebody's account. And what I learned here was the idea of a simple trading plan. I also learned about what types of trading plans work in slow markets, what kind of trading plans and approaches work in dramatic, more volatile markets. So I want to show you this picture. I'll be referring to my experience here, which taught me a lot about what works and what doesn't. I just don't know of anybody who has had quite this experience with individuals and how they trade and being able to kind of, I've learned 4 or 5 different, 5 actually general types of traders, and then 4 or 5 specifics in each of those categories. So if you ever work with me, we'll be working on who you are and the kinds of approaches that you need to take in trading. This is of course, front door of Payne Weber in New York. I worked for them as a commodity trading advisor only for a couple of years. A lot of it winds up to be selling, which I didn't really enjoy. So I went on my own. I've been on my own ever since 1991 as a independent commodity trading advisor for many of the accounts that I've had along the way that came with me, as well as a couple of people that worked for me at the time in a small operation, the Hallett Commodities, where in any event, that's my history. I've got a lot of miles in this business, and I really love to bring traders from desperation to joy. So let's get to some of the trading proper that I'd like to show you. Again, my trading background, I've written several books and many industry papers on recently about prop trading. Just did one recently for Traders World magazine, who's still now digital. I've done articles for the old Futures magazine, as well as they've turned into Modern Trader. And so I'm well known for combining the mental and the physical, the trading plan part of trading. This is really where the key, I believe, for most traders, or all traders, lie. I mean, why is it that you can get a trading plan from somebody who's proposes that it's made all this money for everybody else, or even a friend of yours who has a trading plan that's worked for them and they give it to you and somehow it doesn't work? You need to have a fit. All right, let's get going with some of these lies. And let me first ask with the crowd that I have right here. I'm going to put on my glasses here. I just wanted to know if you're prop trading right now, or whether you're thinking about prop trading. That's all I really need to know to kind of bend my presentation toward what you need as individuals. So just give me a little bit in the chat, and appreciate that. Okay. Alrighty. All right. Let me give you the first statement that you hear. It's easy to be a consistently profitable trader when you're trading somebody else's money. See, in prop trading, the fact that you're not risking your own money and you're not under pressure that you're going to lose your own money, and here you can trade somebody else's money, and the pressure's got to go down because it's not your money, and the fees are relatively small. Well, winds up that that's not true. I mean, not from the standpoint that you really want to, as a commodity. When I was trading other people's money, and I instructed others, there's got to be a certain responsibility that you're entrusted with other people's money, and the same thing would be with prop trading. But if you don't have that particular moral code that puts stress on you, then you would think that eliminating the stress based on other people's money is what happens. Well, it's a lie. It's not what happens. I've been focusing my attention with traders on prop trading for almost 3 years now. And I can tell you that the same issues that occurred with their trading as a retail trader occurs as they prop trade, okay? The tight trading parameters that you're given in prop trading, I'm going to just talk about an Apex and Top Step. In I believe both of those, I'm sure in Apex, where I have most of my accounts now, if you're trading a $50,000 account, of which you can have 20 of, you can have literally $1 million worth of accounts in 20 $50,000 account. But let's isolate with one account of $50,000. If you breach that by $2,500 or $47,500, you're blown out and you have to pay another fee to get in again. Now those fees can be pretty high if they didn't discount them 90% of the time, and they do 80–90% discounts. It only takes right now $33 to start to test for a $50,000 account. And but the tight trading parameters make it so that if you're not cognizant, if you're not paying special attention to drawdowns, then you're going to have an issue. I'm going to put on my camera for a second. Let's see if I can actually be seen. Maybe not. Oh yeah, there I am. Hey, there I am. Let me give this to you in a, you're going to look at the camera here. Let me give this to you in a form that the tight trading parameter, if you're not trading right now, and you'll feel the pain if you are trading right now, prop trading. If you have a $50,000 account and you have your first position on and it's an open trade, and that trade profits open trade by $1,000, you've got now a $51,000 open balance, but you don't take it, and that market comes back down, and you've got a break-even stop, and you get stopped out. You could have had 1,000, but you didn't. You thought you'd get more. You cocky, but you had a break even stop. Well, you lose, and if that were your own account, so you're in it, you should have done better. You've been taught better than that. They give away open trader, but hey, you still have your 50,000. You haven't lost any money. Well, as far as a professional trader is concerned, and I showed you that I was in charge of professional traders, let alone being one myself, you won't last very long by giving away open trade equity. In fact, Apex and most other really responsible firms count that against you. Count that $1,000 that you didn't take against you. In fact, that old line of 47.5 is now 48.5. Now you only have a fifth because they wanted, you should have taken that. Okay, so we have when we instruct traders on trading in our simple trading plan, we have them start with always initiate a trade with 2 positions, 2 contracts, at least 2 contracts. This way, if you get that $1,000 trade, in the case of 2 contracts, it would be $2,000. You take one out, and you buffer your distance from that red line. And if that one all the way falls back, then you've still got 51,000 in your account, but your line is still at 47.5. It's not a complete explanation, but I do want to say that the tight trading parameters, most of what is argued or cried about to me, or any other non-professional trader crying to a professional trader, it's not fair, why do they do that? This is what a professional trader does. You don't give away open trade equity. When the God gives you the low-hanging fruit, you take it. Okay, so I wanted to just kind of show you my enthusiasm about that particular point. So I'm going to take away my face and see if I did it. Okay, great. Should have shaved, sorry, but trading out of the house, I'm okay with that. All right, so the tight trading parameters is one of the issues that, one of them I've just talked about. So you've got to, you may think it's easier, but it's really not. They have tighter parameters they want you to trade like a professional trader. And if you haven't been in the past, you may consider those parameters that are unruly. Okay, and then of course there's the mental and emotional challenges. This doesn't leave. You know, you hear about all the successes, and yet you struggle. You start to get on top of yourself. You start to get too aggressive. You start to revenge trade. You do all of the things because you're not in mental and emotional control. That doesn't change when you prop trade. So just need to emphasize the fact that if you think that it's easier to be consistently profitable when you're prop trading, and prop trading somebody else's money, know that that is a lie, and it's not. You've still got to be the strong mental and emotional trader and have a trading plan that fits the new rules that you'll probably encounter in prop trading. Here's the second statement that I hear. The fact that the loss of open trade equity counts against you makes it very hard to succeed. Okay, that's what I've just shown you. Well, that's a lie, because that's a good thing. It's a good thing to have you abide by this harsh seeming rule, but it's not harsh seeming. I mean, think about it. You've got a 2% profit, $1,000 trade in a $500 or $50,000 account. It's 2%. You know, people look to make 6% in a year, 8% on not on speculative money, but on retirement money, and yet you've got it in 10 minutes in a futures trade, and you're not going to take it. Look, there's a million, don't look a gift horse in the mouth. There's a lot of different ways to look at it, but people who give away, traders who give away open trade equity are not professional traders. And the way you do that on Easy Street is to have a couple of positions, one to honor your need for speed, and one to do the right thing. And the one that you're doing the need for speed, you've got to defend that one so that one doesn't hurt you. So you got to honor who you are, but you also have to trade as a professional. That's what makes the difference between professional traders. You're forced to trade like a professional trader when you're prop trading, okay? That's a good thing. It may be a little bit of a struggle in the beginning, but I think when you master these professional attitudes, you're going to wind up seeing why professional traders buy airplanes and so on, haven't gotten my first one yet, but a house, did buy one of those, and a car for my mother-in-law, and a number of things in my a nice engagement and wedding ring. But a lot of the things that normally you wouldn't spend that kind of money on, you can when you are a professional trader that is a profitable trader. So look at this as a transition. Yeah, and a professional trader realizes who they are, where they're strong, where they're weak, and adjusts their trading plan for that, plus work on their brain at the same time. So here's a tip. Apply a minimum of 2 contracts to a trade. One is a scalp and one is a what I call a runner. Okay, now I've just given you the example before when I had the video on where you take on 2 contracts, take out one and trade the other one a little bit differently. I want to go a step further. You want to anticipate taking the scalp early, but not early enough not to have a meaningful chunk that you're taking, and you want to let one ride. That's the minimum. Okay, the scalp is the important part, because when you take a scalp, when you take that profit at the high of a trade, instead of letting it come back in a scalp, what you really want to do is put on your position with your trigger, and then immediately put in your limit sell at a predictable level. You don't want to see it jump up and then try to get it at that price as it's easing off. You want to anticipate what that scalp level is. That's what we like to do at the Disciplined Trader. So you put on at least 2 positions, say 2 contracts in a position. A position is all of your contracts in one motion. So let's say you want to go long in the NASDAQ. You go ahead and put on your 2 micro contracts or 2 full contracts, depending on the size of account you're trading. You make one a scalp. Once you take that scalp, you move your stop to break even on your running, and then on the runner you let that advance by means of your trading plan. You let it advance and then trail it, so that you're not giving away a lot of that open trade equity either. That's the professional way to trade, and if you're not doing that, don't believe you're going to succeed very long with prop trading. Not that you have to have a scalp. When a professional trader really gets there, I look at the scalp as training wheels. And once you grow that $50,000 account to 60 and 70,000 in a funded account, you can take off the training wheels and now look to make considerable money on anything that you put on. So the scalp is really I've never been a scalper, even though I've managed traders that were primarily and sometimes exclusively scalpers. I never saw the true value in it myself for the way I like to trade and who I am. Again, you may not be that person, but I think one overriding thing in 90% of traders is we're looking to make a hit. We're looking to have a nice, you can say to yourself, $200 a day. It's very seldom that I've seen traders succeed with making $200 a day, because they make $200, they make it a second day, and then the next day they're down $200, and the next day they break even. In 5 days, they're up $200. Maybe that's a good week for you, but that's not the way that I look. I think that when you have a trade that's going in your direction, let it mature. So I have different ways of thinking about it, but I want to know your way of thinking about it if we ever work together, and I can help you to structure what you do to satisfy who you are. I think I'm making that. Hopefully, I'm making that clear to you. Okay, using the algorithms to make it easier to win. Using algorithms, okay, either plugins, not so much, but algorithms where let's call it AI trading. It's all coming in right now. It's all really kind of a mess right now. I'll tell you a little bit about that in a second, but it's a lie that using algorithms makes it easier to win. Using algorithms, yet it boxes you in, and sometimes, algorithms don't change. They are based on what the market has seen before and predicts based on those actions what's most common to happen in the future. Well, I know a lot of algorithms that did very poorly when the market changed from quiet to exciting the last couple of few months, and I also know others that have been exciting and wind up not so exciting markets and not performing well. So algos are the future. Algorithms are the future, okay? But algos have not been perfected, not even close, not even close. And I can tell you that by I'm now working on and about to launch in the next couple of months a platform and I don't know how to describe it other than I will be the person who will be guiding the futures industry on AI. What's next? It is our future. So what does that mean? You know, which are the best? Who are the responsible creators? Who are those that are? There's a lot of scams out there. It is rife right now with fraud and programmers who are, especially who are not traders. You don't have to be a trader to be a great programmer, but you've got to be guided directly by a trader in order that the algo can mimic how a trader would act in certain outside situations. Most of the time, you'll see the algos do very well, but when they don't, sometimes one trade can take it all from you. Kind of like it happens with a trader that is undisciplined. So you may talk about algos being discipline and building in that discipline. It is not true. It's not true yet. It may be true in the future, but it's not true yet. They have not been perfected, and right now they're rife with, especially the ones with Bitcoin and Forex. Those are really the areas where you have a lot of crap going on. So be afraid mostly right now, but understand that this is the future. In fact, a year from now, manual trading will still rule. The kind of trading that I believe you should be doing right now and that you should continue to do at least in the next year or two, because algos are not going to be able to be as responsible as you need to be consistently trading. Okay, it's not rocket science. If you have a simple trading plan, you can do this without algos. But in the future, I think you're going to want to do it. I know I'm going to want to do it, but they're not ready. They're not ready. Okay, in 2 to 5 years, AI will assist you. Okay, AI, I call it AI assist, will rule. In other words, you'll be able to modify the AI as you go along, but more than that, it'll also be able to help you with the mental and emotional piece by when you look to put in a trade, it'll know your trading plan because you've input it, and it'll say, hey, that's not in your trading plan, or hey, aren't you supposed to be putting on 2 positions when you initiate a trade? So it'll be AI assisting. Now there's some of that going on right now, and I'm interviewing some people for some of the opening for the first couple of weeks of this new venture that I'm creating. But so I'm interviewing some of the top people. All I'm just saying to you is it's not ready. That is one thing that I can tell you right now. And it likely won't be ready for the next year. You've got to learn how to trade responsibly like a professional trader, and it's not rocket science. You just have to know what to do and start to do it and seeing it work for you. Once it works for you, then you're going to want to do more of it. It'll be easy. Now, after 5 years, 5 or 10 years, you're going to be managing algorithms. It won't be much mechanical trading at all. You'll be speaking to your computer, telling it where to go, and the algos will be doing everything for you based on pretty much past performance and so on. But that's 5 to 10 years from now. In the next 2 years, we just need to learn what a professional trader does so we can guide these algos and get the right ones. I'll show you I'll show you where the technology is, where the front end of the curve is. Okay, if you join me, and it's going to be a site that's going to be it'll be a membership site, be launched very shortly. And if you want information on that, just email me at admin@thedisciplinetrader.com, and if you just tell me that you want to be on the waiting list for the launch of the AI and futures trading site that I'll be putting up, because this is the future, so you better get ready. Okay, right now you got to get ready to learn how to trade. And once you learn how to trade, you'll know how to instruct the algos the way you want to. Okay, so if you're interested in that, just write me at admin@thedisciplinetrader.com. Here is another something that I hear. A well and properly tested trading plan is all you need to win. Well, that is the biggest lie of all. Most of the people that you see on online here in this programming and others that you see in the internet universe, many of them are responsible trading plans and can work if you follow them. Most not to the degree that they say, but the difference is that even with a responsible trading plan, without equal attention to trading discipline, you will most certainly fail. This is why you've gone from shiny object to shiny object to shiny object, because you are not willing to face yourself. Now, yes, I'm talking to you if it's you, but I'm also forgiving you. I'm forgiving you because that's all that you get input on. Shiny object, very easy to do. No, none of that is true. Okay, simple is good, but easy is not. Okay, so easy is never going to happen. Simple is where you want to learn, and that's why I call what I do simple trading plans based on what I learned in that big room and beyond that at Payne Weber. So 90% of traders fail. 90% of traders do little or nothing to monitor, improve their trading discipline. This, in my estimation, in fact, I would put the house money on this, that these two numbers are associated almost fully. In other words, 90% of the traders, 90% of the 90% of traders that fail do it because they're not just. In fact, I think it's closer than that. I believe they are directly related. 90% of traders fail. 90% of could give a damn about the mental and emotional, or give it lip service. I mean, everybody that's selling you trading plans and so on, they'll give you the lip service because they don't know how to change you. They're saying, look, once you start winning, it'll all come together. No, it doesn't. All you need is another choppy market, and you're underwater, and you start doubting why you're even doing this. This can work, but it only works if you look in the mirror and you decide who you are clearly, and then adjust your trading plan to fit who you are, and at the same time work on strengthening your strengths as an individual, discipline-wise, and neutralizing what is working against you, like revenge trading or lack of patience. These are the two main things that over the last 2 years have really grown. It used to be fear of losing. That's almost not the case right now with prop trading. That's kind of moved to third or fourth. I mean, sure, these things can add up. These small, you can wind up spending $1,000 every 6 months on fees if you're not a successful trader. But you better wake up and look in the mirror and get somebody to guide you. This is what we do. Nobody else does this. Nobody, zero, can help you with not only the proper trading plan with my background, but also the mental and emotional piece, which is my wife, who helped me, and now she's been helping you and you, the universe out there who partner with us. Analyze your mental and emotional weaknesses and strengths. Play to your strengths, neutralize your weaknesses, and that's when you'll be a professional. Those professionals that I traded, I used to bring Tisha in, my wife, and she used to help me with those traders to turn around their mental and emotional shortfallings. Sometimes I used to say, change your strengths, your weaknesses into strength. That's not going to happen most of the time. All you want to do is neutralize. You just don't want it to affect your trading. You want to follow your plan, okay? And so that is these lies that you've been told are just that, lies, because they're not meant to hurt you. They're meant to sell products, but they are devoid of the truth that they can't help you with the mental and emotional piece. Okay, I happen at the loading at the discipline trader, we help you with both pieces. That's why we're so different. Okay, the proven process, trader specific subconscious trainings, not just, you know, I like myself, but meditations that are specific to you. And when we get together with traders, we work with them one-on-one, and we find out about you, and Tisha decides from the discussion what the strengths and weaknesses you decide together, and then she will record for you a mental training session, a meditation, or what we call EFT, emotional freedom technique, a professionally guided process. Some call it the tapping solution, but again, specific to traders. Nobody does this from us. It's a piece that's missing. Okay, and I want to supply that to you. That's going to be what I would like to do. In any event, here are prop trading truths. Use scalp and runner approach. Scalps pad that distance to the red line. A runner gives you the potential for a big trade, which we all want. Okay, you need solid. I see that need a solid method to preserve the runner equity. In other words, it's one thing to take the scalp, but you also want to preserve the runner. You can give away 20% maybe of it, but you don't want to give away any more than what you've built. Okay, so that is a big key. A reliable set of triggers with a pop if is needed. In other words, if you're going to have a consistent trading plan and you're going to use the runner scalp methodology, which I want you to use, you need to have a reliable set of triggers that give you a pop so that you can take that scalp. Okay, if the other one break even, it's fine, never happens. But when it starts to expand, you defend. But you need a reliable set of triggers with a pop. You also need that trigger to be frequent. Why? Because most traders have an issue with patience. Okay, it offsets the lack of patience. You sit there and waiting for a trigger, waiting for a trigger, waiting for a trigger. You start to unwind your requirements. Well, that looks, look, it's an uptrend and it's really corrected here. This could be a good time to jump in. It's not in your trading plan, you shouldn't be taking it, but you do anyway. So the trigger needs to be frequent so that you're not falling off your trading plan because of lack of patience. With the trading plan, simple works, as I've mentioned. The more hoops you give a trading plan, the more the move will mature. And then when the move matures, your risk becomes greater and your profit potential becomes less. So you want a simple trading plan. You want to eliminate repetitive actions, and that's really one of my big strengths from helping all of those traders. This is what our chart looks like when we're trading loaded gun. Just a couple of moving averages. Sometimes we don't even use one of those moving averages, especially in the beginning. And we use an RSI, not for whether we should get in or out of a trade, but for how strong we should be taking the trade, how many contracts, or position sizing. So I wanted to kind of just give you a glance of what the trading plan may look like for you. And you want a trading plan without targeted intention to your mental, emotional strength, you will not succeed. You need to target, you need to make it a rule. It needs to be part of your trading plan. You need to deal with the mental side of trading on a daily basis. Otherwise, you will not succeed. Okay, this is my wife. We did something. This was years ago, almost a decade ago. We did a local, had about 100 people in. Actually, it was in the Trump Tower in Miami. But I want to just show you just who you'll be working with if you take my offer today of looking into further what we do. We're both on stage. Tisha does literally live demonstrations for people in this particular room. But I wanted to. She has been on the cover of many psychological magazines, and I won't even show them. But in her career, she's got a 30-year career before I took her out. In the last 15 years, she's been working with me. So many accolades. But her training, as far as traders are concerned, is very important. She not only uses meditations, which are proven to work for all the great CEOs of the world to keep them calm and directed, but she also uses a process called EFT, Emotional Freedom Technique. This is Dr. Roger Callahan, who started what is called TFT, Thought Field Therapy. It's where you're actually saying certain things, but tapping on meridian points just like you would an acupressure, to free up energy. This is a process that you may not be familiar with, and if you're a Westerner, you're probably saying it sounds like crap to me, but it's true and it's scientifically proven. And in fact, if you saw what the reversals that happened almost immediately using a 5-minute therapy where Tisha instructs you to tap, you're both on Zoom, and she's asking you to tap here and repeat after her. Just a 5 or 10-minute process, it can sometimes be an immediate reversal right there. Lack of patience, fear of losing. It is actually the go-to therapy for post-traumatic stress disorder. That's how effective EFT is. And then there was a guy named Gary Craig, who was also a psychologist, who took Roger's work and streamlined it. Roger's work was more 20 minutes, 25 minutes, and had many, many tapping points, 30 of in the body. Gary Craig reduced it to 8, and this is just as effective. Well, Tisha trained under both of these people, learned under Roger Callahan, and then took the training with Gary Craig before, and she had her own training before that. So Tisha's training is deep and effective for traders. We've proven that, and we continue to prove it on a daily basis. I just wanted to give you a little bit on what Tisha is about, but here's my offer to you. I've got 5 minutes to let you know what it is. It'll take me about 4. It's the 60-day sprint to prop trading payouts. 60 days, we want to get you paid, at least for your first payout in 30 days, whether you're new at this or not, in 60 days. I'll be giving you a proven trading plan, the simple trading plan loaded gun, which is built for prop trading success. You'll get the plan. Now, if you already own the plan and you use this, I'll give you a discount on this for what you paid for loaded gun. So don't worry about that if you happen to already own it. But I want those that don't own it to own it, because if you own it, I'm sure you're still using it, okay? So total accountability, both trading actions and your mental and emotional state. You're going to be accountable to both Tisha and me. Tisha is in charge of your mental and emotional mastery, and I will be in charge of you staying on track with the trading plan. Now, if you have another trading plan that you want to use, I don't have a problem with that. I understand all trading plans, so don't worry about that. I can guide you with the trading plan that you're using, or you can Frankenstein simple trading plan, a couple of the basics there and put in, but I would much rather you use the simple trading plan loaded gun. It's a simple trading plan. It probably has pieces of what you're working, but in a different combination. But you have that alternative. But whatever we decide you're going to use as a trading plan, you're going to be responsible to me at least twice a week to show me that you've used it. And you'll be responsible to Tisha for showing that you've taken the short trainings that she's customized for you, so that you're going to be accountable. This is not a joke. This is real. If you want to do, I'm getting goosebumps because this is real. We just had somebody that cried thanking us the other day, and I'm thinking about that right now. I'm saying to you that unless you get serious about the kind of trading plan that you use and your mastery of the mental and emotional, you're not going to succeed. You'll either work with us one-on-one, where Tisha and you will work together and decide that situation, or you'll work with me one-on-one, and where I decide your history of trading and the trading plan you're using now and so on. And then 2-to-1, half the time will likely be, from our experience, we'll both be with you. You don't know what's going on, you say, but you still break even, and you think we both get on there together with you. And so whatever it takes, you have Tisha and I, 2 of the strongest players in this game, in these categories, to help you one-on-one. There's no other firm that can do this. And twice weekly checkups. On Tuesdays and Fridays, we're going to meet. Okay, that's part of this program. Okay, so the 60-day sprint to prop trading payouts, you'll also be part of a beta group run by Dan DeMaria, who is a former floor trader. And this is I just took a clip of this. We just were approved by our compliance department, and so he uses generally a 5-minute and a 2-minute and a 5-minute chart, NQ and others. But whoever's in the room he'll analyze for you and trade. Now, this particular, I don't use points here, but he sometimes will give you a little bit even more from his experience. So between Dan and I, we're gonna learn a lot. Here is my 60-day sprint to prop trading payouts. It's not for everyone, okay? You need to take direction. If you cannot take direction, don't do this. Don't request the PDF, okay? And if you can't follow a 5 or 10 minute mental meditation, if you can't commit to taking that Tisha creates for you, or an EFT session that creates, don't bother doing this. This is only for serious people, because this is a high value offer. So from an investment standpoint, it's also not for everyone. So you need to be serious about being a long-term profitable prop trader, okay? Nobody offers what we can, Tisha and I, together with you. Nobody. They generally don't even touch. They'll have you read an article about the mental part of trading, but they don't dig in to make the changes that are necessary. This is a 60-day sprint to prop trading payouts. If you want to see the full program, and you want me to send you the PDF on the 60-day sprint, use that same email, admin@thedisciplinedtrader.com, and just send me the PDF on the 60-day trip. And you know, take a second to compliment me. Hey, great presentation, Norman, on that. The teacher could use an apple too every once in a while. Just tell me that you believe you learned something from it, and by the way, send me that PDF. I'm interested. I'm serious about not stepping off that rat wheel and not going after the shiny objects. Start to dig into yourself, dig into what works, and start winning with prop trading. I think it's the best thing that has happened to traders since the advent of exchange traded options and the mini and micro. This is even bigger. So thank you, Anthony, for allowing me to present, and really hope that that I get to help a number of people that are listen to me here, because this is your future. You just have to take it seriously.
Man, thank you. Raw, honest, and packed with insight as always. Thanks again for your generosity today.
Thank you, Anthony, and thank you everybody for your time.
Thank you. All right, and now for our final session of the day, we're turning to automation and AI-powered precision. Please welcome Rory Powers of Right Line Trading with his presentation, AI-powered automation, the ultimate edge for futures traders. Rory's going to show us how his AI bots and AI auto trader adapt to real-time market conditions, how traders of all levels are using them to pass prop firm evaluations, and how this system has produced over 29,000 in live PA profits in the past few months. You could check the chat box for Rory's special buy one, get one offer. And this one's not to be missed, so enjoy.
Thank you, Anthony. I really appreciate that introduction. Thank you so much for having me here today. What a great event. Man, Norman, I love Norman and Leigh both. I mean, just great guys. Behind every great guy is a great woman, an even better woman. And Norman, he's got his Tish, and they make a great team. Really very, very reputable, great guys. So I'm really pleased to be part of this fantastic group. And I've got a really great presentation today. The presentation is on the AI Auto Trader. And I've done these presentations on Traders Corner before. And, you know, the optimization process of these bots, you know, I listened to Norman and I 100% agree with him. We're just really scratching the surface of the full potential of these automated bots. And the optimization process never ends. And we're having some really exciting results. And I'm going to show you exactly how the AI Auto Trader leverages AI technology and provides our members with a significant edge when trading the financial market. Let's face it, when we go to battle, we want to have a more technologically advanced, a bigger, badder weapon than our competitors. And what I'm going to show you today is leveraging some really advanced machine learning algorithms that really provide our members with a significant edge. I just want to mention, and it's important to know, that I am not a licensed financial advisor. If you're not familiar with the risks associated with trading, please consult with a licensed financial advisor. There is a significant amount of risk in trading. You could lose your entire account. With that being said, let's go ahead and get started. I think one of the main things that distinguishes right line trading from our competitors is the transparency. We trade this system every morning live on YouTube, on a YouTube live stream that's open to the public. And I know it's been a long day, and I'm going to give you my short version. Most important, I want to invite you tomorrow. Tomorrow is no exception, God willing. We'll be doing it again tomorrow on YouTube Live. And we start every morning at 9:15 a.m. Eastern. We go through the Forex Factory calendar. We don't want to enable our live accounts during a red folder news report. And after we go through the Forex Factory calendar, we look at what the overnight session looked like, and we prepare for the opening bell. And we've got a really exciting strategy that we trade for the first hour of the market open, and it's called the power play. And I'm going to invite everybody here. I'm going to put a link in the chat box. Come join me if you would tomorrow. It's on YouTube Live, and it's at 9:15 a.m. Eastern. I just put the link in that chat box, and I think the transparency, having the ability of seeing the system perform on a live market before jumping in head first is always a really good idea. We're one of the very few vendors that do it. And as far as the customer experience, I think it's important to know that when you come aboard with Right Line Trading, it's the beginning of what we like to believe is going to be a long-term prosperous relationship. We're not going to welcome you aboard and wish you good luck and never talk to you again. In fact, one of our members, and I always like to talk about Marcia. Marcia sent us this beautiful video testimonial. I'm not going to play it, don't worry, but I am going to give you the short version of her testimonial. You see, Marcia had come to us after purchasing some bots that traded Forex pairs. She kind of bought into it. They delivered it to her and then never helped her. They wished her best of luck, pat her on the back, and off she went, not knowing how to set the thing up and get it started. And of course, they set her up for failure. So she came to us with a bad taste in her mouth. Her experience level at trading, she was brand new. This was her first experience with trading. Really a crying shame. However, and she's such a beautiful, blessed woman, a woman of God, a real believer. And she came to us very hungry to succeed at trading. And her experience, and it's amazing, within the first 60 days of coming aboard and trading these AI bots, she was able to pass 10 Apex accounts. She still has those same accounts. In fact, now she has 15. 6 months later, she has 15, still has the same 15 accounts 6 months later, which is incredible, an incredible testimonial. So her learning curve, the accomplishments that she was able to achieve in such a short period of time is just amazing. I've been with Right Line Trading I'm going on my 12th year, and I have the privilege, I consider it a privilege, of answering the phones here. And I talk to traders of all experience levels, and usually to be able to accomplish what she's done in 60 days, you or I or most of you who I speak to on the phones will agree with me that we go through what we call the school of hard knocks, a very expensive education. You know, listen, before the prop firms came and we wanted to trade, we would have to put 5 or 10 grand of our own money and give it a spin. And, you know, we would learn through the school of hard knocks, blowing at our accounts, what not to do the next time. Well, Marcia was able to accomplish amazing feats within the first 60 days, significantly shortening her learning time and being able to achieve accomplishments that would have taken us tens of thousands of dollars in order to achieve. So Marcia is really a beautiful woman. If you want to see her full testimonial, it is on our YouTube channel. Listen, I'm going to give you the short version today because I know it's been a long day, but I do want to just go over the basic principles and why I think the AI auto trader and right line trading is a good choice. Number one, our vision here at Right Line Trading, and we've been around for about 15 years, is to develop innovative trading strategies that provide our members with an edge. Well, what kind of edge are we talking about here? Well, the type of edge we're talking about today is an edge with a technological breakthrough, with artificial intelligence, with automated bots. You see, what makes our bots unique is they dynamically change their own inputs based on the market conditions. Listen, the elephant in the room when you talk about automated bots is my experience with all of them in the past has always been that they're only good in certain market conditions. When the market conditions change, the parameters need to be optimized, the inputs get stale, and they just don't. They're just not very consistent. There's no consistency. This has been a game changer. Integrating artificial intelligence, and I'm going to explain to you very briefly how this technology works. Our team here at Right Line Trading, it's important to know, it's not just me pulling the switches and flipping all the levers. I'm part of a very experienced, educated team of not only software developers and engineers, but professional traders as well. We have 3 professional traders on staff, Mr. Craig Emery, Mr. David the Kushner, and Mr. David Wise. Craig and the Kush both trade futures, while David Wise is a professional options trader. Behind the desks here at Right Line Trading, we have Brock Miller. He's a college student getting his degree in computer science. Mr. Charles Sider has a master's degree from UCLA. He has extensive experience in software development and software engineering. Sergio Luque Rodriguez has his master's degree in computer science. We also have Mr. Mark Miller, who is the owner of Right Line Trading, has his MBA from Cal State, and his experience is in robotics and automation. He's also an engineer. He was with the U.S. Army. He's a U.S. Army vet. And over the course of the past 15 years, we've really built a beautiful community of traders, and we all converse with one another. We all communicate. There's power in numbers. We all communicate with one another through Discord. Discord is our community that we all communicate our experiences, what's working, and sometimes more important is what's not working, so we could sidestep those speed bumps. But I also want to introduce myself, who the voice is you hear behind the computer screen. My name's Rory Powers. I'm a Syracuse University graduate. I reside down in South Florida. I've been with Right Line Trading for I'm going on my 12th year this July, and I love what I do. It's really my passion. And my other passion happens to be saltwater fishing. Residing down here in South Florida, I'm a stone's throw away from the Florida Keys. And on a recent fishing trip, Mark Miller and old Luque, we all went out fishing and caught some beautiful snapper and grouper. That's my other passion, is saltwater fishing. And once the boat came to the dock, We took these beautiful fish into the restaurant right in the background here, and they cooked them up for us, the most delicious fresh fish ever. But listen, I've got to brag about my prize catch. The catch of a lifetime was my beautiful wife, Christelle. She really a great woman, just like Norman was saying how Tish is his partner. Well, God gave me a not only a incredibly strong, spiritually strong, but incredibly intelligent woman with Christelle, who we have two beautiful children together, a 6-year-old and 2-year-old. My friends tell me I've got more guts than brains, but I wouldn't change a thing. Believe me, I'm so blessed to have them in my life. So let's get on with the show. The genesis of the AI auto trader, and whether you trade a prop account or a live account, it makes no difference. We got to have some consistency in order to be profitable. Consistency, that's such a key word when it comes to trading. You think of prop trading, whose their business model, the prop firm's business model, is for us to fail. See, they want to keep selling us these evaluation accounts, and we have to keep buying paying for the activation fees. But what they don't want you to do, to let the truth be known, is they don't want to pay out. So how do they prevent payouts? Well, what they've done is they've put into effect these consistency rules, right? They've got 3 different ways to get you on this consistency. You have to have 8 trading sessions. Not one of those 8 trading sessions can you have more than 30% of your gains in one session. You have to have 5 payouts or 4 payouts in order to get all your money. They want to keep punting the ball down the road and keep making you be consistent. And the odds are in their favor that we as traders cannot do it. Okay, that's how they get us. So this is my favorite slide of this presentation. Thank you, Antonio. I really appreciate that. God bless you, my friend. This lady, this is really the spirit of the frustration is what she's showing. And I know from speaking to so many of you that are here today, and I thank you again for joining me, is I know the frustration that we go through on this trading journey, and I know it firsthand. Believe me, I've gone to bed at night talking to myself, wondering if I'll ever get this, because it's such a frustrating, difficult, thing that we do with this trading. This beautiful, nice woman, very conservative, she's dressed in a business suit. What has happened to her in this picture, and this is my interpretation, is she has seen her trading account dwindle from being very, a nice, healthy trading account. But over the course of maybe 4 or 6 or 7 weeks or months, whichever time frame that these bars represent, she has seen the equity in her account dwindle down to almost nothing. Ever been there? Well, it's finally come to a boiling point, and she cannot contain it. She can't hold it down any longer. And what she's done is she's taken the old sledgehammer out of her desk drawer, and she's ready to smash that computer monitor into smithereens. And the reason she's going to smash it is because she's absolutely convinced at this point that there's a conspiracy going on between the broker, the market maker, the prop firm. She doesn't know who, but she knows there's a conspiracy going on, and they're taking all of her money. And it's reached a boiling point. Well, that was the genesis of the AI auto trader. And it has been our commitment to bring this to an end. You see, I was right here in Trader's Corner, and the light kind of went on. I was listening to a presentation by a gentleman by the name of Chris Vermeulen. And Chris Vermeulen had done a study. When it comes to trading, all of us share as human beings, we all share the same core personality traits. In his study, He wanted to see which personality traits lend well to being a good disciplined trader. Well, bad news. What he found was out of the 10 core personalities that we all share, and just to name a few, we have the driver, the one who says go, go, go. We have the analytical, maybe the engineer, who has to have all of the information and make all the calculations have to be precise. And then you have like me, the emotional. The emotional is somebody who is wants to hang on to their money, has a fear of losing their money, an attachment, an emotional attachment to their money. That's me. When I see that P&L start getting green and I'm in the green on a trade, instinct, it's almost like a reflex. I grab my stop and I squeeze that trade so tight that I choke it out. I don't let it mature, or vice versa. If the trade goes against me and I'm taking a little heat, I want to bail out on the trade and close the position, only to watch in total frustration the market reverse and go in the direction that I had the position in. And that was that frustration that I saw in the previous slide. But those are the core personality traits that we all share. And what Chris Vermeulen found was only one or maybe two of those 10 core personality traits lend well to being a good disciplined trader. You see, successful traders, what they all have in common is they have a rules-based plan. There have to be certain conditions that must occur in order for them to pull the trigger. And it's all based on the technicals, right? It's not based on emotions. It's all based on the technicals. And they're able to channel out all of those distractions. I like to think of it as, you think of somebody like Michael Jordan, who, one of the greatest basketball players ever. He was able to put himself in the zone. When he got onto that basketball court, it didn't matter if there was 1 million people watching, if it was for the world championship, if he had $1 million side bet on the game, it didn't matter. He could put up those blinders and he could do these acrobatic moves and throw the ball through that basket. He admitted it. He said, listen, there were times that the basket just looked huge to him. And he had this little ball and he could put it through there like it was effortless. And listen, that's the type of natural ability that those 1 or 2 core personality traits have to trading. Unfortunately, the vast majority of us, including myself, don't have that gift. We don't have that gift. I wish I could say I did. So we've narrowed it down to 2 things that we believe are going to create trading success. I didn't finish my thought on the previous slide. It all leads to the same place. If we let emotions dictate our decisions, we're going to blow out our trading account. So we've narrowed it down to 2 things that we believe are going to create trading success. Number 1, because we all share these human personality traits and emotions, ideally we want a tool set that can automatically get us in and out. Now listen, if you are one of those 1 or 2 personalities that you're just a gifted trader and everything is going great, then I wouldn't change a thing. If things are going well, do not fix anything that is not broken. However, if you are having some issues with consistency, then listen up, because I have a solution. Number 2, it ideally is software that gets us in automatic. Number 1 is we have to have the proper tool set. Okay, the proper tool set. This AI technology, listen, if you've been living under a rock, let me tell you, we're in the midst of an AI revolution. an AI revolution. It's working its way into just about every sector of our economy. Just to name a few: energy, agriculture, education, transportation, manufacturing, retail, and e-commerce. In finance, which is number two, number one, of course, is healthcare. Let's hope they have some breakthroughs. But number two is finance. 95% of large institutions, that's hedge funds and investment firms, are leveraging AI in their algos. Okay, so this is absolutely the wave of the future. It provides those hedge funds and investment firms an edge to be able to trigger those algos to get in and out of these trades. We're going to provide you with those same advancements in technology with this AI auto trader. So the main benefits: it's going to eliminate our bonehead mistakes. I always put myself in the first person. I can't tell you how many times in a fast-moving market that I've made human errors. Maybe it was my being unfamiliar with the trading platform, or a news report came out, or there was slippage, or there was lag, or there was who knows what. I can't tell you how many times that I refer to them as bonehead mistakes. They're just human errors, and they become very costly. We have a trading system that, through a closed loop system, mathematically is going to place your stop and your profit target in the most ideal location when you take a trade. These are all inputs that will change dynamically while you're trading. The system can recognize the average true range of the market and make the necessary changes to produce the most efficient outcome. Okay, so that self-optimization is something that I'm just going to go into a little more detail with without going too far deep into the minutia. If you're a prop trader, stick around. Man, I've got there's two phases to the prop trading. Number one, the first phase is the evaluation. Man, you got to put your blood, sweat, and tears to pass their test, with the trailing threshold and the 30 and the consistency rules. And it's very difficult. But once you pass that evaluation, then we have our PA accounts. That's our vehicle. That's our vessel to withdraw money from. Okay, the PA accounts. So we have strategies that are customized to be successful at both passing the evaluation, and then we use a different strategy that's going to sustain your funding and get you consistent payouts. So stick around if you're a prop trader. I've got I like to refer to it as prop trading on steroids. But the technology is really the key to this. I always have people call me and they say, what do you think? Why do you think you're having so much success with this new automated system? And the answer is really simple. It's the new integration. It's this AI integration. You see, when Mark Miller purchased the company from Mark Sachs about 3 years ago, his number one goal was to automate this beautiful trading system, these beautiful indicators that were the foundation of right line trading. We went into a collaboration with a world-renowned AI development lab. He bought the company with the foresight that he's going to automate this using artificial intelligence. So what's the first step? Well, the first step is we've got to get our software developers up to speed with how to integrate this into NinjaTrader 8 language. Well, let me tell you something. Old Luke and Charles were the beneficiaries of a collaboration with a world-renowned AI development lab. Now, I believe that we are at the forefront of this technology, and the technology that we're using, each and every one of our bots, runs in tandem with what we call a drone, which is really just another bot. It has static inputs. The drone has static inputs. The bot has dynamically adjusting inputs. The bot and the drone both take the trade, The drone is going to trade continuously 23 hours a day. And it's going to learn, number one, what the average true range of the market is. Okay. It's sharing a database with the bot, and it's telling the bot, put your stop here and put your profit target here, because you have the highest likelihood of getting a profitable trade with your stop and profit targets in these positions. So it's dynamically adjusting the placement of your profit target and your stop based on average true range. Remember, it's running 23 hours a day. The next component that it's dynamically adjusting are the trading session hours. The trading session hours. It's going to trade right through the Asian Open. It's going to trade through the London Open and through the New York Stock Exchange. And it's going to learn what times of the day that it performs the absolute best. You see, right in the strategy parameters, if I open up the internals of the strategy itself, you could see here in the strategy itself that it will dynamically put in up to 3 trading session hours based on historical performance. So our mandate as developers of these strategies, first and foremost, is to filter out the losing trades. We've got to get rid of the losers. Even at the expense of letting some of the winners pass us by, we've got to sidestep losers. How do we do it? This is how we do it. These are a few of the ways we do it. We sit on our hands during the times of the day that just aren't profitable, and we only trade during the times that we know are profitable. So that's another component to this AI integration. The last and certainly not least is the markets are very symmetrical. There's certain candlestick patterns that reoccur throughout the trading session. They have for example, the bullish or bearish engulfing candlestick patterns. When the system has a self-learning component to it, when it recognizes certain candlestick patterns, it's going to react accordingly. If you're in a long trade and all of a sudden we get this big, ugly, bearish engulfing candle, well, the system is going to close and take profits or minimize your loss immediately. So that's another component of this AI integration. Really, I think the one of the most effective ways, though, is what I had mentioned earlier, and this is just an illustration how the drone is running 23 hours a day. And I'm going to show you a real life example this week of how the power play, which is our automated strategy. Anyway, the drone runs the 23 hours out of the session, and you can see each half hour of the day. Each one of these bars represents, this is 8:30, 9, 9:30, 10, 10:30, right through 10:30 to 11 o'clock. Starting at 8:30, this drone did phenomenal. All green bars. But what happened is after 11 o'clock, things got a little sketchy. And it was hit or miss. But then the last hour to the closing bell, it picked back up. So what does the bot do? The bot changes its own inputs and will only trade during the times of the day that historically the drone is profitable. So these are bots that you never have to optimize. You never have to change their settings because they do it themselves, okay? They're smart bots. So with AI automation and automated bots, it really all boils down to how much money do they make? What is the performance like? And, we've, got some bots. It's a diversified portfolio of strategies. However, our 1-2 punch is the NASDAQ and the E-mini. We trade a variety of different instruments. We've diversified into crude oil and gold, the Dow. The only index equity that we really don't trade right now is the Russell. It just doesn't have a lot of volume. But I said all of that to say that the ES and the NQ are our most profitable. We have a bot called the AI ES 30 range. We call it the 30 range star. One of our members, Robert, is the gentleman that is a professional as well that loves bots. And he purchased our system and he optimized this template for us. And he made $60,000 over 6 months with it. On our machines over the last 2 or 3 months, from March 1st to April 28th, it's at $15,427. I always like to say, well, what have you done for me lately? Right? It was nice back last month or 2 months ago, but what have you done this month? This month, that same ES30 range bot is up $2,300 from May 1st to May 15th. Very nice, efficient output, that bot. And it's the max drawdown on it is $1,300. Okay, $1,300, the max drawdown. Very efficient. Up $2,300. It's taken 5 trades the entire month, this bot. So it's trading just a small window out of the session that it has a very high percentage chance of winning. Okay, you think of bots, you think of a bot trading every 2 minutes. This is a bot that from May 1st to May 15th took 5 trades, won 50% of them, and is up $2,300. And going back to March 1st, it's up $15,427. Okay, Robert's been trading at 6 months, and he's up 60,000. Then we have the ESVW. The ESVW, another powerhouse that runs on the ES. From March 10th to April 30th, I'll answer your question in just a minute, Nina. From March 10th to April 30th, this VW is up $22,000. Listen, this is not a back test. This is not a hypothetical. This is not a strategy analyzer that's, you can't depend on. These were actual trades taken on a live market, trading one contract. Okay, one contract. So the VW, what have you done for me lately? Well, the VW in the month of May is up $7,200 in May. Okay, in May is up $7,200. It's taken 17 trades. It's won just over 76% of its trades. That's incredible. 7,200 trading one contract on the ES. I could say one thing, and this is not coming from a political standpoint. I don't come from a political angle, but I could tell you that these tariffs, Trump just a few days ago at the beginning of the week, on Sunday, over the weekend actually, him and China, the Trump administration in China came to some type of concession, and they decided to put a 90-day pause on these tariffs. Well, man, the volatility that created, these bots thrive. It's like putting jet fuel. They love that volatility. So the trading environment that this administration is creating lends well to these AI bots. I can tell you that firsthand. So the ESVW, one of our most powerful, and my personal favorite is the power play. The power play from March 1st to April 30th. Our cumulative net profits are $6,550. I want to go even a little bit further back on this, because these are the ones that I trade live on YouTube. And if you come join me tomorrow, you're going to see it live, the power play, and I'm going to show you the spirit of the power play. This is a P&L from January 1st to May 15th. Over the course of 4 months, This bot, these strategies, this is 3 accounts, okay, is up $28,000, $7,000 per account. Every trade that we've taken has been live and recorded on YouTube. It's not a hypothetical. It's all recorded, okay? That's why I want to invite you to come check it out. Come check it out tomorrow at 9:15. We traded on our live accounts in front of the whole world to see. If we have a bad day, there's no hiding from it. Today I had a bad day. But from January 1st to May 15th, we're up $28,000. This bot, let me show you. This is it. Don't worry, it's not a long tape. This is the power play, and let me set up the tape. One of the conditions for this trade to execute, on my left is a NASDAQ chart on a 20 Unirenko. On my right is a NASDAQ chart on a 30 range. So the 30 range is what the strategy's running on. A 20 Unirenko is our higher time frame. Okay, remember, these are very short-term positions. A swing trader might look at a daily chart and have it line up with a 5-minute to take an entry. With these short-term trades, our higher time frame isn't a daily, it's a 20 Unirenko. These are very big bars. And one of the conditions that must be met is, in order for the bot on the 30 range to take a long trade, my 20 Unirenko the price must be above my 50. My 50 is this green line that's right here on my chart. So both are in agreement. Market structure wise, they're both set up for a long trade. So let's play the tape. I've got a trade copier going, and we get into the trade. It's copied across 6 different Apex accounts. And what happens, the spirit of this trade is we take it within the first hour of the market open. I have a 60 tick stop loss. I'm risking $300, and potentially I can make 500. So my profit target is pretty ambitious. It's a 100 tick profit target. But what makes it a great strategy, listen to this, is we've developed what we call our profit window. Our profit window, the way it works is once our trade has matured and goes 75 ticks, our profit window is 25 ticks. So when it's 25 ticks from my profit target, what it does is it will automatically lock in $250 of profit. My stop automatically flies up. And in just a minute here, you're going to see this trade, once it breaks through support or resistance and gets a little bit closer to my profit target, you're going to see my stop down here, and it's going to go into my profit window. And I'm going to pause the tape once it does. Okay, right there, it's 25 ticks from my profit target. I can't tell you how many people I talk to on the phone. They say, Rory, I just want to make a couple $100. Do you have something? I just need a couple hundred. That's it. I got 15 accounts or 20 accounts. I'm not trying to break the bank. I just need a couple hundred, just a little bitty profit each day. Well, listen, this is the closest that we have to that. You know, by no means is it the Holy Grail, but the course of, from January 15th to today, we're at $28,000. So this trade now is in my profit window. Worst case scenario is it comes back and hits my stop and I make 250. And I make 250 across all of my accounts. I've had a pretty good day. Best case scenario is it goes through and I go all the way to 100 ticks and I make $500 on the trade. So it's a win-win proposition once my profit window kicks in. So on this particular trade, it hits my profit target of 100 ticks or $500. And you could see on my trade copier, across all of my Apex accounts on that one trade, I've made $500 or $3,000. So that's the spirit of this power play and how we leverage it to trade our PA accounts. And, really, something incredible that I learned just recently is with this profit window, remember I mentioned how the bots will dynamically change the position of the profit target. Well, the last few days, the market, if you noticed, the first hour today and yesterday, it was a ranging market. It was choppy. And what happened was the bot moved the profit target to about 75 ticks. So it actually moved my profit window. It only needed to go 50 ticks. So it's going to dynamically change based on your market conditions, what the range of the market is. Okay, it's very important that it does that. So that's how the PA accounts have done since January 15th. Just an incredible strategy. So let's just touch bases, because in the special offer, I'm gonna give you my special offer. I know my time is up, and I want to mention if you have a question, please, and I don't get to it, I'm going to answer just a couple that I can get to. Please put your name and your number in the chat box. I'd love to give you a call, and I want to answer your question because your question is important to me. And I want to respect Anthony at the same time, so I'm kind of in a catch-22. But if you put your name and your number, only I can see it, and Anthony with Traders Corner, and I will give you a call after the event, or if you prefer tomorrow, I'll give you a call tomorrow. Okay, included in my special offer, normally our prop trading templates are an add-on. That's not the case for Traders Corner. We love Traders Corner. Traders Corner special event, we're going to include the prop trading templates. All of our one-day pass templates and all of our PA account templates are going to be included for free. What am I talking about one-day pass templates? One-day pass templates are the templates that we've customized in order to pass your evaluations. And these one-day passes are smoking it, let me tell you. We have 5 different one-day passes. They trade on all of the instruments I mentioned, the E-mini, the NASDAQ, crude oil, gold, and the Dow. And they're time optimized. They trade the maximum number of contracts and the minimum number of ticks to get you a funded account in one trade. Now, what we look at with these is what is the percentage that they win, right? Not so much as what the net profit is, because it's just a pass or fail. We're going to pivot to a more conservative strategy once we get the funded account. My slide says 53%, but remember I told you I answer the phones here. So I'm going to under promise. Okay, I'm not going to answer the phone and listen to somebody be upset with me for saying, hey, you're going to pass 50% of the time. I'm telling you that this is trading. It might say 50% on my slide. There's a chance you could lose them all. I'm comfortable in my own skin telling you that 1 out of 3, if you trade this E-mini, the ES or the NASDAQ or the Dow, there's a few of them, I'm very comfortable to tell you that 1 out of 3 are going to pass the evaluation, okay? So if the prop firm is running, and I'm going to answer your question right now, Nina. Nina asked a question specifically regarding prop firms. She said, how do you use this as prop firms do not allow bots? Nina, Apex does allow bots. Some prop firms don't allow them, okay? It's important to know that most will, because this is actually considered a semi-automated strategy. What do I mean by that? The short answer is you, being the user, control all of the conditions that must be met in order for an entry to trigger. It's not a black box system. It's a self-directed strategy. Now, our team of professionals does give you all the answers to put in the blanks of the strategy parameters. But because they're all adjustable, and for each one of our triggers, we can respect pivots and market structure and trade when the 50 is above and below, and pivots and volume and the VWAP. We have a million different conditions. We can make it as conservative or aggressive as we want. But the bottom line is we control the parameters for the entries. Once the trade is executed, your stop and your profit target is projected on your chart. That provides you with the ability to manage your trade. That's what's in the fine print. You must be able to manage your trade. You must be in front of your chart. You must be able to control the conditions in order for the trade to be executed. And once the trade is executed, you can move your stop and your profit target as you see fit. So it does meet the requirements of a semi-automated system, and that's how we are able to get payouts, and we all have gotten payouts on our team. David asked a question regarding commissions. I'm not 100% sure. On my Ninja Trader, I do have commissions automatically deducted because I have a lifetime license with Ninja. However, some of the slides were made by Mark Miller, who's the owner of the company, and they may not have commissions deducted. Okay. So some do, and it looks like some don't, David. That's a good observation. All right, let's keep moving. So the PA, those were the one-day passes. My special offer is going to include the one-day passes, and it's going to include the custom templates for the PA accounts. Listen, it's really nice to pass that evaluation. It feels great, but now our job begins. We got to get a payout. That's our mandate as traders, is to make money, right? We got to sidestep losers, yes, but if we're not getting payouts, if we're not making money, we're wasting our time. So we're going to pivot to one of our PA account templates that has really a significantly less amount of risk on the entries. I try to make $250 to $500 a day, and I'm inviting each and every one of you to come join me tomorrow. These are some of the payouts that we've gotten from Apex. Members of our community, it's not just me making money and doing well. We have several members, and you'll see tomorrow in YouTube, that are making money with this. This is Simon from overseas, from the UK. Across his Apex accounts in one day, profited $16,000, and it's not unusual. Limit Up, another member of ours. Steve Cherry. Ron Nettles, a Vietnam vet. Great guy, my God. I know Ron for a dozen years now. He's a Vietnam vet, made 10 grand trading gold. We've got a really exciting gold strategy. And when there's political unrest, man, that gold is very volatile. There were some weeks, this year that you couldn't find a losing trade on that gold bot. Suzanne is a leader in our community. She's going to be, quitting her full-time job to become a full-time trader because of the success that she's been having with her trading career. So let's get to the special offer. The AI Auto Trader, we're going to include the full Monty, the full portfolio of strategies, the prop trading templates, the one-day pass templates, the PA account templates. If we got a template for the AI system, you got it. Everything's included, no questions asked. It also comes with a discretionary component. We have the most beautiful chart templates that provide you with these beautiful signals for entries. These were some of the live trades taken on this particular bot. And you could see these beautiful signals. If you get some of these signals and you want to execute the trades yourself, that's always an option that's available to you. So the monthly membership is normally $11.98. We're going to do a 50% off across the board. For the 50% discount on the monthly, it's going to drop it down to $5.99, $5.99 a month. The annual membership, which is a great value, for $14.99. Listen, normally it's $29.98. If we knock off 50% for $14.99, If you divide that by 12, it comes out to about $120 a month. For $120 a month, you're going to have one of the most powerful automated systems out there. You're going to be able to trade it live with us every day on YouTube, and you're going to be a member of our community of traders that's going to help you along in this journey. It's really a great value. The lifetime membership, if you're somebody that just doesn't like recurring subscriptions or payments, and if you have the means, obviously that's going to be the best value. Instead of $49.99, take advantage of it before Sunday, and it's going to be $24.99. It's a one-time payment, and you'll own it forever. There's no ongoing maintenance fees or additional charges whatsoever. That's not, you'll be grandfathered into that. That's not sustainable as a company. Sooner or later, we're going to need more help and hire more staff, and there'll be a maintenance fee. But for now, we're good, and you'll be grandfathered in to a one-time payment with no ongoing maintenance fees whatsoever. Listen, we've got a great option at checkout. It's called PayPal Later. Pay later, isn't that nice? Pay later. Why pay now if you could pay later? The best part about it, there's no interest. You could break it up into 4 or 6 payments interest-free. And it's called Pay Later. It's available at checkout. Thank you, Antonio. Tony says you guys got the dream team. Thank you. He's been a member with us for quite a few years as well. Listen, if you go on Trustpilot, don't take my word for it. If you go to Trustpilot, and we're very proud of this, with exception to Dean Hanley's review. Dean Hanley, you got to know the guy to love him. But we've had 123 reviews. We have a 4.6%, a 4.6 rating. Our members, if you read them, are most of them, 95% of them are very happy with Right Line Trading. So we do provide ongoing customer support. And I don't really want to take much more of your time, but I'm going to end with this. The last testimonial, a member of ours was asked in YouTube about his experience with Right Line Trading and in regards to some of our competitors. And Gary had purchased bots from several of our competitors and found that the Right Line Trading system kills it. He found that our bots are far superior to those other vendors. So I just want to end by saying this. Listen, I'm somebody that has blown out more accounts, than I can count, than I can remember. I wish I had back the money that I've lost. The AI Auto Trader has been a game changer in my trading career. Why? Because it's eliminated those human emotions that have been sabotaging my trading for decades. They've destroyed my trading. And for me to continue in the same trajectory and doing the same thing is the very definition of insanity. By making this change and going with the automated bots, it has been a game changer, and I'm very confident that it can be a game changer in your trading career as well. So I highly, highly recommend joining me tomorrow and at least giving it a look. I want to thank you for your time. And Anthony, listen, I'm so grateful for Traders Corner and for giving us a venue and an opportunity to show our products and services. Thanks again, Anthony, for having me. Again, last thing, put your name and number in. I'm out of time, and I'm going to give you a call if you have a question. Thank you so much for your time. Thanks, Anthony.
Hey, thanks, Rory. Incredible presentation. The performance speaks for itself. Thank you for your transparency, generosity, and for helping our audience level up. And that brings us to the end of today's Traders Corner May Investors Summit. Thank you to all of our incredible speakers for sharing not just strategies, but real wisdom and real tools that can make a real difference. And a big thank you to our audience for being part of this event. The full replay will be posted to the Traders Corner YouTube channel. So if you missed any session or want to watch again, we'll email you the link. Until next time, trade smart and stay disciplined. And thank you for being a part of the Traders Corner community. We appreciate it.